Good morning, good afternoon, or good evening, and welcome back to TopstepTV. Hopefully you have everything prepared. Hopefully you got your outfits ready. You know what drink you have ready, because we got a watch party today for the Fed meeting. Fed meeting 1 p.m. Central Time. We are going to get a rate decision, and we will have wall-to-wall coverage of it. Welcome to TopstepTV. This is the opening call. I am Coach Jay. We got John the Goat Hoagland there in the middle, and JD, our stats guy, gold trader, CL trader. Weekly kickoff, email. He does it all. How you guys doing this morning?
Good, man. It's good to be back with everybody. Jay, JD, and of course, all of you. Happy Fed Day. And did somebody say party? I thought I heard somebody say there's a party.
I think there's a party, Hoag. JD, how you feeling?
There is a party. I'm feeling great. It's Fed Day. I love a good Fed Day, right? Yeah, make sure you got plenty of popcorn to last throughout the day. We're going to have headlines flying. There's a lot happening today. I'm looking forward to it. Good morning, Jay. Good morning, Hoag. Good morning to all my friends and traders in the chat. Let's get to it. What's this poll saying early on? How are we looking for the opening range
right now?
Trade?
It is looking like the 5 minute, 41% for the 5 minute. If you're asking what we're voting on, we are Voting on the opening range trade in gold. Gold opens up at 7:20 a.m. Central Time. We take this trade every morning, but we poll the chat for some crowd participation and wake you up pretty early. Are we taking a 1 minute, 3 minute, 5 minute opening range trade, or is it going to be a no trade? Last couple, we have taken a few 1 minute trades, a couple 5 minutes. It's been a tough trade, but I think we go into it understanding that is a low probability, high risk to reward trade when it does play out. But the key is letting the trade play out when it does work. So get your votes in there right now. 41% for the 5 minute. We got 121 votes, 419 people watching right now. So as you file in, make sure you place a vote before you take your seats. JD, for this voting, sometimes we do have some 7:30 economic numbers that could influence the vote. Let's take a look at that economic calendar. Anything we have to be aware of before this Fed meeting?
Yes, we do have a couple of numbers coming out at the bottom of the hour. Nothing earth-shaking, but building permits, housing starts, otherwise known as housing starts and permits. Coming out at the bottom of the hour, it's going to give us a minor gauge on the housing market. Could move the markets a little bit, but I'm not afraid putting this trade on going into these numbers at 7:30. 9:30, it's Wednesday. We'll have crude inventories out, the EIA, crude numbers. 1 o'clock, it's Fed Day. Fed decision on rates will be announced at 1 o'clock p.m. Central Time. We've got a watch party ready for you. And that Fed Chairman press conference at 1:30 p.m. Central Time. We'll be piping in that live news feed. We'll be streaming Powell Q&A live right here on Topstep TV. Don't miss it. And then to shake things up a little more, President Trump is scheduled to speak at 2 o'clock p.m. Central Time. I'm not sure if we're going to have the feed for that, but we're going to fight our hearts out to stream that live for you guys. He's speaking on Fox right after the Fed Chairman press conference. I'm sure he's going to have something to say. I'm sure he's going to have something to say before the Fed announcement. So we'll keep one eye in the ditch for you and announce any more news coming out as it comes out. But today is going to be a juicy one. Let's get to it.
Yes, it is. Looks like we're taking that 5 minute trade today. 5 minute has
full
40.
Transparency.
Go ahead, JD.
It's been a pretty rough month for these opening range breakout trades so far. Full transparency, we're down about $1,400 on the month for these opening range breakouts, which isn't horrible. I mean, that's only one trade away from getting it all back, honestly.
Absolutely.
Right.
Absolutely. And that day is today.
That day is today.
Let's do it. Let's hope it, well, I'm not going to say that. I'm not going to give my opinions on the trade because my opinion doesn't matter. The market is going to break in what direction it wants to, and we will take the trade in that direction. But let's hope it's a long. We do have gold open now. Again, gold opens at 7:20 a.m. Central Time. We will be looking at that 5 minute trade. And very simple execution of this trade. If we break above the high of the range, we'll be long. If we break below the low of the range, we will be short. Gold right now trading 37.06. Hoag, we were talking in the green room. You mentioned gold took a little bit of a hit. How are you seeing this market right now? I know we're going to get into the charts, but it took a little bit of a hit. Is that what we're welcoming before the next potential leg up in gold, or is this a change of structure here?
Well, not a change in structure just yet, but a little hint of some long liquidation yesterday, losing 3,000 in open interest. We have, let me get the right chart up here. So, looking at the range from yesterday, it's a small range, but most of the volume came into on the short side. So this tells me after all this open interest coming up for so long that people are starting to take some profits up here. And we see that in the overnight as well. So we got some overnight inventory to the short side. We're opening with a gap, which is one of the things that I like about taking an early trade, because sometimes you'll get that opening range, especially when the market's opening out of balance like today. So we are certainly going to be finding out here very shortly.
Yes, we are.
Yesterday we were talking about the turnaround Tuesday anomaly. If there's going to be a counter trend move, it's typically likely to happen on a Tuesday. Of course, we don't have the data going back to this. It was an old adage that you would hear on the floor. Welcome to Turnaround Tuesday. Sort of a what do you call it?
It's like an unwritten rule.
An unwritten, I guess you could call it an unwritten rule. But we saw it yesterday across the board. We saw it in The equities, we saw it in gold, hitting all-time highs and then retreating just a little bit. That's your counter trend move for the week. Will it continue? Time will tell. But
ACH, baby.
ACH.
FOMC day. ACH.
We got a 1 minute trigger to short here. We are looking at that 5 minute. 1 minute we would be short right now. Got a low of this range so far, 37.0540 and a high of 37.0730. Got about 2.5 minutes before this 5 minute opening range closes, but 1 minute would be short.
I've got the micro contract up in gold.
Seeing a similar range, JD. We got a 74% long tilt as well. 37.07 average price there.
Ooh, how about that?
74%.
74% long in the tilt in gold.
That is pretty heavy. And it's growing, 75% now. Someone else just got in.
Everyone on a sim account, pile in.
Everyone pile in. That is not financial advice, but that is what's happening right now. 75%, 57% of that in the money right now. 3 minute just looks like it's about to trigger a short as well, maybe. 3 minute low and the 1 minute low is the same. It did extend on the upside, 37.0740 to the upside. And we got another minute and 15 seconds before this 5 minute range closes. There is a minor 730 number, which could get these markets moving. So just understand that if you are in a position and you see some volatility, could be because of the number, not expecting too much. Again, all eyes are on the Fed today. 94% probability right now on the Fed watch of a 25 basis point cut and a 6% probability of a 50 basis point cut. So we will see what the Fed does and what their language is going forward. We got some news on that Fed meeting. We'll get to that as soon as we take this gold trade. But all eyes on the Fed.
Jay, there's a little bit of information on this 30-minute chart. The overnight lows are right up against that 200 session moving average on that 30-minute chart. So we got a couple of bounces off of there. Overnight inventory short. Could be anybody's game here.
Yeah, Hoag, that's part of the reason why I was saying, let's take this long. That pullback to that 200 moving average looks like a nice spot to maybe limit risk. It may cost a decent amount, but we tested it. We couldn't break below it. VWAP, and we'll get into the charts, but I'd prefer to be long right now. But let's see what this gives us. 5 minute range just closed here.
I'm working some stops to enter the market. I'm working a stop to enter above at 37.07 half, 37.0750. Stop to enter below 37.0520. We did have a number out earlier this morning, the MBA mortgage applications. Huge number today. Big boost in mortgage applications, week over week, up almost 30%, 29.7% boost in mortgage applications week over week. Purchase index was up 2.9%, and the refinance index up 24.4%. Mortgage refinances up almost 25% week over week.
Wow. People are sniffing possible lower rates here in the future, but the FOMC, the Fed funds rate, may not affect mortgages all that much. That is a market like everything else, so that demand may support the rates a little bit. So, but it's good to see him hopeful.
Yeah, for sure. Again, we'll see some more housing data in just about 4 minutes. Housing starts and permits coming out in just a little bit.
Got a $2 range here in gold on this 5 minute. Still sitting in the middle of the range right now. Kyle in the chat says, "What is the trade with gold?" Sorry, just got here. Kyle, don't worry. You're only a little late. But the trade we are looking for in the opening range is we allow the market to establish the first 5 minute range, and we're looking to take the breakout. So if we break to the downside, we'd be short. If we break to the upside, we would be long. Again, anything we say here is for educational and entertainment purposes only, not a suggestion to take a trade. But we take these opening range trades in gold and crude oil every morning.
And Kyle, you're only tardy if you feel tardy.
You're not late. Party just started. We were
That's
waiting
right.
for you.
If you think you're doing something wrong, you're probably doing something wrong. That's what they used to say, right?
Absolutely. While we wait to get triggered into this trade, JD, why don't we hit some news on this Fed meeting that we have? We'll come back to the charts.
Yes. What's anticipated for today? Let's talk about Fed rates roll. That beautiful Fed footage.
My expectation is they will vote for a cut.
Analysts expect Federal Reserve decision makers to reduce interest rates today for the first time since December. Most estimate at least a quarter-point drop. That would bring the target federal funds rate to between 4 and 4.25%. Such a cut usually makes it cheaper to borrow money.
They set the price and supply of money. That literally affects how much we pay for our mortgage, our credit card, our auto loan, and it affects really the entire base of business.
The Fed vote comes as FICO reports the biggest credit score drop since the Great Recession. For some Americans, that's pushing loan costs the other way.
The higher the score, the cheaper it is to borrow, and vice versa. Lower scores make it more expensive to borrow.
In addition to impacting debt, a Fed interest rate cut also can increase inflation. Many economists say tariffs are doing that already.
Things are going to cost more in the grocery store. Your BLT is going to be like bacon and lettuce because tomatoes are up.
Fed decision makers also affect the yield on savings accounts and CDs, and they can influence retirement funds in the stock market.
They will indicate what we call a loosening bias or an easing bias, but they won't commit ahead of time to future cuts. And I think the markets may react a little negatively to that.
I'm Amy Kiley reporting.
I don't care what you say. Beg, borrow, or steal. I'm getting a slice of tomato on my BLT. No doubt about it.
Yeah, can't just do a BL. That doesn't work. Maybe bring your own tomatoes. BYOT. Bring your own tomatoes. I have a friend who's she just started a garden when she's just like, hey, I'm not even going to go to the grocery store anymore. I'm just going to grow everything here off her apartment balcony. Pretty good tomatoes. But if tomato prices are up, I guess I have to bring my own. Still no trade here in gold.
Nothing better than homegrown tomatoes.
We got this number in 2 seconds here. Let's see if this does it.
You can't buy homegrown tomatoes. They're the best.
No, you can't. Yeah, they're so good, Hoag.
Mm-hmm.
All right, the minis just triggered a short. I don't know if the micros did.
In the micro.
All right.
No trigger in the micro yet. Misses by a tick. A single tick. Oh, and we are in 37.05.10. House count short 5 micro gold.
We did get those housing numbers. Housing starts came in at 1.307 million. Forecast was 1.365 million. U.S. building permits came in at 1.312 million. Forecast was 1.37 million. Housing starts change month over month, negative 8.5%. Forecast was negative 4.4%. And U.S. building permits change month over month came in at negative 3.7% when the forecast was positive 0.6%.
Man, what a head fake on this 5-minute breakout. Triggered a short and immediately popped, almost like they were fishing for stops there.
They found some.
They sure did. We've got our CYA up at 37.0830. We'll take a $160 paper cut on this trade if it goes against us. Right back in the middle of the opening range right now, though.
We are under VWAP. I had an overnight VWAP at 37.1080. Hoag, on this trade, would you start thinking position management if we get down towards these 3700s near that 200 moving average on the 30? Guess we can get into the charts. Yeah, let's take a look at these charts. Actually, JD, before we do that, we got some news on gold prices. But where do we think this gold trade is going? Let's get to that news.
We sure do. We already mentioned it, but yes, gold prices did retreat from record highs yesterday. Spot gold prices hit a record of $3702.95, $3,702.95 an ounce yesterday before easing back to about $3,666. Gold futures slipping a little bit this morning. Also, we had a stronger dollar and investor profit taking pressuring prices yesterday. Markets now are awaiting that Fed expected 25-point basis cut. I am expecting President Trump to kick down the door to the office door to the meeting and demand a 50 basis point cut. But that's just my personal opinion. Don't quote me on that. I doubt it's going to happen. It would be hilarious if it did, though. So Deutsche Bank raised its 2026 gold price forecast to $4,000 an ounce, citing supportive currency and rate conditions. In India, scrap supply remains limited as holders anticipate further gains, adding to market tightness despite the recent rally. All of that information coming directly from Reuters this morning. A little bit of a pullback in gold. What are you guys seeing in the charts, though? I think we're toast on this trade, by the way.
Yeah, maybe the short time frame overnight inventory might get us on this one. Where is the CYA on this?
3708.30. 3708.30.
All right. So yeah, let's dive into the charts here, and yeah, we're seeing a little bit of a warning sign for the longs in gold here on the longer time frame and the daily time frame. This is the daily chart, folks. We have the upside auction remains intact, but it certainly seems to be slowing. We have an area of balance, another area of balance. We broke out of that area of balance, and yesterday we saw something we haven't seen in a while. We saw a decrease in open interest, indicating that a lot of these longs probably liquidated some of those longs. Now, this isn't tragic. It's nothing huge, but it can be kind of the first shot across the bow for this upside auction. And I think we could certainly use a relatively decent pullback or more time in consolidation to even out the inventory in multiple time frames. You know, we are very short time frame traders here. We're day traders. We're not really affecting a price in the long term, but the longer term speculators and longer term players in these markets, a lot of the banks and other institutions, they're the ones that have been pushing this market higher considerably since actually the beginning of the year. We're taking a little bit of a break here that we were all looking at, and we broke out nicely. We've been bringing in open interest nicely. Yesterday was a little bit of, again, a shot across the bow. We lost approximately 3,000 in open interest, and that is the preliminary number. That may change a little bit. Jay, what do you think about what we're seeing in this daily chart as far as how is the auction doing? We know the market is trying to continue to rally. It's trying to continue to one time frame higher, but how good of a job is it doing, Jay?
I think it's doing a decent job, Hoag. On the daily, we are maybe getting a little extended, right? I'm looking at a 20 moving average down at 35.81, and we haven't tested that since we broke out, mid-August, towards the end of August. So I wouldn't be surprised at a revisit of that 20 moving average, and then with some of the decrease in open interest, maybe taking some profits before this Fed meeting. It makes sense. So structure hasn't broken to the upside. But definitely slowed down. Last week we were pretty much in balance. That September 9th daily candle that made the prior all-time high. We spent a lot of time in there, and we're trading back into it now. 37.16 in that zone was that high. So we'll see. I think we talked about this potentially being another accumulation zone for longer time frame market participants, but we need to see them continue to come in and push it higher. It's holding for now. This Fed meeting is going to give us what the real market sentiment is, right? Are buyers continuing to buy this? I'm looking at 36.89 on the downside, maybe, and then we'll see another level when we get to the 30-minute chart. But it's still in an uptrend, Hoag. It's still in an uptrend.
It certainly is. A cut in rates should cheapen money a little bit. Maybe that's what we're waiting for a continuation move to the upside. But yes, let's take a look at the 30-minute chart. All right, so we're kind of gone yesterday, but a very small range, really using last week's high as a support level by the end of the day. Now we had a pretty decent trend day. I believe this was Monday, so a decent trend day continuation. A lot of good volume on that up, and I think we had some overnights. We had some open interest increasing. Yesterday, not so much. So what happened yesterday, and why are we kind of looking at this as maybe a little bit of a issue for continuation to the upside? So the market opened, with a gap. First thing it did was close the gap and tried to continue to push higher. But this excess on this 30-minute bar here, it's also on the profiles, indicates, buyers just wouldn't pay it anymore up here. That attracted sellers, and we have three nice solid red bars, and those are the strongest volume from the session yesterday. So when we were unable to continue to push higher after testing the session gap close from Monday to Tuesday, that's when I think we saw some longer time frame traders say, you know what, FOMC Wednesday, it's FOMC, thinking yesterday, they're thinking it's FOMC tomorrow. Why don't we take a little bit of profit off? And I don't think that they took much profit off at all. If anything, this is probably shorter time frame speculators that are longer time frame than just day traders said, you know what, we're going to take some money off and we will see what happens on FOMC days. So that loss in open interest, while it isn't big, just indicated some speculators probably taking some profits. Is this a game changer? Is it a market state changer? Heck no, man. There's a long way to go before we're going to start thinking this rally is really over. But the overnight inventory was really kind of, here we go. We're a little bit short here, and that's not looking too good for our current position. Overnight inventory being short indicates that we had some weaker hands, short sellers down here, and if they're not getting paid right away, typically they're going to push price back towards the previous day's range when we do open with a gap, if there's no new information, and encouraging more selling coming in. And as we were talking about when we were looking at this chart, looking at the opening range trade, that 200 session moving average was very supportive last night, and that was a very important level for our overnight shorts, and we are driving right now away from it. So it doesn't surprise me. Might be looking for opportunities to look for shorts, and those levels would be yesterday's session low, basically 37.1520, which is the last week's high. Then we start to get into that. Then I could see us kind of pushing higher, maybe back through value from yesterday. Looking at it, it looks almost like the initial balance low and the initial balance high are the extremes of value from yesterday. So any acceptance above 37.22 approximately sees this market kind of coming back up to 37, 33, 34 area, possibly. We haven't closed the gap yet. We can't close that gap relatively early. Gap rules will apply, and we'll start looking for opportunities for shorts in that regard. Jay, man, what do you think?
Real quick, I think JD, we get stopped out there?
Yes, we sure did. 37.0830. No slippage on that exit. It was good stop placement. If we had taken the full $250 worth of risk on that trade, it still would have came and gotten us out. So minus 175 in that first gold opening range trade. Little paper cut. We'll work on getting that back. And the crude oil at the top of the hour.
Little paper cut. Thanks, JD. So Hoag, on this 30-minute chart here, that 200 moving average, 36.97 is that price right now. One of the things Coach Paul and I started doing is attaching a VWAP to the candle that tested that 200 moving average. So that would be the 5:30 Central Time candle on the 30-minute. The range of that candle, 37.03 at the high and 36.95 at the low. That seeing that VWAP starting to leave the range, that may be where I'm looking for opportunities to buy, right? That VWAP right now is at 37.02. If we get any pullbacks into it, because what that's showing us is we came down to a level of demand. We found buyers down there, and we got no follow through, right? So, looking at that as a satisfied pullback in the market, looking for opportunities to buy where maybe you don't want to buy the high of this move for the regular trading hours that we're in. But if we get a pullback to that VWAP and it holds, then that may be a decent spot to assume some risk. Ideally with a stop below that 200 moving average. Now, that could get pretty expensive, but that's why we have the ability to trade micros as well, where it may not cost you a whole lot position-wise, right? If I'm taking that trade with minis, it costs a whole lot more because right now I'm talking about at least a $10 stop in gold, which could get pretty expensive. But looking for a move to the upside, I don't know how much we see before FOMC, but kind of leaning to the long side right now.
Okay, what do you think of the overnight VWAP? We're kind of approaching it right now. 37.1080 is where I'm seeing that on this chart, and so far overnight the sellers have been in control, but again, we're kind of speculating that those sellers are weaker hands and they are bailing out of those positions right now. So this might be an interesting spot. At the very least, this overnight VWAP 37.1080, excuse me, gives the opportunity to limit risk. Again, this is not financial advice, not suggesting taking a trade, just focusing on context. All right, so I think we've got some opportunities possibly early in gold today because again, we've opened with a gap from the previous session. Market is a little bit out of balance. Don't forget it's FOMC day. There's nothing wrong with staying peaked and looking for opportunities. And there's also nothing wrong with being in a kind of a hurry up and wait type of situation. We know we've got some important information. This is going to be a big FOMC meeting. I'm really looking forward to the Fed chair's press conference. That's going to be a fun one, I think, and we are going to be here with you the whole time. So that's what we've got for our gold. One loss on the house and
2% long tilt right now. That tilt went from 74% up to 80% long. Average price 37.08. So Topstep traders are looking for longs here. That is pretty heavy though. Pretty heavy on one side.
Yes, it is.
JD, before we get into the S&P chart, I know we have some news on the index futures overnight.
Yes, index futures, little changed overnight. A lot of people are just sitting on their hands waiting for this Fed announcement. One of the movers overnight, NVIDIA, down as much as close to 2%. Last check was down about 1.3% pre-market. Financial Times reported China has banned tech companies in the country from buying NVIDIA's chips. So it's putting a little damper on NVIDIA stock, or putting a little pressure on NVIDIA stock this morning. Also, again, it's Fed day. Universally, traders are just sitting back waiting for this Fed announcement. So not a whole lot of movement in equities overnight. This data I'm getting came direct from CNBC, by the way. Overnight, markets in Asia closed a little bit mixed. The Shanghai Composite closed up 0.37%. The Nikkei closed down 0.25%. And the Hang Seng Index closed up 1.78%. Stocks in Europe trading a little bit higher this morning. We've got the FTSE up 0.28%, the DAX up 0.17%, and the CAC just about even, down about 0.02%. The US dollar index up marginally, 96.799. The VIX up about 0.25%, 1642 last print in the VIX, and the yield on the US Treasury note, 10-year U.S. Treasury note, 4.022%. Pretty much unchanged. Not much movement in bonds and notes this morning. Again, that announcement imminent, 1 o'clock p.m. Central Time. We're getting at least a 25 basis point rate cut. Maybe a 50. We'll see. See if they throw a curveball at us. But like Hoag was saying, we're going to have wall-to-wall coverage here. We've got a Fed watch party. We're going to be talking about it all day. Make sure you stick around today. Party! Fed watch at Topstep. All right, back to you guys. What's happening in the S&P?
All right, so we've got the daily up here. The auction it still remains healthy in the longer time frames. Of course, we know this. We're seeing higher highs, we're seeing higher lows. Had a nice push yesterday, up to the weekly kickoff high 6,700. Everybody thinks I'm crazy when I put those up there, and there it is. What was the high? 96.75. So 13 ticks away from it, unable to get to it. Did see some selling come in after that. And on the daily chart, we do have a little bit of a reversal pattern here. We've got an excess high. We've got a shooting star pattern. It is a reversal pattern. Doesn't surprise me. A lot of folks are probably saying, you know what? I'm not going to have a lot of risk on when the FOMC announcement comes out, and certainly during the press conference. So it makes a little bit of sense. We're still in rollover. Rollover is about 60% done. They have to be done with rollover, or they're going to settle in cash on Friday when expiration comes in. So about 60% of the contracts remain. Well, about 40% probably remain in the December contract, and they are continuing to work on that. We had a huge increase in open interest, which don't put too much into that. If you're looking at open interest, because it's rollover, open interest becomes very, very difficult to read and tricky because they're legging in and out of these spreads. Don't think we added 98,000 contracts to the short side yesterday. Although, I mean, it is a turnaround Tuesday type of reversal pattern that we had yesterday. Open interest is a complete blur right now. Just don't even think about it until after expiration during this period of rollover. Jay, how you feeling about this turnaround Tuesday we saw in the S&Ps?
Yeah, we couldn't trade through that major level, 6,700 up there, Hoag. And then if we're looking at today's price action, today's the first day in about 2 weeks that we've taken out a prior day's low. It makes sense that it's happening on Fed Day, right, where we see some profit taking after this move. We had, about a 4% move on this most recent run, 3% move to the upside, seeing some profit taking. That's to be expected, right? Does that sustain, right? Do sellers gain any traction, or is that just, hey, I don't want to hold a position into the Fed before that number comes out? And I think we find that out after 1 p.m., maybe even 2 p.m. after Powell's done talking today. But still bullish, Hoag. The S&P over the past couple of days maybe has looked a little bit weaker than the Nasdaq, right? It kind of passed the baton to the Nasdaq, let it make all-time highs, but it's still strong, right? It would take a lot to turn this market around, I think. We are extended from that 20 moving average on the daily. 65.71 is that price. It's way down there. It would take a lot for us to get down there. There's a potential catalyst depending on how the market wants to respond to it today, but we will see. For right now, this is still a market that is in an uptrend, and we'll see what the market says after 1 p.m. today.
Yeah, I mean, no major market state changes. I think we've got a long way to go before we're going to see that. Just a little bit of a pullback. Take a look at the 30. And here we go. So another new all-time high in the extended trading hours yesterday. This was a double top. These are two 30-minute bars that are exact at the highs. And as we do mention quite often, exactness is a weakness. I'm not looking for these all-time highs to be lasting because, number one, they were in the extended trading hour session, and there's no excess up there on the 30-minute chart. Now, it looks like excess on the daily chart, of course, but the fact that we left the all-time high in the extended trading hour session also says to me, we're not done up there. There's 6,700, the weekly kickoff high. We opened and left the opening range at the dead-ass high yesterday. We had a long liquidation, basically a long liquidation profile, a B-shaped profile. Let me kind of make this a little clear. So we got the one big move down, and then we basically ranged the rest of the day and spent time and accumulated volume in this area. So that B-shaped profile is going to be indicative and a probable long liquidation event. So it's not like we saw new selling coming in. This is old business evening up possibly for the FOMC announcement today. What is the deal? What is the deal with 3 o'clock, 3:30 in the morning in the equities? We're seeing all these big spikes at 3 o'clock, 3:30 in the equities. What's that all about? But overnight inventory, we're maybe a little bit short, but we're still inside the range, right at the low of value from yesterday. Excess low down to this 200 session moving average, which, has been used as support forever. It's a very important simple moving average. Everybody looks at it. And that was that spike at the 3 o'clock, 3:30, and found buyers. We're back in range, back in value. Maybe again a little bit short as far as overnight inventory is concerned. But try and stay patient, especially if we open back inside value, which is basically 66.66. Man, I hate that number. And 66.74. Not a huge area of value. So you got to decide, is the juice worth the squeeze? There will be opportunities a go later on. Try and stay patient. Last thing you want to do is get all biffed up and not be able to participate if you want to, as these things are likely to get a little bit more volatile. Jay, what are your thoughts?
My thoughts are I should change my alarm and trade at 4 a.m. Eastern because something continues to happen at that time. And, we've seen it. It's been a little bit of a pattern over the past couple weeks or so, but right down to that 200 moving average, Hoag, on the 30-minute. That price was 66.55 when we tagged it. Right now sitting at 66.57. So I'm approaching this day the same way, right? Identifying the range of that 30-minute candle that tagged the 200 moving average, 68 at the highs and the low of the day at the low so far. Attaching a VWAP there. If we look at VWAP, it's still in that range. So since we've hit that level of demand, no real direction in the market. We can see it in the price as well. But I'm going to frame my day around that if I'm going to take any trades early on. But of course, not expecting a whole lot of price action before the Fed. So this may give us a range to trade as well. If you're a range trader, you want to take a couple scalps in the morning before the Fed comes out and maybe lock it up for the day. This area we're in, 66.70s at the highs down to, we'll call it 58 at the lows, may provide a decent range to trade today. We'll see what happens when that volume comes in for New York.
Right. So yeah, I'm just going to make this really big so volume profile traders can really see the B shape of the profile. B-shaped profiles typically are going to be long liquidation. Why? Long liquidators are trying to liquidate positions without pushing price. They pushed price initially, but when you got to an area where there was a little bit of liquidity, they don't want to push price. They're just trying to, quietly liquidate some of those longs, and it kind of keeps that B shape. And you can kind of confirm that by looking at open interest. Unfortunately, we don't have the benefit of open interest because of rollover, that nasty, nasty rollover. But we just use what we see, trade what we see. There's going to be good opportunities today, folks. Stay locked in.
Stay locked in. Stay locked in for sure. We have a poll up in the chat. Sorry, Hoag. Anything else you got on the S&P before we go over to crude oil?
No, if you're done, I'm good, man.
Let's do it. Poll up in the chat,
Right.
240 votes right now. Are we taking the opening range trade in crude oil? Is it going to be a 1 minute, 3 minute, 5 minute, or no trade? 36% of the vote going to the 5 minute right now. Crude oil does open up in about 4 minutes. 8 a.m. Central Time crude oil opens. We will be taking that opening range trade as well. JD, before we get into the crude charts, any news that we have in crude?
Yeah, let's talk inventories for a minute. Check out this headline. Crude and gasoline draws undercut glut fears. This comes from oilprice.com. According to the API, that's the American Petroleum Institute, crude inventories fell by about 3.42 million barrels yesterday, far exceeding the expectations of a much smaller draw. Gasoline stockpiles also dipped by 691,000 barrels, bringing those levels closer to a 5-year average. Distillate stocks rose by 1.9 million barrels. Those remain about 9% below historical norms, which also underscored continued weakness in that segment. Oil prices climbed about $1 per barrel, both in Brent crude and West Texas Intermediate. WTI crude is what we trade here at Topstep, up about $1 over the week. Supporting crude oil prices right now, we've got tighter inventories, heightened concerns over Russian supply risks, which is adding a global sort of geopolitical layer to the bullish sentiment in energy markets. We're going to have the EIA petroleum status report out at 9:30 a.m. Central Time, just like every Wednesday, 9:30. We'll get some crude inventories from the EIA. That's the Energy Information Administration. So keep an eye on that. We'll have those numbers for you in about an hour and a half. We got 2.5 minutes until the official crude oil regular trading hours open. I've got micro crude up and loaded for a 5 lot. So let's get into it. What are you guys seeing in the charts?
All right. In the longest of time frames, yes, it's still in balance. We broke out, however, yesterday above that $64 weekly kickoff high. It's been there for a couple of weeks. We looked above it last week and rejected, and that's when we put in the weekly low after that happened. Well, yesterday we broke out above it. If we weren't in rollover in crude oil, which we are, today will be the last day. We are going to be trading the October contract on Topstep X. You will be looking at the November contract tomorrow. You're fine to trade either. If you have that ability, if you've already started trading the October, that's fine. There's still about even liquidity right now between the two contracts. But again, Topstep X will be switching to the November contract tomorrow. If it wasn't rollover, I would say that this was a relatively decent short time frame breakout because we added 13,000 contracts. That is the estimate, of course, and it will change. But because of rollover, I can't really put too much stake in that information. When we look at this on the daily chart, and we've been talking about this, Jay, we've got all the moving averages, the 50, the 200, the 100, the 20, all within striking distance of price today. It is rollover. The hope of the longer time frame traders is going to be that we're going to be remaining a little bit range bound. If we do set up a range today, that's going to be fine for them. What we're looking for is a breakout, balance to breakout rules, right? So we had some okay volume. Again, volume is going to be difficult to read because of rollover. We did close above that weekly kickoff high. We've taken another look back down to it. This is, again, the daily chart. So this might be a little bit supportive. We've got some confluence there. We've got the weekly kickoff high. We've got last week's high. And we've got the 50 session moving average all within 20 ticks of each other. That tells me that there's probably a lot of eyeballs on this, and it also helps me limit risk. Jay, what are your thoughts in crude oil for this daily chart right now?
So looking at the daily, Hoag, there was a candle when we did the opening call yesterday that we kind of marked out. It is the September 3rd daily candle. And if you frame that out, 50% of it is the high is yesterday's high, right around 64.73. And we talked about, if we start to see acceptance inside of that daily candle, where's the first target? 50%. If we see price acceptance above it, 64.73, then looking for a rotation to the other side of it. It rejected so far, and it's near the high of the day today. And when we go down to a 30-minute chart, we'll see it. But, there's a 30-minute candle that created that range, and volume is starting to drop out of that range. So, I see crude oil as a range-bound market. Do we get a further extension? That 64 level was one we were testing for a little while. But yeah, if we can't continue to find buyers up here, I would not be surprised to just fall right back into this range. That 200 moving average on the daily down at 63.49. I know crude oil is open right now. We are looking at a 5-minute range. But let's take a look at the 30. We got a little bit of time before this 5-minute range closes. Also, today's inventory day, so I'm keeping that in mind, trading crude.
Yeah. The EIA is expecting a 675,000 barrel boost from what I can see. All right, so, a decent breakout, right? The market opened, above weekly kickoff high, looked below, had a nice failed downside auction yesterday. Man, do I wish I was here trading yesterday because this was absolutely beautiful. failed downside auction. And then the market trended the rest of the day higher. Again, I would love to be able to see whether there was an increase in open interest in longer time frames and in new longs here. But again, because of rollover, we can't. So trend day to the upside. We closed above weekly kickoff high. We've taken a look back to it. We've got the IB low from yesterday kind of giving a degree of support down at 63.90. And we're basically, in the middle of the range from yesterday, inside range, inside value, no runs, no hits, no errors, nobody left, overnight inventory, maybe a little bit to the short side, but a lot of that has already been reconciled. Sitting here in the middle of the range from yesterday, I'm going to try and stay patient. And if we don't see buying coming in against Jay's level up here and on that bar from the 3rd of September,
September 3rd.
64.72, 64.73, bam, right to it, Jay. It's amazing when you do that. What do you think of the 30-minute?
Right now, if I had to just trade and trade what the market is showing me, it's signaling a short, right? It's signaling a short with risk above that high, above that 64.72 level, right? So somewhere near 64.80s. We are, like you said, we did reconcile that overnight inventory, and I'm not sure that we get a trade in either direction before the inventory number comes out. But right now, it is signaling a short. We see volume leaving that range to the downside. VWAP at 64.23 right now. That's what I have here, Hoag. I see. So if we look at the 30-minute and you look at the first candle from last night, that range is 64.48 up to 64.60. I would love a short there, right? To be able to kind of get in, see a little bit of a pull up, reject off of that Globex open with volume still below it. That means, if there are still shorts in this VWAP, we're able to get a better price than them, because right now we're kind of sitting at VWAP. But if we pull up into 64.50s and reject, I would love a short there, just kind of limiting the risk, maybe making it a higher probability trade. But we'll see. I'd be patient with trading crude until inventories.
All right.
We're taking this open range trade.
I'm going to put that line on there, 64.50. J. Your name's on it. Oh, hey, wait a minute. Whoa. J. And I'm just going to put a couple of exclamation points on that.
There we go.
There's your level. All right, we got that. We will keep an eye on that, Jay. Thank you very much. And again, the profile yesterday, which started relatively range bound, did turn into a trend day to the upside. There's one single print, 64.36, 64.36, right there, one single print, right there. We're looking up against it right now. Might be an interesting area, but there's always interesting areas, always opportunities. All right, let's focus on this opening range trade.
There's always money in the banana stand, boys. All right, that 5-minute bar, that first 5-minute bar has closed. I'm working stops down or above and below the market. I've got a high of 64.30 and a low of 64.19. Are you guys seeing the same thing in the mini as the micro?
We get the low at 20 in the minis.
Okay, that's fine. I've got a stop down or 64.18 below. So that'll be
perfect.
Just double confirmation, an extra tick of confirmation. Stop
Nothing
down or
is
above
precise.
64.31. Yep.
Nothing is precise in futures trading. As long as you get filled close.
Yeah.
Minis triggered a short there.
Yeah, they did.
But,
Did they?
Got that extra tick. Yeah. I think that's okay, though.
They'll come first then. It's very, very rare that the minis will trigger a trade and the micros don't. But it happens pretty often now that the micros will trigger a trade and the minis don't. That make sense to you guys?
Yeah, we've seen that a couple times in gold recently.
It's a liquidity thing.
Yeah.
And they are separate markets. They don't have to be exact at the same time all the time. There's little differences in the liquidity in the regard for today. I would say that liquidity is what kind of extended the micros a tick lower than the minis.
We saw a pretty heavy tilt in gold. It was 80% long at one point. It did pull back 66% now. I think they'd still be in the money from where their average was, but maybe just taking some profits here on a pretty nice trade. I think that average price was 37.07. Got up to 37.14s in gold. Seen it pull back just a little bit here, and that tilt pull off as well. Waiting for a trigger on this crude oil trade, but this is crude oil, especially on inventory day. It may take a little bit. So while we wait for this trade, JD, we got some news on jobs before we get into the NASDAQ charts. What do we got?
Yes, a little look at consumer spending. We had some numbers come out yesterday. This article coming from Yahoo Finance. U.S. retail sales climbed 0.6% in August. We saw that report come out yesterday, surpassing forecasts with gains in autos, apparel, and dining. Core sales, excluding volatile categories, rose 0.7%, signaling broad consumer resilience. Yet the labor market, jobs, showing strain with slower wage growth, fewer job gains, and rising unemployment risks. Inflation and tariffs are pushing prices higher, suggesting part of the spending increase reflects cost pressures rather than stronger demand. So, consumers out there still spending money despite some poor economic outlook news. How about that? We've got a story to back this one up in just a few minutes.
Still trying to wrap my head around the there's always money in the banana stand. Are you like coining cliches now? I've never heard that.
It's from a show called Arrested Development. You should look it up, Hoag. You'll love it.
Okay.
The family actually owns a banana stand, and they stuff money in the walls of it. There's always money in the banana stand. It's a great show. I recommend checking it out, Hoag. You'll get a kick out of it.
We've been binging Animal Kingdom. You guys ever seen that?
No.
The super old Animal Kingdom show?
No,
like the 60s,
it's
70s?
No, this is about a family deeply involved in crime. It's pretty wild.
Oh, okay. I'll have to check that one. I'll make a note. Animal Kingdom.
No. Never seen it.
I thought you meant the nature show from way back in the day.
Like Mutual of Omaha's Wild Kingdom. I loved watching that.
Right.
Still no trigger in this crude trade. We're right in the middle, right smack dab in the middle of the opening range. Smack dab is a precise term, by the way.
Just hanging out here. It could turn out to be an hour opening range in crude. See if we break the record. But while we're waiting here, I saw some comments in the chat, Hoag. There's like, when are these guys going to talk about the NASDAQ? What are you seeing in the NASDAQ chart?
Well, I think we make them wait. Just kidding.
Let's get those likes up and see what we're talking about in the NASDAQ.
There you go. So, yeah, similar situation. We did actually take out the weekly kickoff high, 24,545. We were unable to close above it. Is that a shot across the bow? Maybe. We added 10,000 in open interest again, but that, of course, is blurry because of rollover. We have a shooting star, a reversal pattern for turnaround Tuesday. We are now looking at weekly kickoff high as pretty much the overnight high from last night. Is this going to be a reversal? Again, Jay was pointing out in the S&Ps, this is the first time we've put in a lower low for quite some time. Another new all-time high yesterday in the extended trading hours. And again, I'm not looking for that to last. All-time highs and lows that occur in extended trading hours tend not to be lasting highs. So today's going to be all about FOMC and rollover. So CYA, man, cover your ass today. Jay, what do you think about this daily chart?
Hey guys,
seeing
sorry to break in here,
Yeah,
guys.
go-
We just got triggered into a long in crude oil. House count long, 5 micro crude, 64.32. I've got our CYA down at 64.08. Take $125 worth of risk on this trade. So we got the 1
cheap
minute
today.
triggering a short, 3 minute and 5 minute both triggering longs.
These have both been cheap today. The opening range trades have been very manageable.
Very cheap.
I mean,
Tight opening
spend
ranges,
more than
yeah.
that down at the corner bar in the slot machines, you know?
Everyone
All right,
needs
Jay,
a
what do you
hobby,
think
right?
of this daily?
On this daily Hoag, we made a new all-time high yesterday. We saw a little bit of a sell-off, maybe some balance here. Again, we took out prior day low from yesterday. Pretty tight range yesterday, 145 points, which is to be expected the day before a Fed meeting. So right now I'm looking at, if yesterday was Tuesday, I'm looking at Monday's range, 24,556 at the highs. 50% is somewhere around 24,440s. And just seeing how the market trades around this range, the upper extreme, the upper 50% of Monday's range may be the range until we get a decision from the Fed. So expecting balance for the first half of the day, expecting range-bound trading. We got Braden and Dakota coming up. We'll take a look at the schedule, but we'll see how they approach it. But right now, seeing balance in a market that is continuing to grind to the upside, making all-time highs. But today and yesterday is the exact price action I would expect so far.
30. Here we go. All right, all-time high. Extended trading hour session night before last. Market left the opening range at the dead-ass high and pushed lower. Back to close below that weekly kickoff high, 25. What is that? Where is that? 25,545. Really kind of showing a degree of rejection. Every time last night it looked above it, it rejected. We're kind of looking at a little bit of maybe short overnight inventory, but nothing I would base a trade off of. Basically trading right back at settlement. No gaps, no runs, no hits, no errors, nobody left, and we are coming into this second inning here. But do we wait? Do we keep our hands on our butts, looking for better trade locations as the day goes on? Because we are basically kind of inside value, kind of looking at value low on this platform, 24,518, 24,519. We're hanging around VWAP. I don't see a lot of reason to feel like I need to be involved in this market really early today. It's FOMC day. It may just range throughout the day. And, if you have that hypothesis of range throughout the day, you can use that. If we do start setting up a range and you fade the extremes of the range, you may get a couple of decent rotations inside of that range before the FOMC. There's always opportunities. So we're staying locked and loaded here. We are staying locked up. We are going to be looking for opportunities, but right on the open may not be the best opportunity. Jay, what do you think?
I agree with you, Hoag, range, and just trying to identify where that range might be. Looking at that 3:30 a.m. Central Time candle on the 30-minute, the high of the range, the high of that candle, 24,530s, the low 24,457, and 50% right around that 24,500. If you want to extend it a little bit, because this is the NASDAQ, we know the NASDAQ likes to extend ranges, 24,550s maybe. We'll see how the market responds in this area. Like, we're opening right in the middle of it. Not a big rush to kind of do anything. We saw the market kind of range around in this area yesterday as well. I would not be surprised to see that. Now, that does not mean that there's not opportunity to trade, right? We're talking about a potential 50 to 100 point range. We saw Dakota during fast markets yesterday take a bunch of longs at the lower extreme of this range and have a profitable day doing it. So identifying where those extremes are, being patient and letting the market get to the other side could be the trade while we wait for FOMC. Again, am I looking for any major breakout trades before that Fed rate decision? I can't be, because the market's probably not either. So, I could want a 200-point move in the NASDAQ, but I might be the only person in the world that wants that. So got to trade what the market is saying. And for right now, it is saying we stay in a range until that decision. So to the upside, I'm looking at 24,600s, where we had a pretty strong sell-off yesterday. Highest volume 30-minute candle of the day yesterday. That high was 24,600, and then we have the 200 moving average on the 30-minute down at 24,406. And those will probably be levels I'm looking at once we get that decision.
Right. Yeah, let's probably take a little volatility to get us down to that 200 session moving average.
Yep.
And that might be just what happens, Jay. Good call there. I mean, it's good hypothesis, of course. Looking at the profile yesterday again, opening range was the dead ass high, and we put up the B-shaped profile. You would say that would be long liquidation. We know we have the excess high on the daily chart. We have that shooting star on the daily chart. If it wasn't for FOMC today, I would, well, I'm not making predictions, but one of my hypotheses today would be see if this market can pull back a little bit lower. Again, that's a hypothesis. Every time I get the idea to say something like that, the market likes to make a liar out of me. These equities markets are extremely resilient. That's all I got to say about that.
Awesome stuff, Hoag. Let's see what the market presents to us today. JD, let's go through the schedule. Who do we have trading with us on Topstep TV today?
For sure. We got a big day ahead. Again, it's Fed Day. We got a Fed watch party. We're going to be here, bell to bell, wall to wall coverage. Coming up next in Fast Markets, we've got Coach Jay sticking around for a little while. Jack, Hoag, Braden, and Dakota will also be here, training it up for Fast Markets. 11 o'clock, Hoag's coming back for the morning recap. I'll be here with John London and Hoop for a trade with Topstep at about 11:15 Central Time. Group coaching today, Hoag and me. We're going to put a form up in the chat in just a little while. If you have any coaching questions for either Hoag or me, grab that form, fill it out, and we will get to it. Then the Fed Watch, the Fed Watch party starts at the end of group coaching. We're going to roll right from group coaching into the Fed Watch party, right around 1 o'clock. Andre, Hoag, and Jack. One more time, Hoag, for the people in the back. Fed Watch. Oh, he didn't do it. Fed Watch party. All right, Andre, Hoag, and Jack will be here for it. And then Power Hour. We're going to continue the Fed Watch party. President Trump's scheduled to speak about 2 o'clock Central Time. Should cause maybe some headaches, maybe some fireworks, maybe some joy. Depends on, I don't know where you're looking at. But Andre, Dakota. Thanks, Hoag. Andre, Dakota, and possibly Dolby hanging around till the end of the day. We got one more piece of news to go through also, if you're up for it.
Yeah, we do, JD. You were talking about joy, and we shared something about consumer spending. What's this last piece of news you got?
Yeah, consumer spending ticked up month over month, and retailers recognize it. They want your dollars early, because guess what's in the news today? That's right, folks. Let the countdown begin. We are 100 days away from Christmas. Retailers want your money. There are 100 days until Christmas, so there's time to get a head start on the holiday. Among those marking the 100-day mark, Walmart released its 2025 top toys list already. Can you believe it? The list of 50 of the hottest toys of the year aims to help parents get a head start on holiday shopping. Meanwhile, Macy's has unveiled its top 100 holiday gifts. It will also offer a new Santa National Tour experience. And it's a good time to start thinking about holiday flights. The New York Times points out flights are typically their cheapest around 6 to 12 weeks ahead of the travel date. According to travel site Hopper, prices for Christmas flights tend to hit their lowest point between mid-October and early November. So retailers, everybody's recognizing that people are spending money right now and they want your dollars before you start tightening your belts. So get out there and do your Christmas shopping now. Or don't. I guess it doesn't matter.
Get it done. 100 days to Christmas, which means it'll be here next week.
I am feeling the magic already.
Yeah, absolutely. 100 days, get your shopping done. I usually try to get it at least 30 days, get my stuff done. We started doing just a Secret Santa because my family's pretty big, and buying gifts for everyone just got crazy. So buy one gift for one person, and then all the kids get gifts. But got 100 days.
One thing I love about the
100 days.
holidays. Parties.
Hoag is in a party state of mind today. I love it.
Say party near Hoag unless you are ready to have a party. Hoag, before we party, I forgot we usually move this up now, the checklist, but before we party, we got to do our homework, Hoag. That daily checklist.
Gotta
Go through it real quick.
Gotta do the homework. You don't do the homework, you don't get the party. There you go. All right. Pre-market research. We just went through 4 markets. We're looking at context. Check. Morning checklist. Is your desk ready? Is your platform everything good? Check. Mindset check. Are you feeling good today? Did you get some good sleep? Did you have a party last night? What are you feeling like? Check your mindset. Check. Trade entry checklist. Get your piece of paper ready. Get your pencil ready. Mark down those trades so you can review them later. Check. And the post-market checklist. We're going to check this early, but at the end of the day, go through that post-market and go through those trades. Think about the emotions, and then you can put that check right on that checklist, and then get ready for tomorrow, because tomorrow is another trading day, and we're all grateful that we have these opportunities. Right.
Awesome stuff. Thank you for that, Hoag. We got a couple of minutes before fast markets here. A great show lined up for you. Again, I can see Dakota, Braden, Jack in the green room, ready to trade it up. Make sure you stick around. Going to be a great day at TopstepTV. Again, Fed Watch Party coming up. Hit that thumbs up button if you haven't done so already. Tell your friends to like and subscribe. And make sure they tune in for our watch party at 1 p.m. Central Time today. Hoag, send us into fast markets. Let's get this thing going.
Got it. Thank you, JD, and thank you, Coach Jay. Yeah, man, it's FOMC day. Everybody that I'm seeing in the background here looks absolutely excited and thrilled to be here for fast markets that's coming up here very soon. As always, I like to call out the bell-to-bellers that are first in the room. We got Tom, we got Cool Bash, we got Anastasios, we got Man Caves, we got Shubham, we got Dan Trader, and we've got Junior Oscar, just to name the top of the chat. You win, but you win absolutely nothing. We appreciate all of you for being here, of course. It is a watch party today. Don't be a party pooper. Stick around. We got lots of stuff going on today. It's going to be a great fast markets as well. And as always, I remind everybody, stay humble, grateful, creative, and centered in your trading today. Pray for peace every day. And I think we are ready to go. I'm looking. Time to party. Let's do this. Fast markets coming at you in 5, 4, 3, 2, 1. Let's go.
Good morning, everybody. Jay, it's 100 days until Christmas. Will the kids be getting the G.I. Joe with the Kung Fu grip or a bag of surplus oats? It will be decided at 1 p.m. today. Yes, it's Fed Day, Jay. Take it away.
It is Fed Day for sure, Jack. What a great intro. And look at who we got here. We got Braden C., live funded trader, and Coach Dakota, VIP coach of the Pop Squad. Dakota, Braden, how you guys feeling this morning? Dakota, we'll start with you.
Doing good, man. FOMC, I'm ready to take on these markets, man. These markets probably going to be similar to what we saw yesterday. So patience pays.
Patience does pay. We saw you yesterday in Fast Markets Dakota trade the range. Maybe let the market identify what that range is and establish that range first, and then take a couple of quick scalps. We'll see if it presents similar opportunity this morning. Braden, how are we doing over there?
Hey guys, can y'all hear me?
We
There
sure
we go.
can.
Sounds wonderful, man.
Okay. All right. Yeah, thank y'all for having me back on FOMC today. So market's definitely going to pick up some volatility, maybe a little bit later definitely a little bit later in the session. I'm not too sure what to expect heading into it. But I would try to anticipate maybe a lack of follow through on some of these trades. So not going to get too married to any positions, just try to get in and out and lock in profits when I see it. But we'll see if we break out of this overnight range come open bell.
Awesome stuff. Jack, how are you looking at today? It's kind of priced in a 25 basis point cut right now. Do you think we see a surprise? And if we do see a surprise, let's just put on our hypothetical hats. What happens in these markets?
I would say probably absolutely not. There will not be a surprise. I'm more interested in what he says beyond. I mean, they're going to cut 25 basis points. It would be friggin' insane if they didn't, because they haven't really jawboned that at all. So I'm looking for the 25 basis point cut, but more importantly, what Powell lets us in on about how rates are for the rest of the year and forward, dot plots, all that good stuff. So going to be an exciting day. As far as this morning, it's going to be a lot like yesterday. Yesterday, we had the most boring house account trade of all time. I had that ES or that MES trade on from fast markets through the closing bell. We made $130 on it in that time. So looking at the levels we kind of were yesterday, going to let this open and see what happens.
Awesome stuff. We got the open coming up in about a minute and a half. We will make sure you know when that opening bell happens. It was a nice trade in the house account, right? It was, it took forever. It took the entire day, and I think we maximized what the market was willing to present at the time. And we traded from there. We'll see what this range presents to us this morning. Of course, guys, if you get into any trades, let us know. House count is still long crude oil, 64.32. We did get in a crude oil trade on the opening range breakout to the upside, 74% long tilt in crude oil right now. Taking a look at gold, also 37.1170. So, guys, for Braden and Dakota, we're expecting some range bound markets early on in the markets that you guys trade, looking at the equities, looking at gold. On a day like today, do you potentially look elsewhere, or are you just practicing patience and saving some of your trades for later in the day?
Hit it, Braden.
No, I will take some trades and I'll try to focus on NQ today. If ES looks a little cleaner, maybe I'll trade that. But no, I'll be focusing on NQ. Not going to look at other markets. NQ has kind of been the main market I've been trading, so I'm going to stick to it.
And we are open. Last trade in the NASDAQ, 24,532. Seeing a little bit of a push to the upside early. 24,540's last trade in the NASDAQ. 68% long tilt in the NASDAQ, 66% long in the S&P.
We did hit a bottom of this trend line on the hourly in the NASDAQ. So maybe could bring some buyers into this market. We shall see. And Jack, I mean, $180 in the house account, right? Is that what you made yesterday?
Just 130.
Hey,
Didn't do as much flipping as you did.
That's a daily wage, man. That's not too bad.
There you go.
Could be worse.
All about perspective. Seeing a little bit of a push to the upside here. 66.73 evens last trade in the S&P. Gold kind of just hanging out here, and the NASDAQ, a little bit of a push as well. The Dow, always the one that gets going early. Dow just pushing here to the upside, up about 0.25% since the open. The Dow always seems to be the one that says, forget the range, guys. I'm going to do my own thing. Up about 0.4% on the day.
Who's trading the Dow?
Does anyone trade? Anyone in the chat trade the Dow? let us know. It's a great market. It's a great market, in my opinion. It moves pretty well.
So the interesting
Everything.
news that kind of has selling off last night is I guess China instructed its companies not to buy NVIDIA chips. What's interesting, we'll see how solid that is. NVIDIA is bouncing a little bit this morning, down a little over 1%, despite, I think I said this before, 13% of NVIDIA's revenue comes from China. So we'll have to see how serious that is, but you would think it's not a 1% mover if this is really going to be the case.
13% of their revenue comes from China?
Yes, sir.
That is a lot there.
Yeah.
I'm not
seeing.
Go ahead, Dakota.
I'm just saying I'm not seeing any direction to start this morning off yet. It's very, very similar to yesterday, to be honest.
Still very early, not even 3 minutes into the open yet. Don't know if we have Hoag back there in the back yet, but we'll ask Hoag how he's seeing this opening range. Kind of just sitting in the middle of it right now. 24,525 last trade in the Nasdaq, 66.72 in the S&P. I like to look at a 3-minute opening range, which is getting ready to close in a second here. We're sitting in the middle of it, which is kind of what we expected. I think this is where Dakota, we saw that great fight over the weekend with Canelo and Crawford. The first couple of rounds, they're kind of just feeling each other out, right? No one's throwing a punch. You kind of gauging the distance before you actually start getting involved into the markets. And I think that's what we're doing here, right? Identify that range. And if you're going to trade, then you have an idea of where risk is. And again, here, the Dow just continuing to push higher.
Yeah. Good analogy, man.
I still like the dip to the 6,600 SPX, which is kind of what we played yesterday. That was sort of the low of yesterday and the day before. Although we did punch through it on the news last night a little bit, mainly because I think people ahead of the Fed, you're going to stack up some YOLO SPX 0 dates at 6,600. I think there's demand for that.
Yeah. Anytime you mention the YOLO 0 DTEs, I want to poll the chat and ask who is holding a 0 DTE option into this Fed decision. Braden, how's it going over there? Anything you're looking at for a potential opportunity? We're seeing about a 40-ish point range here so far since the open. How long do you normally wait for you? Yep.
I usually wait at least 10, 15 minutes.
Gotcha.
Just until I feel like I can start to kind of read where price is motivated to go. But we did open, pop into the 40s, and then rejected kind of that overnight highs, that general range. And so we'll see as this tests the bottom of the range, if it wants to hold, and see if we can get kind of a range trade going. But we'll see, because now we're breaking 500s.
Yeah, we might go test overnight lows. Nvidia's down 2% almost. So is Tesla. So is Intel. Okay.
We have that overnight low, 24,456 last trade here in the Nasdaq, 24,507. The S&P is still holding up decently well, 66.72 last trade over there in the S&P. Dow continuing to push higher, 46,324 over there. Gold extending its range to the upside as well, 37.16 last trade in gold. We've seen some heavy long tilts in gold. During the opening call, we saw an 80% long tilt. Right now, 78% long, and they're getting paid. Average price 37.12 over there in gold. And I know the house account is long crude oil as well, 64.39. Crude inventory is out a little bit later, so we may see some consolidation there before inventories.
Yeah, so let us know if you are in any 0 dates. It's interesting with the volatility so low. Dakota, I'm looking at it right now in the SPX. Once again, none of this is financial advice. The implied volatility at the day, I'm just taking the at the money SPX 0 date, is like 0.6%, 0.63%.
That's it, huh?
Maybe the first I've ever thought about going long, putting the call.
Hey,
I'm not going to. 0.6%.
I could see it. I could see that one, Jack. That seems very, very low going into today's FOMC. But who knows?
What would you guys expect it to be?
1.5%?
1%? 1.5%?
just some volatility, right? Like when's the last time we had a 2% day in the NASDAQ? It's been a while. We had a lot of those earlier on this year, and we haven't seen much since the summer. But tomorrow, the 0.25% rate cut is kind of all but guaranteed, right? And like Jack said, the dot plot, the verbiage, what Powell's going to say, kind of funny that Trump's going to be speaking about the same time, and so I wonder if it's going to be the case where Trump gets very upset because it's not a half a point or that it's not as much as he wants, and it just would rinse and repeat again, where Trump wants a more and more interest rate cuts, and the Fed's not wanting to cut it as fast as we'd like.
Right. Yeah. Well, the president had to find a microphone. He was not going to let this day go without him saying something as well. I think we should have some poly market odds on how often he calls him too late. Too late, Powell. Seeing the
I'm
Nasdaq
sure we
continue to
have
sell
some of
off here.
those.
24,484 last trade in the Nasdaq, 63% short in the tilt right now. S&P pulling back a little bit here as well, 66.69, 75 last trade over there. Seeing the Dow continue to push higher, seeing the Russell push higher as well. Jack, I know we don't trade those often, but I hear all the time that the Russell and maybe the Dow are interest rate sensitive markets. Is that maybe why we're seeing a little bit of a rally here where they're expecting cuts? How does that work? We're seeing a pretty big push here.
Certainly could be. Yeah, especially the Russell is going to be the most sensitive to interest rates. However, it depends on why interest rates are going lower. And if the interest rates are going lower because the economy is getting weaker, those are also the companies most sensitive to that as well. The Dow is just more similar to S&P 500, but more concentrated because it's only 30 companies. Is just across a wider range of the economy than the NASDAQ, which is very top heavy and tech and communications.
Yeah, it's looking pretty bearish. We might go test those overnight lows to those 460s.
I'm gonna hop into a short, guys. 2 micro NQ short at 24,482. Looking to go test the overnight lows here.
I like
that overnight low in the Nasdaq, 24,456. Braden is short 2 micros from 482. Looking pretty
so
heavy
we're about
on the open here. Yeah, go ahead, Braden.
30 points off of that level here. So if we crack through the 80s, 70s, I'll try to go break even. But this is not really getting a strong bullish response here at the lows of the range. And then we kind of have that outlier. We have like a 30-point window down to the overnight lows, which is a wick on the hourly. So kind of looking for a wick run play here. So need to see some volume into the 470s, 460s on a flush.
I'm going to join you on that one. I like a breakdown trade as well.
All right. Got some trades in the market here. Dakota, did you get in already there? No, Brady short from 482. What price did you get, Dakota?
I got 80s even, or 79 3/4.
Gotcha. Anything on the house there, Jack? We got both these guys short, 482, 480s, a couple micros.
I'm letting the boys have their fun.
Let the boys be boys. Let the boys be boys. Shout out to Crisscross. 24,475 last trade in the NASDAQ. Seeing, does look a little bit heavy. I don't know if we have Hoag here yet. I'm curious to get his opinion on the opening range, but Hoag will be back in a few minutes. We'll ask him there. Seeing the S&P trade a little bit, 66, 68 last trade over there. Seeing a little bit of selling here as well. Where's my gold chart? Gold pulling back 37.14.
Intel's down 1.5. Tesla's down 2.5. Nvidia's down, 2/4. Broadcom's down 2/4. Everything else is kind of red. The only thing green is Apple and Netflix. I'm seeing.
Contrarian. Apple, the contrarian.
I know.
Chat, you guys got me. That was not Crisscross. That was Onyx. Man, that might be the first reference.
Jay, come on, Onyx.
I missed. That was a big miss there. That was a big miss. Shout out to Fredro Starr of Onyx. Being from New York, that's embarrassing. I see Hoag in the back now. Hoag what are we seeing in this opening range? I know we look at a 1 minute opening range for the equities. How are you looking at this market right now? We got both of these guys short currently.
Well, NASDAQ has left the opening range at the dead ass high again, same as yesterday. Nvidia seems to be, of course, dragging that lower. What's China going to do for chips? Or what are they looking? They waiting for them to go on sale or something? Maybe that's going to work for them. I know I like the barbecued chips, and I wait for those to go on sale, and I'll load up on those. S&P is really not doing much. It's still inside the range and value from yesterday. So the NASDAQ is obviously the weaker of the two. Here's the S&P value high, right up here around 66.74, value low. We haven't even tested down to that yet. NASDAQ's already headed towards the overnight low. And the S&P's, the overnight low was put in up against this 200 session moving average, which I kind of like. Where is Nvidia going to bottom out is really the question for me. So this bottom of this box here is the overnight low. We've taken out the halfway mark that Jay looks at. They did a good job of holding prior to the open. The Dow has had a huge opening range. I mean, the buyers came in for the Dow right away, and the Dow is screaming to the upside. Maybe a little bit of safe haven there for that, but the bigger index, the S&Ps, is still really kind of range bound, taking both sides of the opening range in the S&Ps. NASDAQ, what are we looking at here?
Just a quick update on these trades, guys. Any management there? We saw a little bit of a push there. NASDAQ made a low of 466 for the New York trading hours so far. Didn't take out that overnight low. I know both of these guys are short, 482 and 480. Any management there? Are you guys still holding on to this, looking for that low to be taken out?
I'm just looking at this like it's a little bit of retracement off the hourly. We're, I guess, 12 points off that low, but I'm still expecting it to fill in and take the overnight low. I still like the short.
That's where I'm at. Same.
To be honest, in the longer time frame, I like the short too.
Yeah.
Yeah, everyone became a bear.
Hey, we trade what the price is telling us.
I know.
Yeah, I mean, if we really sell off, we were talking about, during the opening call, Hoag and I were talking about a 200 moving average on the 30-minute down at 24,408. I don't know if we get that kind of extension right now. We'll see. But, that was more so of a level I was looking at for, after the Fed. But seeing some selling coming in early here in the NASDAQ, 24,475 last trade here, 66.67 in the S&P, 58% short tilt in the S&P, 61% short in the NASDAQ.
Still resilient, man.
It's been a while since we've had price below the previous day's range in the equities. So it has been a minute. So that's why I kind of do like the shorts here. Seeing some continuation perhaps here.
It's still resilient here in these 70s, which is impressive. Like
until last night, we were. Go ahead, Dakota.
I was just saying, seeing these stocks down so much, these major ones, and the NASDAQ's only down a fraction of that, is just shows you how resilient this market can be.
Rotation. Yes, it can. Designed to go up. See, 469 last trade here in the NASDAQ. We got both of these guys short, 480 and 482. Looking for a test of this overnight low, 24,456 and a quarter. S&P holding up just a little bit better. 66 evens last trade over there.
Need to see it
until
here.
That news dump last night that took out the low of yesterday in the ES. It had been since September 5th since we had broken the previous day's low.
Wow.
September 5th. Yeah, it has been a while. So, Braden, I heard you say when Hoag mentioned that, right? This is the first time in a little while we've spent any time below a prior day low. How much does that influence your trade decisions at all, right? When you see price action below that low, even in a market that's been in an uptrend, this is probably the longest we've had sustained price action below a prior day low in a long time. How does that influence your trades at all?
Yeah, I just think about what Hoag said in more of like a pattern breaking theme, like a statistical thing. Like if we've had, like you guys said, what since the 5th, the longer that pattern continues, the more confident I start to feel in a short working out in one of these sessions. Like on day 10, if we've only had, if we've only opened, or if we've opened above the prior day close, 10 trading days in a row, I
Right.
really start to get hesitant towards taking it long, and I'll start to, kind of look for that pattern to break. And so I do feel confident we get some type of pullback here. This is, once again, you anticipate more of a sideways market here. Off of this overnight low, got to start thinking like if we don't break, this could very quickly turn into yesterday's price action. And it could just start to get dangerous if you start to look for too much follow through. That's what I mentioned when we started fast markets. And that's what I want to hold myself to. It's just, man, it gets tricky because it looks so good at the double bottom here. As long as this bounce doesn't kind of reclaim 24 500s, I think we're still good on it. But at the same time, you don't want to get caught in chop. So
We did get a Bank of Canada rate decision, keeping their rates, or actually cutting here. Prior was 2.75. Looks like Canada cut their rates, 0.25% as well. There we go. Thank you, Coach Hoop, for putting that in the chat. Also, Coach Hoop says new lows in cattle. Hashtag fast markets. If you're wondering what I'm saying, why is this guy speaking like a millennial? It's because I am. But hashtag fast markets. Tag us on Instagram or on Twitter. Share us your trades setups, some funny memes, whatever it is that's getting you through your trading day. We'll share those later in the show. Hashtag fast markets. Make sure you tag us. Dakota, I've seen you gaining some traction with hashtag slow markets. Seeing a little bit of a pop in the equities here. We tagged that 500 here.
yeah, I just added two. I added two more at 494. So I'm 4 micro short at 488. Tightening my risk. I really don't want to see it pop above VWAP. If it does, I'll be out.
All right. Got an overnight session VWAP at 24,506. Are you looking at that one or the New York VWAP, Braden?
I guess New York VWAP. I'm at 509 on mine.
509. Gotcha.
So Hoag, JD presented a good question in Slack here. Right now, we're trading around 6,666 in the ES. Do you remember where you were 6,000 points ago at the 2009 satanic lows, as JD calls them? Hoag.
Yep. I was in the S&P pit, trading it up.
You grab any of that?
Unfortunately, I did not buy the dead ass low. There were some really good opportunities during that time, though. It was just kind of eerie realizing at the end of the day that the S&P low was 666. Yikes.
Yeah.
What year was this?
I was 2009. I was still in college when this happened. I forget which month it was. Yeah, I definitely remember there was a lot of. I was still in school, but like had a trading job set for afterwards. I do remember there was a lot of almost, like financial nihilism at that point when, especially once we got back into the triple digits and below. It was a pretty. I have never experienced anything like that.
So scary.
Seeing the equities pop a little bit here. 24,515 last trade in the NASDAQ. S&P 6673 looks like it's getting ready to take out the high of the New York session range. I know, Brady, you added to that position short from 488. Dakota, anything on your side? Just kind of holding on to this one, letting it work.
I'm doing the same. I'm adding it as well.
Okay.
Average price now is 97.
Okay. Both these guys got similar average prices here. Again, short the NASDAQ right now, 24,505 last trade, 65% long tilt in the NASDAQ, 57% long in the S&P. I believe the house account is still in this crude oil trade. If I remember where our stop was, we didn't get tagged, but crude oil kind of not really doing too much right now. 64.38 last trade there.
Just hanging around.
Just hanging out.
Dakota, how many are you short?
I'm short one full mini. So 10 micros.
Got it. Alrighty.
Dakota short
We hit
10
666 on March 6, 2009.
2009. I saw something, and you got to take what you see on Twitter with a grain of salt. But I saw someone mentioning that, and it's about, was it 6,000 days ago or something like that? Is that right? Someone validate that in the chat.
Yikes.
Feels about right.
Yeah. Weird times.
So
24,500 here, last trade in the NASDAQ. We got both of these guys short. Braden, you're short 4, correct?
I got stopped out, and I'm kind of
Okay.
looking to get back into it. It's just a little tricky
Okay.
around VWAP, but right now it's doing what I didn't want to see it do. It's ranging. It held the low, and now we're back into the highs. So, yeah, I'm trying to still build a short position, but we'll see. I'm currently short 2 micros at 502.
Okay.
I might
Back
add
in
into
short.
it, but I'll update you.
So
Sounds good.
good story about that day, Jack. There was a huge sell stop right down around that 666 level, and it triggered the stop. It was about 500 contracts, and about 4 guys took all 500 contracts. One of them is somebody I know very well, so he bought 100 of them, and this was a big trade for this guy. And the market turned. He held it for just a few minutes, and then he got out. Braden, are you back in?
No, I'm out. I'm totally out. I'm gonna take a little break.
All right. So
Right.
then the exchange took out the print, so the stop could not be filled. So that busts all those trades, which leaves my friend short 100 big S&Ps in a really bad place.
Ooh.
So he covers them. They put the print back in. So now, after taking a rather sizable loss on covering the position to begin with, the market had rallied, I don't know how many points, like 100, 200 points, which made him now long the cover of his cover. He ended up making about $250,000 that day. But talk about having a heart attack. Your buys at the lows get busted, and now you're
And then
stuck
you're short.
Yep. And the market is screaming higher. They put the print back in, which made him back long again, the cover of his cover. Yeah, he went from down 100 grand to up 250 grand in about 5 minutes just because of that.
Wow. I still don't understand how they bust trades in the middle of the day. Something that, you guys will probably never have to worry about trading these here. But like even when I was trading, you would occasionally bust trades, but it was almost always right on the open. Like you had to like actually call the exchange and stuff like that. And our CEO actually made it that like if we got something that was a trade that should be busted, we had to do it right away.
Right.
One of those.
So
Your word
in
is
the
strong.
pit,
Someone just enters the wrong thing on the ladder.
We'll take it on there.
in the pit, let's say somebody was actively bidding 667 for 50 contracts, and the exchange printed it through him at 666, which set off the stop. And then he doesn't get filled at 667. He can say, hey, I was bidding 667, 666 shouldn't have traded. So they they take it out, which screws everybody. And then whoever bought the 666s sold the 667s to him to make him whole again. They put the print back in, but you can't. The only way that it worked is because the print was actually in real time. You can't put a print in to set off a stop. So there was a lot of crying, a lot of bitching going on, but it ended up, being all right.
Jack, real quick, take a look at that 1 second chart in the S&P for me. I think I just saw about 2,600 contracts hit the bid there in the S&P in about a second. Little drop there.
3,400 contracts traded in 1 second there.
Ton of size there. It's still are, and Hoag said it during the opening call, we are still in rollover, still technically a roll that needs to be done. So we saw a quick little spike there to the downside, 66.71 last trade in the S&P. 24,505 last trade in the NASDAQ. No real tilt to talk about in either one of those markets. But quick little spike of volume if you were wondering what that was there. Not seeing any headlines or anything like that. Again, we'll be on the lookout for headlines, especially on a day like today when people are in front of microphones and things like that. But that was just a little bit of volume hitting the books. Dakota's still short here from 497.
Yes, sir. I'm trying to reshare my charts.
All good. Managed trade for now. NASDAQ trading 24,491.
Really curious how they're going to close this hourly candle here in 3 minutes, because we're heading back down to fill that wick in. If this sells another 20, 30 points in the next couple of minutes, we're going to have a really bearish hourly candle closure.
Yeah. I'm closing some profits right here. Moving my stop loss too.
I'm getting in short at 485. 5 micros short 485.
Rating back in the short, Dakota. Yep, go ahead, Dakota.
No, I just closed one off here at these mid 80s. I'm going to continue to look for low of days. Like I said, that little bounce was a little surprising to me. The fact that Nvidia, Broadcom still down 2%, Meta's down 1%, Intel's down 1%, Amazon's down 1%, Tesla's down 1.25%. The Nasdaq was bumping up against settlement.
Right.
Didn't make sense. And so that's why I added into a bigger than normal size. So I'm still short 9 micros. Average price 513.
Nice. 24,522 quarter was that settlement price in the NASDAQ. High that move there, we got up to about 520 and a half. So nice read there. Above or below settlement, that is red or green for the day. NASDAQ's currently in the red, 24,485 last trade over there. We got both of these guys short currently, 66% short in the tilt. Trading it early. I'm going to be honest. This is probably more of a range than I did expect. We're seeing high to low so far in the New York session, about 80 points in the NASDAQ. And we talked about it during the opening call, right? If we do get a range, there's something to trade here where you can, before FOMC, maybe, stack a couple dollars where you don't even have to trade and you can kind of just watch the watch party that we're going to have later today. Top of the hour coming in a minute here, Braden. Somebody say party. Top of the hour coming in a minute here, Braden. On this hourly, we may have a wick at the bottom depending on how this closes.
Yeah. And it's not going to be as strong of a bearish closure, but given the context of where we moved, I mean, we were all the way up here into the 520s and couldn't hold. So this could have closed with a really significant wick down here and closed almost with a bullish body to the upside, small body, and we didn't. So although this isn't a full wick fill, it's still a really nice bearish closure in the context of where it was earlier. And this looks really, really solid. They're going to close it weak. Yep.
Taking a couple more profits here in these 70s. All right,
taking a little bit more off.
Yep, left with 5 micros.
Okay.
All right, both of these guys short 5 now.
Okay.
Seeing a little bit of size on this NASDAQ book. There's about 80 contracts offered at 24,490 and a quarter. Kind of way up there. They've been moving that order down a little bit, but let's see. Both of these guys short 24,474 last trade in the NASDAQ. S&P is holding up a little bit better here. That hourly on the S&P looks a lot. There's that wick to the upside, but looks a little
adding
different
another
here.
5. Added another 5. Trying to size into this. New average is 480, 10 micros.
Average at 480s, 10 micros, looking for that flush of the low. Again, overnight low, 24,456 and a quarter. Mixer says choppy open for the New York session so far.
Not very choppy. Not in the NASDAQ.
No, 80 point range. There's something there for sure. Maybe the S&P, if you're looking at the S&P, it's a little bit more choppy, but the NASDAQ, I'd call it a range, but I don't know if I'd call it choppy.
I like that ad, Braden. This is looking very heavy. This looks like we could just be breaking lower days.
Yeah. 10 points off low days, nothing to it. Quick snap.
Yeah, Nvidia's going,
not getting-
Broadcom's going.
Yeah. And this is here we go.
Here we go.
There is that overnight low.
60
Nice
I'm gonna
trade.
put some
Nice
orders
job getting back in there. Go ahead.
I'm feeling some orders in like the 40s, 30s if we flush with a little bit of volume here. Probably cover half. Low 40s,
one,
high
right?
30s.
Right. Yeah. I covered one at
Nice.
56.
Both of these guys short right now, and these markets presenting opportunity, right? Just because it is FOMC day doesn't mean that there aren't trades early. You know, the closer we get to that number, maybe we see the market slow down a little bit. But for right now, trade what the market is presenting to you. Both of these guys getting in short. Braden, I really love getting back into that trade. You kind of slowed yourself down for a little bit. Had to, see if the market agreed with what you said and got right back into that trade. And that's the power. You see a live funded trader on Topstep TV trading in the micros. That is the power of micros, right? If you're over leveraged, do you even get back into this trade? But right now we're seeing some really nice selling here. 24,449 last trade in the NASDAQ. S&P now extending that range to the downside as well. New lows for the New York session in the S&P. Yep, go ahead, Jack.
2 points away in the S&P. We're 2 points away in the S&P from 6,600 SPX, which is where we bounced yesterday, where we bounced the day before.
Got you. That would put us around 662, Jack.
Yes.
Got you.
I covered my last one at 450. Still have three here.
Give us a P&L update when you can there, Dakota. 446 was the low there. And we're back at 470s here in the NASDAQ. Nice, quick little 30-point pop there. That was a quick move.
Up 500, unrealized 300.
Nvidia giving us a pre-FOMC gift here.
Yeah, a little bit, Hoag.
Yes.
Generational buying opportunity.
Yeah.
Still at
hey, Jack,
$4.15 trillion in market cap.
You see, Jack, look at Open. Open's up 11%.
Yeah, it'll do that one way or the other every day.
I know. It's
future.
just, it's insane.
You were
All right,
saying something,
Jack,
Jay?
let's let these guys manage these trades. I know you got some news for us on the day. What do you have, Jack? We got Braden still short right now in the NASDAQ.
Okay, let's hit it. No news about the Fed. We're doing that at 1. We're going to have plenty of time to talk about the Fed today, so here's a couple other tidbits. And we do, Jay, later have a hardo of the day, and it's a good one. But first, this is why I hate consumer sentiment numbers in general. Morning Consult was able to break down their daily consumer sentiment tracker by political party affiliation. And what is this friggin' nonsense? Everyone is such a homer that in this day and age with the political polarization, it's consumer sentiment. I mean, look at this chart here. You can see how it just completely flips depending on whether you support one candidate or the other. And we're supposed to use this as a gauge of the economy. I was shocked at just how big this is, but we'll keep a close eye on this. But yeah, that's pretty strong
terrible
correlation there, I would say.
It's crazy.
A lot of emotion in that chart.
There's a lot in that chart.
Right.
You can frame this, put this in the Louvre. Next, speaking of things that I wouldn't frame and put in the shitter, StubHub had its IPO yesterday, valuing the company at $8.6 billion, $23.50 a share, came in about the range they expected. Now, I was wondering, is this going to be the first stock ever that the ape armies just pile into puts on? If there's justice in the world, that StubHub's worth $8.6 billion, give me a break.
It seems a little high.
Yeah,
there's a huge sigh of relief from Comcast, probably no longer being the most hated company out there.
Right.
And yesterday, I forgot to mention, was Pythagorean triple square day. If you're in the U.S. date system, 9/16/25. This date only comes once per century. So enjoy it, math nerds, or hopefully you already did. But lastly, I wanted to show maybe this is why AI stocks are down. When I asked about these days, the AI response I got was right in the first sentence and then shockingly wrong in multiple ways in the second sentence. This specific combination of perfect square on a date is a rare event happening only once per century. True. You could have stopped there. Then it goes into this. The previous occurrence was in 2009, 149. The two major problems with this is that 2009 is obviously this century when you just told me it happens once a century. And two, you can't make a triangle with the sides 1, 2, 3. So it got it wrong in two pretty major ways there. So I'll keep an eye on this, but maybe this is why NVIDIA is down. And that's the news for now. We'll do Hardo of the day a bit later.
We are, in fact, in an AI bubble. Jack can't even get math right. Thank you for that, Jack. Braden's still in the short. Dakota's still short as well. Dakota, I know you took some profits here. Plus 528 right now. Seeing some unrealized floating P&L. 24,460. Braden?
I'll give a quick update. I am out because of the nature of
Okay.
kind of sizing into that. I was on the later half of entering short, so I mentioned that I was short from 480s, 10 micros. I had good size on it. We did break low of day, and I don't really want to call it greed. I was looking for 30s, we just didn't get it, and the entry, since it's a breakout trade entry, was so low that I got tapped out. So break even didn't secure any profits, didn't execute too well, but just keep trading, live and learn.
Gotcha. Just give us a quick P&L update there, Braden, if you can.
Down 260.
Oh, not bad, man. Not bad. Great risk management. Again, you're probably not even happy with your execution there, but down 260 on the day. There's still a ton of day ahead for us. And again, we'll keep talking about it, but that is the power of trading micro, where you could even get the trade wrong, but it's not going to risk your entire account. More opportunity. And you said you sized up on that as well, right? So pretty great risk management there. 24,470. Yeah, go ahead.
On the flush, we were up about 650 at best. I had some limit orders a couple points below that 47 low, just didn't get filled. And since the entry was so low, just couldn't really account for a 30-point retracement, which we got. So, but yeah, I mean, kind of sizing into that trade, but immediately reclaiming this range is kind of still sideways, more or less.
Awesome stuff. Dakota's still hanging out here. Where's your average on the rest of this position, Dakota?
515. This is one where I was happy to scale into. I talked about it, and like I said, NASDAQ was popping higher, but the rest of the market wasn't moving, so that helped allow me to be more aggressive on this trade. And I still think we could continue to see lower lows. We might even see the lower 400s, 410s, 420s come into play here soon. It's just looking like a deeper red type of day. NASDAQ's only down 0.25%. I think we could get to 0.5%.
0.5% would put us, and I like that 410 area you were talking about there, Dakota. We have that 200 moving average on the 30-minute chart down at 408. It's probably a little bit higher now if I looked at it, but that is a level we talked about during the opening call. Let's see if we do get down there. House account, I believe, is still long in crude oil. 64.45 last trade in crude. I know the house got long from 64.32. Stop was somewhere near 64.10s. So we're still long that. 37.16 last trade here in gold. We got these guys trading the NASDAQ right now. Dakota short currently from 515s. Great average up there. Nice job adding to this trade. Seeing if we get a push here. Chat, let us know if you guys are in any trades right now. Are you guys just watching the show, hanging out, staying patient for FOMC? How's everyone seeing the markets right now in the chat? If you can, do us a favor and hit that thumbs up button. We are on a quest to 200,000 subscribers as well. We're at 181,000 right now. So tell your friends, tell your family, tell your dogs, grandma to subscribe as well. And we'll keep this thing moving.
Let's run for that low again. Let's see it.
465s, kind of just basing out here, but looking pretty good. If I look at a VWAP from the New York session, it's up by 490s, up at 490s right now. But had a couple
I
of
got
tests of
long
it.
here.
And, okay.
Sorry, Jay. Yeah,
Yeah,
I'm
no,
just
all good.
I'm liking how we're holding. We did get a break of low of day. We're not seeing a ton of continuation. As long as we keep holding structure here, I'm not going to look for a massive retracement. I would like to at least get a range trade. So kind of looking for 460s back to 480s. Take it off, re-enter, see if we can base here, and just keep taking like 10, 15 point range trades back up to 480s, hopefully. So average is 5 micros, 465.
Excellent.
Right now getting in long, and it makes sense, right? Could kind of jack what we expected to maybe see today, a little bit of a range. This is somewhere near the low of that range, right? We see the Nasdaq get down to 446, but if we're going to continue to range, potentially buying the low here, Dakota, you were buying the low of the range as well, just buying to close a position instead of buying to open one. Which similar idea. Andre talks about that all the time, right? If you would buy here and you're not in a position, then that's you getting in long, identifying the low of that range. So.
Yeah, I got long 5 MES from 62 half. Kind of the same trade we took yesterday. Brandon's long. So Braden.
You're good. You're good.
I don't even think about it. I know you're Braden.
It's the more common name. I don't blame you. Yeah, I've got to sell at 74, so I'll be out quickly, hopefully here. Then we'll look to re-enter if we get in the 60s.
I like that.
I like it, Braden. I mean, we swept the overnight low and gave it right back.
Yeah.
Nice.
All right, I am out.
Nice trade there.
I'm
nice
a
trade.
buyer again here into the 60s. I'm a buyer. So I'll wait.
All right, Braden out.
Put another limit buy in there at 462 and see. Although this one's coming down a little fierce. Let me drag.
Yeah, my only concern is today's price action's a lot different from yesterday when it comes to the overall market.
More of kind of channeling lower, Dakota, instead of ranging, you think?
A little more directional than yesterday, yeah. Yesterday was like a Christmas tree, red, green, red, green, red, green. Today it's a little more red, but the market is more red. Nasdaq's down 0.2. Yesterday it was just hovering around settlement, chopping around. And yeah, if it's ranging, 60s up to 70s is the play right here.
Braden, you got back in there at 62s?
I was reading the price action. It was coming down quick, and sometimes it's tricky. That's the thing with the range trades. I was like overanalyzing the price. But yeah, it's 63, then it turns, and then now we're back at the high. It would have been an easy 10 points. But I saw it come down a little quick, and I dragged the order a little lower, just trying to get the best possible fill on it.
Yep. We're seeing gold push a little bit here. Highs of the New York session so far. Shout out to JD in the chat. Gold reclaiming that 37.15 level we talked about during the opening call. Last trade in gold here, 37.19. Let's see if this market continues to push higher. Again, we bounced off that 200 moving average on the 30-minute, right off that 3,700 level in gold. Seeing a pretty nice move here. 75% long. The tilt has been long in gold all day. I don't think I've seen it under 60% long. And as high as 80%. So buyers in gold right now. House count is long crude. 60. Yeah, it is, Hoag. Where do you have settlement price there in gold? I should have it up here on my 25.10.
37.25.10.
There we go. House count long crude oil here as well. 64.32. Last trade here in crude, 64.53. We do have crude oil inventories coming up in about 15 minutes here. So make sure if you're in a crude position, you're aware of that. We'll see how big of a miss they get on this inventory number. Also have the house account long in the S&P here. 62 evens, Jack?
62 half.
62 half. Last trade, 66.30. 63 evens in the S&P here.
Rice Bite says, where do we all go to watch FOMC? Well, right here.
Yeah, we'll be pumping it in live.
You are in the right place. We are having a party. We are having a party. Get your popcorn ready.
I caught the sell at 75, looking for the range to hold, and it is. So I'm up about $100. Be back to break
Nice.
even if I can cover here on the dip into 60s. I probably should cover because we are at the bottom of the range. Yeah, I'm gonna cover some.
There we go. We are watching a master at work right now. Braden, live funded trader with Topstep. We've seen some big P&L days from Braden trading the micros, and this is how it's done, right? You're getting to see it done in real time now. I'm not, putting a target for Braden to hit on the day. He's just trading really well. We're seeing this process. Braden, so I want to ask, and manage your trade as you see it, but on a day where you have one of those bigger P&L days, does it start the same way? Where you're kind of building into positions and
Yeah, I mean the outliers of the market environment. It has to be a good market environment on the day. I never really expect to have like a big day. It just kind of happens naturally, and that's how it's going to be for everybody watching. Like most of the time, you're not going to know or you're not going to plan it, but you need to stay consistent with your sizing. For me, I use micros to start the day. If I'm reading the market well, first of all, if I'm reading the market wrong, then what's good is I'm only risking micros. I can realize that early with minimal losses on the account that day. And if I'm trading well, then hey, at least we found that information out. Okay, we're using a couple micros. If I still feel good, if there's still opportunity, if the market environment is good, then okay, then maybe we can size up a little bit. I built a profit cushion. Okay, let's start to size up and then continue from there. Hopefully, kind of a
I
snowball
like that, man.
effect when those big
I like
things
that.
come.
I think the
Snowball.
most important thing you just said there is not having the expectation of having a big day, right? If you come into the day and say, "Hey, I'm going to make 10 grand a day," the likelihood of you
Yeah.
making that 10 grand is probably pretty low, right? But it can happen but the market conditions have to facilitate that, right? And you have to hit that pitch, right? You have to be in the right mindset of executing the trades with the proper position size, and then the market has to facilitate that trade as well. It's not if someone came in with the expectation of making 10 grand a day, they probably could have, but they're probably trading a size that is hopefully sustainable for their account. But you got to trade the account that you have as well. So nice job there, Braden. 24,458 last trade here in the Nasdaq. 6661 last trade in the S&P. Dakota still hanging out on this short here.
Yes.
What are you now looking for, Dakota? Are you looking for another break of that low before any more management of this trade? How does that work from here?
Nope. Still short 3 from 515. CYA's at 526. My stop loss. And if we do break down, I'll move my stop loss just above 480s. And it's still looking really heavy. Market's more directional today than it was yesterday, and so I'm going to let this market and give this market room to break if it needs to.
Awesome stuff. And Jack, on this S&P trade, where do we have our stop or CYA?
About 4 points below the 6,600 level.
Gotcha.
Tempted because it is so tight. I'm tempted to add because this is sort of like go or don't go. It's pretty binary. I don't have much size on it all right now.
Okay.
We're only risking
Along
like
5 micros right now.
$150. Yep.
Not bad. We got a poll up in the chat. Traders, who thinks we get an outlier day from the Fed and get a half-point cut today? Make sure you put your votes in there, Jack. I know you opened the call and said we're probably not getting a surprise today.
No, sir.
Let's see what our traders are thinking. Make sure you get your votes in there. And while you're voting, hit that thumbs up button as well if you can. Like and subscribe. 24,462, 463 last trade here in the Nasdaq. Braden, flat right now?
Yeah, I'm liking how we're holding. I might look to enter, but it's kind of in the middle of the range. So, but yeah, I'm still kind of with that range trade idea. I just didn't get long on the 50s dip.
I got to give props to you here. You identified a 15-point range and made a little bit of a recovery in it, buying the low and selling the high. That is a tight range to trade, but the market is moving. And like you said, you're trading the micros.
Yeah.
Established risk, well-established risk, not risking a whole lot, and able to recover a little bit. Down $75 right now, not too bad.
Call that pro ball.
Pro ball for sure, Hoag. Pro ball for sure. Hoag, we got about 9 minutes before we close this initial balance. How are you reading the market right now?
Well, NASDAQ still has the high of the day as the opening range. We did sweep the overnight low, and we've kind of recovered off of that. Knowing what we've got going on this afternoon, I'm still thinking this market will find some sort of range at some point today. But you got to keep an eye on NVIDIA if you're trading the NASDAQ, of course. NVIDIA keeps ripping to the downside. That could change that hypothesis. S&Ps are much more likely to remain in a range just because they're still in one right now. I mean, we've looked at the low of the session from yesterday. We're kind of fighting against that. The overnight low we haven't even tested, and this 20-minute or 200 session simple moving average was supportive last night on that kerfuffleation at 3:30 in the morning. Will it remain? The one thing in the longer time frames about the equities is we put in an excess high yesterday up against the weekly kickoff high in the S&Ps, and we've got a shooting star. This is a reversal pattern.
Yes, it is.
Is it because people were just liquidating some longs before the FOMC meeting? Maybe, but it's a little bit ominous on the daily chart, and we have it also in the daily chart in the NASDAQ as well. So, while I think these markets are extremely resilient and at any time they can just kind of rip off the faces of any shorts that are accumulating, I think that there's probably a little bit more of a pullback due here. So, that said, my story, and I'm sticking to it.
We still got that opening range as the dead ass high right now as well, Hoag, in the NASDAQ. So looking pretty good here. Crude oil traders, remember in about 7 minutes, 6 minutes now, we do have crude oil inventories coming out. Crude oil last trade here, 64.50, 73% long in the tilt. In crude, house is still long as well, but remember we have crude inventories coming out. So if you are trading crude and you say, hey, what the hell was that? Where did that volatility come from? That was crude oil inventories in a couple of minutes. Make sure you pay attention to that economic calendar, and we will have the number for you when it is out. Code is still short here from 515s, 457 last trade in the NASDAQ. Jack, I know you were talking about potentially adding here.
Yeah, I was on the bid at 66.60, 5 more, and did not get filled. But
is live
I'm not
markets for you
gonna-
because 60s did trade,
not
didn't
gonna
it?
chase it. Yeah.
Yeah. Thomas Tonka says the market is going to dump after this rate cut. Market might dump just right
I
here.
would not be
right now.
surprised.
Yeah.
I would love to see a half point rate cut. I want to see more volatility in this market. Yeah, someone says open doors on fire. Yeah, open doors pumping.
What is it trading right now?
It's up almost 20%.
Wow.
It's trading 1047 right now.
Yep.
The meme stocks.
The memes. Tell you what,
Uh,
my social media feed is just so full of everyone just, hey, we're going to 30, buy it open.
Yeah. Someone's going to be the last buyer there
Yeah.
and not happy, but until then, get your money. Get your
Not gonna
money.
be me.
And when they are the last buyer, they might want to read our tip of the week. Clear your mind after a loss. Let's cue up that tip of the week. We saw Braden do that on a quick loss this morning. Taking a trading break, analyzing mistakes, calmly regaining your mental clarity, and avoiding emotional trading. If you are the last buyer in Open Door, make sure you have this pinned somewhere so you can read this. How important is that to you guys, right? Braden, we saw you do it a little bit earlier. Took some losses early. How important was that, and it wasn't a huge loss, but how important is taking that break, even if it's a 5 minute, just to say, hey, am I reading this market correctly? How important is that in your trade?
Yeah, that's crazy. Tip of the week. Take a trading break, analyze mistakes. I feel like I did all of these things in that order, and I didn't even know what the tip of the week was at that moment in time. So I feel like I did pretty well there. Regain mental clarity, avoid emotional trading. Yeah, I just take a step back. It was a big price swing out of the open. It was like 100 points from low to high. Tried to catch a continuation of just a little too early. So, yeah, that's a mistake. I think we're a little too early in the session to look for an immediate continuation. We retested the highs. I was like, okay, I'm wrong on that. Let's just cool down. Caught this one. I wasn't wrong on that, but that's 3 losses back to back. Well, that was more of a break-even trade, but yeah, that's
Right.
about when a lot of traders go down that slope of FOMO, tilt, all the horrible things. So yeah, just calm down. Probably size down, I would add. If you are actively taking losses, probably size down. So that's what I did. Well, it was a range, so I'm not going to trade it with as much size anyway. So 5 micros and just take a little range trade base hits. And now we're almost back to green on the session. I'm pretty confident we'll get green on the session. We're not going to rush anything.
Session lows.
Session lows there, 24,446 here in the NASDAQ. Continuing to push lower. S&P holding up a little bit better, 66.61.75 last trade over there. 59% long tilt in the NASDAQ, 24,480, their average price. So a little bit underwater right now. And crude oil inventories, 2.5 minutes. 2.5 minutes until crude inventories. Make sure you watch out for that. Taking a look at the Dow holding up pretty well. Still 46,377 last trade over there in the Dow. We saw it race to about a 0.5% move right off the open and sustaining that move right now. We got those session lows. Dakota, you still looking for lower 400s here?
Yes. Yep. I'm going to take one off right there. Just took one off here at 45. And let's see if we could just go. Up 71 points on this.
Nice trade.
These last two, which is just not, it's very abnormal. 71 points during FOMC on the day like today. Yeah. Let's see if we can run through these lower 400s and take profits down there. We got a ways to go. I think
seeing some size
out
on the book
below.
here in the NASDAQ. 280 bid at 24,420 here in the NASDAQ. Maybe that's Elon. 24,420 on the bid in NASDAQ. 281 contracts bid there. NASDAQ making new
Video
lows
below
on this
170.
Yeah.
Okay. Are we down 3%
Going.
now in NVIDIA?
Yes, pretty close. Almost there. 2.9, 2.8 and a half. Let's keep going.
Seeing
This is
some
what I was
selling
looking for.
continue to. Yeah, I really do like. Let me take a look at where that 200 moving average is now on the 30-minute chart. Probably moved up a little bit. It's sitting at 24,409. I kind of love that as a target. Let's see if we actually get there. But those lower 400s, Dakota, looking decent for now. 24,437 last trade here. 66.60 in the S&P, not as aggressive of a sell-off. We saw the S&P, Hogan and I talked about it during the opening call, already test that 200 moving average, which is at 66.58 on the 30-minute chart. Crude oil inventories here in 20 seconds for all of our crude traders, and house count is long 64.32. Don't think we took anything off of that trade yet.
Yeah, Broadcom's also down 3%.
Broadcom.
Tested 2.
Tech
Yeah.
sell day. I actually added Broadcom to my Mag 7 screener, Dakota. It's time.
Ooh, good. It's
There you
time.
go. Crude inventories are out. Seeing a little bit of a spike there in crude. I'll get you that number in just a second here. Where did it go?
So with the NQ dumping, I took off that bid to add, and we'll just see. We're risking very little on this trade, so if it turns around, fine.
All right. Okay. Crude oil inventories actual came in at negative 9.285 million. The forecast is positive 1.766 million. So that is a huge miss again.
Always.
How do you get that job? Just be wrong and it's okay.
It's a broken clicker.
They get the numbers from a Roku puzzle.
Asking ChatGPT to counter something. I don't know. Something's going on there. It's just always wrong. Seeing crude push though. Hey, if it's wrong and it helps out our house account trade, I'll take it. 64.56 last trade here in crude oil and house long from 32. JD, let me know if we get any management of that trade at all. If you're still watching here, we got Dakota short. Braden, any trades for you? I know we were looking at that range, kind of extending it to the bottom now. Still sitting flat.
Yeah,
here.
we're gonna slow sell-off. Noticing ES still hasn't taken its overnight lows. ES looks now like what NQ did out of the bell. We've got about 5 points of downside to take the overnight lows on ES. It's a slow sell-off, slow and controlled. We haven't really dumped too hard, and I don't really expect us to dump too hard. So I'm going to kind of let this come lower and try to just catch little retracements off of the low day breaks. But I'm a little bit on standby until ES, hopefully until ES takes its overnight lows, if we can do that.
Awesome. Thank you for that, Braden. Update from JD on the house account trade in crude oil. He's working to cover a couple up at 64.83 in crude. That would put us at 2R on that initial trade. Saw a little spike in after inventories there. Crude trading 64.50 right now. And house account long from 32s, and house account also long in the S&P from 66, 62 half, 5 S&P micros. Dakota, it sounded like you were going to say something there.
No, I'm saying this NASDAQ is resilient. It is. Even though we are selling off, and I was talking about this at the open, right? The reason why I'm so I have the conviction on this short was the market's different today. It looked like we were going to have a range-bound day to start it, but the major stocks in the NASDAQ were, very directional, right? I kept saying NVIDIA down to 2.5. Broadcom down, and going through this, and then to see NASDAQ bounce gave that conviction I had to add to those shorts. A lot different than yesterday, right? Yesterday, like I kept saying, it's a Christmas tree. It's more of a choppy day. Today, it's looking a lot more like we could see a 0.5% down this morning, and so far, it's playing out pretty well. It's still a lot more resilient than I would have expected. A normal day, I'm gonna be honest, I would think NASDAQ would be already down in those 400s, but it is FOMC.
If it wasn't Fed day, right?
Yeah, if it wasn't a Fed day rollover, and if it was just kind of just a normal day, and we start selling off, I think we could see more momentum in either direction. It's just a little hesitant.
Still holding on. Cody, you took another one off. I know you short 2 now from 515s. Nice average price there. We did see that bid in the NASDAQ step in about 420s. Low of the session, 434 half. There, I believe they're still sitting out there on the books. Let's see if we do go test that. We got 90 offered at 24,464. Also, we saw that spike of selling come in, Jack. That 3,700 contracts in the S&P, and that really got us going. It looked like we were going to range, and if somebody was selling to open there, they're probably not upset, right? If they were selling to open, with that assumption, but
we're going to get a little pinned around here, like that 6,600 SPX might be a good launching point for the going into it. But yeah, if you sold 3,700, you're sitting pretty good.
Yeah, sitting pretty good. Whether that was a hedge or probably a hedge, probably not an open position or some type of
hedging options or still roll.
Let's see. Go push these lower days again. Let's see if we can do it.
Back a little bit here. Crude. So crude settlement was 64.52. We saw a spike of volume right off inventories here. Now we're trading a little bit lower, 64.36 last trade here in crude oil off of that inventory print. No sustained volume above settlement for now. Let's see. Got a VWAP in crude 64.29. Still above that right now. Let's see if that holds potentially as a support here. Just channeling lower here, Dakota, in the NASDAQ. Is probably the one equity market.
One off. I just took another one off here. So I have my one runner. To go see if we could find down 0.5% here in the NASDAQ. Go look for those lower 400s. Which it looks like we could do that. Pretty confident in this trade now, Jay, that we can break these lows and find some more momentum.
Looking pretty good. That bid is still down there right at 420s in the NASDAQ and 287 contracts now. So some people joined the party there. Jack, I see your beer is talking to you from the fridge.
I know.
Maybe
like a Green Goblin mask or something.
It's still too early. It's still too early. Right around 1 p.m. Central Time, maybe we crack a beer and watch the FOMC. But for right now, we're in some trades. We got some work to do. We got some news. We're gonna replay this. What does the Fed rate cut mean for all of us as we see these markets continue to sell off in the Nasdaq?
My expectation is they will vote for a cut.
Analysts expect Federal Reserve decision makers to reduce interest rates today for the first time since December. Most estimate at least a quarter-point drop. That would bring the target federal funds rate to between 4 and 4.25%. Such a cut usually makes it cheaper to borrow money.
They set the price and supply of money. That literally affects how much we pay for our mortgage, our credit card, our auto loan, and it affects really the entire base of business.
The Fed vote comes as FICO reports the biggest credit score drop since the Great Recession. For some Americans, that's pushing loan costs the other way.
The higher the score, the cheaper it is to borrow, and vice versa. Lower scores make it more expensive to borrow.
In addition to impacting debt, a Fed interest rate cut also can increase inflation. Many economists say tariffs are doing that already.
Things are going to cost more in the grocery store. Your BLT is going to be like bacon and lettuce because tomatoes are up.
Fed decision makers also affect the yield on savings accounts and CDs, and they can influence retirement funds in the stock market.
They will indicate what we call a loosening bias or an easing bias, but they won't commit ahead of time to future cuts. And I think the markets may react a little negatively to that.
I'm Amy Kiley reporting.
Bacon and lettuce.
I'm happy we replayed that video because it's a great quote. Your BLT is going to be bacon and lettuce because tomatoes are.
She was delightful.
Tomatoes are going up. We got here seeing a little bit of selling in just the Nasdaq. Really, S&P is holding up pretty well. We talked about there's a 30-minute candle that was 3:30 a.m. Central Time. Right around 50% of that is 66.60. Jack, I know you were looking at that SPX level as well, holding up for now. While the Nasdaq tries to pull us all lower.
It is NVIDIA of all people. That would be the last to stab me. NVIDIA above 170 again. Palantir's down 3.3%. Quantum stocks are up. Go figure.
Netflix is up.
Yeah.
Hey guys, I'm long at 24,441, 3 micros, trying to catch this range trade back to 470s.
Right. Braden back in the market. Long for 441, 3 micros. Last trade in the Nasdaq, 24,443. Still seeing a 59% long tilt in the Nasdaq. Let me refresh, make sure that's right. Nope. It is now 55% short. There you go. Sometimes you got to hit the refresh button. 74% long tilt in gold. Again, gold has had a pretty heavy long tilt all day. 37.1970 last trade over there in gold. Got Braden and Dakota right now trading the equities. House count in the equities as well, long the S&P. Braden long the Nasdaq. Dakota still short 1. So Dakota, I want to ask you. So you have this downside target of lower 400s here, right? And when do you decide, hey, now's a good time to shave off a little bit more of this position? Is it just you're not seeing the type of price action that you want to hold onto it? What makes you make that decision to take some of it off?
It's areas that I would buy it normally, right? We had the low of day, took some off there. We had the low overnight lows, took some off there, and then we bounced off these 440s. We came back down, testing it, take some off there. If we get any type of reversal pattern, some of this consolidation, and those are just areas I'm looking to take profit. And now since I have my one runner, this is going to be one that I'll just hold. I'll just hold it and let it just doesn't I'm not looking to take profit. Either this market turns around and it stops me out, or we keep coming down to these lower 400s. And if we continue to break down, I'll look for major areas to trail it with my stop loss. Like here's one that I'm actually, I do need to trail it. So I'll continue to trail this through these major pivots on this 5-minute chart and this 100-tick chart.
Even if you left your stop in that original position, right? No way that this trade becomes a loser at this point. Was that Hoag? Did we hear Hoag? Hoag, what do we got? You got some information for us?
Well, really preemptive, but we do have potential failed downside auctions in the equities. We've got to wait till this 30-minute bar closes at 10 o'clock to confirm it. But the possibility does exist.
I see an initial balance low in the NASDAQ at 436.
436, yes, exactly.
And in the S&P 59.75. So what Hoag is looking for, we get a failed downside auction. After that initial balance is closed, price trades lower. We don't sustain that auction, which means continue to sell below that price. It's a failed downside auction. Hoag, when we do get that failed downside auction, or if we do, what is the target, right? How does the trader approach trading that if we do get that auction? What might be the target to the upside?
Well, a nice, clean failed downside auction would possibly bring us back to the initial balance high in the NASDAQ. That's 24,540. But right now, we're seeing a little bit of continuation to the downside in the NASDAQ, but the S&P's still holding up a little bit better. There's only a 2-tick failed downside auction in the S&P's, which is not a lot of excess. It'd be tough to preempt this one.
Yeah. NASDAQ extending that initial balance to the downside, 24,432. Braden, I know you got long there. Did you take profits there? Or are you still on this one in this trade?
Still long. I like how slow this selling price action is. I'm kind of just waiting for a buying retracement back to the 470s.
Right. 430 last trade there in the NASDAQ. And I have my eyes on this 200 moving average to the downside. Don't know if we get there, but it's 24,440, 24,411. Dakota, I know you're still short here. Here we are coming up on this 200 lot here. It's actually a 287 bid at 24,420 in the NASDAQ. Let's see if the sellers are convinced enough to take that out. In 287 contracts bid there, that is a passive buyer. We need to see some convinced sellers come in and take that out, or whoever that is changes their opinion and doesn't want that fill anymore. Maybe they pull the order. But 286 bid at 24,420. Not seeing so much size in the S&P. S&P is always going to be a thicker market, so anything over 500 usually sticks out. Not really seeing anything like that on the books right now.
24,420 in honor of our friend Eddie.
Shout out to Eddie Horn. Shout out to Eddie Horn. Chat, anyone in trades right now, let us know how your day is going so far. I saw a comment here. I'm trying to find it. Trader Dog says, Topstep got the best traders. No fake stuff, just pure traders. Love it. Trader Dog, I love that comment. And if you love what you see here, gotta like it. Hit that thumbs up button if you haven't done so already. We appreciate you being here. If you don't like live trading, I don't know why you're here. Nice trades by these guys so far.
Oh, yeah. Right back down. Every little bounce, we've been getting sold off here.
It's hard to buy with the opening range at the dead ass high.
NASDAQ down 0.4.
Seen some mix here. Got some traders short, same trade as Dakota here, taking a couple quick scalps long potentially. Some traders long gold, nice trading. Cato was down $1,000 and $1,005 back up to 568. That is a winning day if I've ever heard of one. Make sure you lock in some of those profits, but nice trading so far.
New session
300 now
lows.
on the. Did we tag that? NASDAQ trade 420s there?
Yeah, we're 420. I don't know about 420. 421 is a low day.
Yeah,
I'm seeing
trade. Just didn't take it out. There.
Okay, there we go. There we go. Now it's filled.
All right, we're getting ready for the take profit now. Jay, looking at these lower 410s. Let's see if we could do it here on a push lower. I'll go ahead and put my take profit down there. So I don't.
Yikes.
Is 6660 in the NASDAQ. Sorry, 6660 in the S&P. 24,400 22 last trade in the NASDAQ. Hoag, we were talking about that 200 moving average. I did not expect us to be testing it when we are right now, but it's at 24,411 currently. And this is, we said it during the opening call, right? You can expect range bound market, but you have to trade the market that is presented to you. And sometimes when you go in with an expectation, the market can surprise you. Gold surprised me, earlier this week with that rally we had on Monday. But here we are, 24,420s. That 200 lot looks like it did get filled.
Yeah, Jay, we've got the 200 session moving average on the 30-minute chart just below here in the NASDAQ as well. That's been a pretty decent move to the downside. 24,411. 200 session moving average.
Jack, you were going to say?
To say all the sectors are green in the S&P 500 besides consumer discretionary and technology. So there's your differentiator between the NASDAQ and the S&P there. NVIDIA is worth nearly twice as much as a percent of the NASDAQ. I think it's 8% or something like that of the S&P and 13 or 14% of the NASDAQ.
Everything green in the S&P so far, and that's why we see it holding up a little bit better, right? NASDAQ making new lows on the day, and the S&P holding up kind of right near where the house entry is right now. We're down about a point, but you got to trade the market that you're trading, and sometimes traders look at that correlation between the NASDAQ and the S&P. But for right now, NASDAQ tech is leading us lower. We see NVIDIA heavy right now, and that's that trade there. So nice trade, Dakota. I know you were looking for lower 400s. We got down to 415.75. Still holding on to that one?
Yeah, I was looking for these 411s, like this. We got to 416, so we came with a few points from where I'm looking to take profit. We'll see if we could break back down there. Yeah, this market goes all the way down, gets so close, and then now we're getting a 20-point bounce. We'll see. It's not over yet.
It's a big old rotation, repositioning ahead of the Fed. People taking risk out of the really high flying mega cap stocks. Russell's up 1% right now. As mentioned, when you look at the sectors that are up, they're sort of the given some love, consumer staples, energy, financials, healthcare, real estate, even. They love a lower interest rate. But I'm going to have to tap the window again real quick. And remember, say it's 100 times that interest rates are set on the open market. Here's the 10-year. We cut a half point in September of 2024. Where are you? All right. We cut in September. What happened to the 10-year rate? Went up. We cut in December. Went up. The long end of the curve does not need to go to the direction of what the Fed's funds rate is. So just be careful.
Be careful for sure. Speaking of rotation, I'm going to rotate out for just a second here. I'll be right back. But again, we got Dakota still short. Brady, you still holding out to that long?
Yeah, I'll update you real quick. 15 micros long at 430s.
Nice.
I really do like this slow selling here, and just, it is getting follow through, but there's attempts. I guess I keep getting lured into the attempts. But yeah, every bounce is getting faded, but we'll see. In 30s, stops at low a day.
There we go. Braden, 15 MNQ long. Dakota still holding on to the last of his runners.
Yeah, we're running to it. I might be hitting my take profit right here. Let's see if we could get it. Let's see if we can get it into these 17s. Take profit. Let's see if we get 12. 100 points.
Going for those 100-point bangers. Drip, drip, drip.
100 points. We got.
Well, you said it before it closed. You said it before it closed.
10% it.
It'd be like a 0.25%. I think we get there. There we go. There it is.
Oh, there
100
you go.
points.
I was going to say here.
100 points here in the NASDAQ.
Nice.
Man,
Nice.
what a great session. And I'm going to go ahead and I'm done for the day. One trade. One and done. Lock me out.
What's your P&L, Dakota?
$1,003 on micros.
Nice.
Nice. And you have
Good
the
job.
versatility to kind of scale out of that. Because you had 10 on
Yeah,
at one point, right?
correct. Yeah, that's probably the biggest the biggest thing about this trade was able to scale in and scale out. If it wasn't, I would have been chopped to pieces. We're almost down 0.5% here in the NASDAQ too.
Getting a little bouncy. I got the rock fight I'm looking for at this level in the ES. We'll see what happens.
Yeah, I'm gonna keep trying these longs. I'm long again at 420.
How many times?
15 micros.
All right. Oh, how we living in the oil trade?
They tried to get us, but we're still in it. We did not Lenny the stop at all, which was at 64.08. Got down to about 64.13, and now the buyers have come back in. So it's setting up for a neutral day. Both sides of the initial balance have traded extended, so we're really looking range bound in it. But as long as we haven't gotten stopped out, we're in it.
Reminder again, Hoag, where will you be at 1 o'clock today?
We're having a rager FOMC watch party. Party!
Yeah. Rager.
Did you?
Tony Kegs in the woods, 1 o'clock. Me, Andre. Yes, Andre is actually here. He's not in this morning, but he cannot keep himself from being there for the Fed. Andre, me, and Hoag will pump in the live meeting. Oh, not the live meeting. That's what Goolsby teased us with. The press conference, the questions, we'll have it all here.
There's no way
Somebody
Andre's
say
going to
party?
miss the party.
Party.
1 o'clock.
Hoag, did
All
you
party.
watch Cloudy with a Chance of Meatballs?
I have not. I've never watched that movie.
Okay. That's where I was wondering if that's where you got party from.
No. They got that from me.
Maybe they did.
Is it a good movie?
Oh,
Should I
right.
watch it?
It's a cartoon show for kids. It's funny. Jack, it sounds like you've seen it before.
I haven't yet. Haven't got.
Really?
My oldest son is still in the realm where I think he doesn't like human characters as much as like turtles or Pooh Bears.
I think we're all in that in that realm, right?
Oh yeah.
Nice trade. Look at this.
Yeah,
Great.
really nice trade. Hoag, man. Hoag, what is the price of that 200 moving average on the NASDAQ on the 30-minute?
24,411.11.
What is the low of the day? What is the low of the day so far? So far. Anything can happen, but man, 20-point bounce off that. That could be your one trade of the day. Sometimes traders ask, how do I catch the entire trend for the day? Like Dakota just did, right? Great trade there. But just looking at that 200 moving average, quick 20-point trade off of there, that could be one and done for the NASDAQ on the day. Seeing the S&P bounce from there a little bit as well, 66.58 in the S&P. Last trade here, 63.50. House count back in the profit on this trade. But man, what a level there. And I gotta give a shout out to Coach Paul. We're Coach Paul every day doing At the Buzzer. And that 200 moving average, I guarantee you, is a level that we're going to be talking about during the market recap today. Any of our buzzer beaters are watching right now, you guys know how important that level is. And a really nice bounce from there so far. So Braden, nice trade here. Dakota, nice out on your short.
Yeah, market could rally now. I'm out of my short. It doesn't matter.
It's like I'm out. I don't care what happens.
I'm such a jabroni for not adding.
You got a target upside, Jack, you're looking for?
We'll see how it goes. I mean, probably in the 70s.
All-time highs?
Yeah, maybe. We'll see how it gets up there. I always have stopping, but I leave the profit target. You never know what's going to happen. We could get a tweet.
Right. Just did see another spike of selling here in the S&P, about 1,000 contracts traded in a second there. It's kind of mixed, actually. 50% of that, 54% negative delta on that 1,000 contracts just traded there in a second. We saw one of those earlier, and it kind of led to a little bit of a sell-off here. So let's see what that means here. Go ahead, Jack.
You'll see a lot of activity around here because we're right at that 6,600 SPX, and
Right.
I am preparing myself for the possibility that I will end up scratching this trade at around this price at around 12:30.
Let's see what the 10 o'clock liquidity looks like here.
Hoag, we got 3 minutes before the top of the hour. Is that when we start to determine whether or not the auction is sustained or failed?
Yes. Yes. And I'm looking to see, sometimes there's timed orders, right? Orders that are timed to execute at specific times. And the hour and the half hour are big with that. Sometimes on this 10 o'clock time change, we'll see some liquidity come in, and it can be very telling, especially when you're trying to kind of decide whether you're looking at a failed downside auction or even a failed upside auction. We saw one of these a couple of weeks ago on a failed downside auction, and then we said, all right, that was information. Buyers have kind of taken over here, so I think a bunch of people actually got long on screen and had a decent trade. I think it was a long. It might have been a short. I don't know. Long, short, whatever. But yeah, we want to see this 30-minute bar close above the initial balance high. It looks like it might in the S&Ps. NASDAQ, of course, is having a little bit of a harder time holding above that IB low, 24,436.
420's last trade here in the NASDAQ. Seeing a little more size on the books here. About 70 contracts bid at 24,400 evens in the NASDAQ. We did fill, again, we saw some size, about 300 contracts at 420s. Those did get filled. Seeing a little bit more size down at 24,400 even. Big fat round number down there.
The sellers are 64.29, but they are certainly present.
Methodical. Yeah, I'm looking at a 3-minute chart here, Hoag, on the NASDAQ, and I don't see a candle close, a higher close on any of these candles, right? We've taken out highs. We haven't had a candle close above the high of a prior candle since 9 a.m. Eastern time. Slow and methodical. Braden, your average is 430 here. Is that right?
Oh, sorry. I forgot to mention I got out on the rejection of 436.
Gotcha.
I'm down 519 on the day.
Nice. Not too bad. Great risk management. Again, we've seen you in some decently sized positions, right? Some 15 micro positions, 500 down on the day. Saw some people commenting on your account balance there, and it is a small percentage of what the balance is, right? We don't pocket watch here, but that's great risk management. Some people are risking that same thing on a $2,000 drawdown, right? Where you have the room in your account to continue to take some shots, right? Some people, I saw some comments in the chat says, oh, he's chasing losses and things like that. This is what real trading looks like from what we're seeing from Braden here right now. And whether you agree with the trades or not, that's your opinion, right? You may have a setup that's telling you to short, but the one thing I think we can all agree with is the risk management that we're seeing right now. And still a lot of day left.
See, this makes me crazy. The NASDAQ is signaling a failed a successful downside auction. The S&Ps is signaling a failed downside auction.
Yeah. So buy one, sell the other.
Yeah.
One of them is going to work, or both of them don't work, depending on where your risk is, I guess.
Did not see a whole bunch of liquidity come in at 10 o'clock either. It just kind of happened and nobody seemed to care. So now those sellers are coming back in the NASDAQ.
Yes, they are 417 last trade there. And about 70 contracts bid at 24,400s. Let's see. Dakota, I stepped away for a second. Did I hear you say you locked it out for the day?
Yeah. I don't plan to trade the FOMC. I don't like trading FOMC. Last night I talked about it in slow markets. I holding more of a heavy cash position, wait for the dust to settle,
Okay.
wait for things to kind of get back to normal, then I'll get back in.
Gotcha.
But for the record, Hoag, I would never actually take the
No,
spread
I know.
trade that we were describing there
I know.
because like if that's for like mean reversion stuff. I'm not going to play a breakout in the NQES spread. That's
No.
wild. Just go trade Nvidia.
Or open.
I don't think opens in the S&P 500 yet. You gotta make some money for a couple quarters first.
You want some volatility in the trade. Ugh.
All the volumes
Yeah.
at the bottom here in the S&Ps.
Really quick, while we're waiting for this, I mentioned I do have a hardo of the day today. Maybe at some point I'll get an intro for this. For those not familiar, hardo of the day is a tweet or quote where somebody is showing extreme accomplishments in being a hard ass. Today is special. We talked about this story when it happened, but I hadn't seen the quote. And this is like rumor mill stuff because it is Politico it's from and reporting. But somebody did give their version of what Scott Bessent said to Bill Pulte when threatening to punch him. Let's go. Why the... Okay, I put in the blackouts here. Why the F are you talking about the president to me? F you, Bessent reportedly told Pulte. I'm going to punch you in your friggin' face. The conversation continued in the same vein. We can go outside. I'm going to effing beat your ass until the two men were finally separated. There's loads more glorious detail in the story. Ladies and gentlemen, Scott Bessent. That's hardo of the week. Maybe month.
Yeah, I mean that sounds like something I might say before I punch somebody in the face.
Seems like it.
How real do we think that quote was, Jack? Give us a percentage.
I think aspects of it are certainly real. I mean,
Okay.
Scott didn't exactly deny it. He kind of joked about it. And he seems, I mean, this is not completely, I didn't know that the Treasury Secretary had that dog in him, but like now we've had two examples of him threatening to go fisticuffs with powerful people in the government.
Yeah. I think sometimes we look at, some of these powerful people and we expect them to have maybe a little bit more decorum, if you will, when they talk to each other. But I find it to be exactly the opposite, at least in my experience, right? I worked for a couple of Fortune 500 companies and got to see some of their C-suite meetings. And there was just a bunch of F-bombs thrown around at each other. But then they always come to a conclusion at the end of it, right? I don't know if any punches were thrown in those meetings. I didn't get to see those, but hey, sometimes you get pretty passionate about what you're talking about, especially when there's a bunch of money and other things on the line.
Indeed. High stakes. Glued.
Continuing to see some selling here. New lows on the session in the NASDAQ, 24,409 last trade. Again, a 80 lot bid at 24,400 here. S&P 6659, testing new lows here as well. Let's take a look at gold. 37.18, not too much going on there. And gold, crude oil, pretty much flat right at the house count entry as well. NASDAQ continuing to sell. Dakota, you said it looks a little bit different than yesterday's price action, maybe more so channeling lower than that range we're in. See what happens at these 400s. Again, 80 bid at 24,400.
Mag 7 is all red but one. Apple.
Yeah, that was kind of the leading, like the breadcrumb this morning is what you just were saying. The Mag 7, the major stocks in NASDAQ were red. They were selling off, and the Nasdaq was bouncing, and that's what gave me that confidence to build into that short position. I like the shorts anyway to go test the lows, but yeah, same as yesterday, right? Where at the very open we seen that mix. I'm like, okay, I have the confidence to range trade because it doesn't look like we're going anywhere. Today was a little bit different. We seen the market start to sell off. Nasdaq was lagging just a little bit, and took that short.
24,404 new low of the day in the Nasdaq. S&P again still holding up pretty well, Jack. Like you said, most of the sectors there are green, besides tech, holding up pretty decently right now. Got the London.
I got long.
Okay.
I got long 15 MES this time, actually. Mainly because I can have that stop under the overnight low because we still haven't taken that. And once again, we'll see if I take profits pretty quick because once again, this market is selling, but there's plenty of opportunities to take retracement trades. We've taken low of day a series of times, only by a couple of points, just to get 10, 20 point moves back to the upside. So maybe don't look for a break of a higher high, but at least lock in some profits on a quick retracement or a pop. So I do like ES here though for more strength, just because we haven't taken the lows, overnight lows. Yeah. And this is something I meant to start trading MES a long time ago, but I just never remember to do it. I think I'd probably do better MES. I think a lot of traders probably do better MES over NQ.
Absolutely.
Yeah, someone was saying, how do you trade this? It doesn't move. I'm like, that's a feature, not a bug. It does. You're just used to the manic gyrations of the NQ.
That is a feature, not a bug. Yeah, a lot of traders, they jump right into, hey, I saw somebody trading on Twitter and they trade the Nasdaq or on Instagram. I need to be a Nasdaq trader as well, not realizing that they're trading probably the most volatile market that we have here to trade at Topstep. And for a beginner, you could, could give you a false sense of accomplishment. Maybe if you see some nice trades early. The Nasdaq can be a difficult market to trade. And a great market too, right? We see some of our coaches trade it even more. I know when we first started working with Coach Vince, he really wouldn't trade the Nasdaq at all. He trades it a little bit more now, but yeah, it can be difficult. We saw MP make the change earlier. He says, "I'm no longer a Nasdaq trader. I trade the S&P. The S&P is for the big boys." So,
yeah, I might go and block my NQ symbol, actually, my MNQ symbol, just to force myself to try to trade ES and kind of get
for the day. You're saying, or just in general?
Yeah, we'll do it for the day, and then like going forward also. I'd be open to doing that.
Interesting.
Yeah, just because, just because if I have the option, I think I would. Yeah, I think if I had the option, I'd rather trade NQ. So to force myself to not, just for a little trial, I'll block it, and then I'll block it the rest of the week.
I recommend traders all the time, if they're new to these markets and they ask me what market should I trade, I tell them test out the ES first.
Yeah. Test out the ES.
I believe there's certain days where it might benefit you to trade the NQ over the ES or the ES over the NQ. I think today, with the overnight lows holding on the ES and we're kind of closer to the highs of this range here, I kind of like to set up a little bit more on ES. Otherwise, I'd probably still trade NQ.
There we go. Braden long in the S&P now. House count long as well. Dakota flat locked up for the day. Nice trading there. 24,416 last trade in the Nasdaq. 66,6150 last trade in the S&P. Tilt kind of flattening out. 52% long in the S&P. 55% in the Nasdaq. Gold still holding that long tilt. Gold has not been under 60% tilt since the opening call. 66% long tilt in gold. 37.19 last trade over there. Crude oil pretty quiet right now. 64.20s last trade in crude. House count still in that trade, I believe, but
yeah,
kind of just chopping around here in crude.
Yep, still in it.
Just chopping around for now.
Well, I accidentally added up to 15. But I have
Okay.
10 MES now from 66.60.
Nice. Better average price here, 66.60s. Long 10 jack.
Yes.
Let's count long 10. Braden
Don't
long
mind
as
longs now.
well.
Yep, I don't
Okay,
mind
talk to me,
longs
Dakota.
here in
What
the
do you think?
Nasdaq. Yeah, this is we kind of seen a not so much a bottoming, but everything's starting to slow down. Now we're past the beginning of the New York Session Open. We have FOMC that's still yet to come. Now it's time. I do believe that we could start to see more of a range bound market going into FOMC.
Yeah, I see that potentially as well. We didn't get down to those 24,400s. 404 was the low there. Selling slowed down a little bit there. We got a VWAP from the New York session up at 24,468. So a little extended from there. We are about, I'm looking at a 5-minute chart, about 4 ATRs off of VWAP. So a little extension. Maybe we see a bounce here. Still channeling lower. I think. Did we finally get a 3-bar reversal here, Dakota? I'm looking at a 3-minute. On a 5-minute, depending on where this candle closed, this might be the first confirmed 3-bar reversal of the day to the upside.
Yeah, if we can close above 418, it would. Yeah, other than the
Right.
one that was 20 minutes at the open.
Right. Yeah, since this selling, this may be the first 3-bar reversal that we're getting.
Yeah, longs are valid now, I think.
I remember after COVID, sometimes the market would have kind of during that quantitative easing phase, we would have like kind of rallies into the interest rate announcement. We would have like rallies into the power hour. So
Right.
we haven't had a rate cut in a minute. That could be something that we see. Markets are just under all-time highs, so the upside target is there. It's been a slow and controlled sell-off. We're definitely not free falling today. There's been plenty of opportunities to trade it long, and we'll see.
We shall see. 66, 63 evens last trade in the S&P. Braden, your average. Remind me of your average price real quick.
660 ES MES
660.
15 micros. I'm going to hold this until the end of the fast market session here.
Nice. Okay, I like that. Good patience here. Switching over markets, looking at the S&P, holding up a little bit better, not taking out that overnight low. And one that you may be able to hold on to. I like the price action with the Nasdaq kind of agreeing with the S&P right now, right? Bouncing off of that low, 24,430 there. So let's see. I got a VWAP in the S&P here at 66.65. That is overnight VWAP, right? Full session.
Yeah.
Let's take a.
Yeah, we're pushing into it.
That was a good long, man. Good long. Yeah, this market's starting to turn around. Oh, if that was the low of the day so far before FOMC, that's going to be something else.
Yes, it will, Dakota. How's that Mag 7 looking? Anything turning around a little bit here?
Yeah, we're starting to see buyers step in. Showing in the Nasdaq, seeing buyers step in. Things just slowed down. I think it's time to be either range bound or find some buyers step. If I was long, I'd be looking for these mid 400s, 450s, 460s. Maybe we come back up into these 470s.
Hoag, can we start trusting Delta again?
No,
Next week.
Okay.
no.
Next
Yeah.
week.
Next week. Things will clear next week.
Next week for all of our volume traders. Yeah, I'm seeing negative Delta, but again, still rollover. So take that with a grain of salt. 24,427 in the Nasdaq last trade, 66.6275 in the S&P. Crude oil selling a little bit here, 64.11s last trade over there. Got a 52% long tilt in crude. Gold kind of just
Sorry,
hanging
Jay. I
out.
didn't mean to yell at you.
It's all good. All good. Maybe the nickname your kids gave you wasn't far off.
Yeah. Big mean daddy.
Right.
Mean day.
All good, but no Delta information maybe not as important right now.
Yeah. Man, I'm
Ezekiel
liking
says, "Can you
longs.
go over?" Yeah, go ahead, Dakota.
No, I'm just saying I'm really liking these longs. Tesla's really coming off those lows. We went from almost down 3% to head towards a green day. We are now only down to 3/4, pushing higher, and the rest of these, like Nvidia, coming off its lows. We're catching a nice bid now here in Nvidia. Same with Broadcom and the rest of these major stocks. We are finding the buyers.
There's that confirmed 3-bar on the 5-minute in the Nasdaq to the long side. Got a VWAP
Yeah,
up
ES
at.
is
Yeah, go ahead, Brandon.
ES is trying to have a red to green move on ES. We're down 0.04%. And we're pushing that VWAP as well. Everything looks good here.
Yeah, it's
I should
looking
just hit
pretty
the reverse
good.
button.
67.5 settlement price in the S&P. That'll be our green to red line in the sand, or red to green line in the sand. Nasdaq about 100 points, 90 points off of settlement, 24,522.25. Jack, nice ad there on that trade, bringing the average down and just getting right back into it. Power of micros, the power of micros.
Very nice.
Yeah. We'll see when I take it off.
Look how aggressive they are now.
Just hold it for all time eyes. I didn't say that. You did. 24,440 chat. Let us know. Are you guys still in trades? I saw some people, with some disagreement. I love to see that in the chat, right? It's like, no, this is a long. No, it's not. It's a short. We don't need to call each other idiots or anything like that, because we're always going to have disagreeing opinions. But anyone in trades right now, chat, let us know what you guys are looking at. Saw some traders calling for potential longs here.
Yeah, remember that every time you take a trade, someone's on the other side of it. They thought it was a good idea to sell when you bought. So that's an absolute rule of the futures market.
And you might even think that they're an idiot, but sometimes you're going to be that idiot, because we all get something wrong eventually. Coach Hoop saying a nice gap fill from the other day up in cattle. Let's see what cattle is doing right now. Haven't quoted any cattle prices today. Cattle's down 1.16%. So buy some steaks today. Put them in the freezer.
Yeah.
Go buy a cow.
Sell them when the price goes up. The Russell, our leading percentage mover to the upside right now, up 1.14%. We talked a little bit earlier about how the Russell and the companies that make up the Russell may be interest rate sensitive. Seeing our biggest percentage mover on the day out of all 36 markets that we have at Topstep, up 1.17% right now. Biggest percentage mover down to the downside. Soybean oil. I don't know how many traders or if any traders trade soybean oil at Topstep, but down 2% right now.
Well, if you take the Series 3, you'll see some questions about the crush.
Yep. Yes, you will. Other big movers, we got
Sweet.
platinum down 1.3%. Natural gas up about a full percent right now. There are different markets to trade, but right now we got our guys on screen trading the equities long the S&P currently. Dakota was short earlier, locked out for some profits, about $1,000 on the day. Call that a great day.
Yeah. If I wish I would have hit that reversal button. Those 412s were the low of the day, basically. We got down to what, 404? 404? And we're bouncing. Well, not low a day.
Again,
low a day until FOMC, maybe.
Right. So I'm looking now.
Then.
At the 3:30 Central Time candle. The low of it is 24,457. That was our low of the overnight session. Let's see if we go test that in the Nasdaq again. Like Braden was saying, and maybe why switching over to the S&P to take this long. That overnight low held pretty well. Hoag, we marked out that calendar for the we marked out that candle during the opening call, and 50% of it held. Right, we saw price trade lower, no volume under it, and holding up pretty well so far.
Okay, we are officially flat crude oil now. We just got our stop hit.
All right. About was like $120 worth of risk there, Hoag?
Yeah, I think it was like 125, right?
Not too bad. House 0 for 2 on the opening range trades. You heard JD say it this morning, right? A little bit of a down month on the opening range trades. And that's going to happen, right? Sometimes you trade a strategy and the market just doesn't facilitate that strategy working out. And that's why you manage
And
risk, right?
It's very
Yeah, it is.
streaky. You know, we couldn't buy an opening range trade in the equities. NASDAQ 2 days in a row. Opening range dead as high.
Yep. 64.04 last trade in crude oil there, right at overnight VWAP 64.05s. Kind of just hanging out here. A little bit of selling in crude on a higher time frame. Crude has just been very range bound. We talked about the potential to fall back into that range. Still has a lot of work to do to get there, but so far seeing some selling here in crude on the day.
All right, time to buy crude. Just kidding. Not financial advice.
Not financial advice.
Double down and add.
That's the old moron trade. Trade's going against you. You put more on.
Gold. I'm really curious to see what gold does after this Fed rate decision. We talked about that long consolidation that it was in. Gold was in.
Yeah.
It made an all-time high, and then it took almost half the year in that consolidation before it made a new high, and it really feels like that move is just getting started. I'm curious to see if we see any continuation after the rate decision today. Jack, want to get your opinion on some of the treasury products that we have here, right? We don't see many traders trading, the 10-year, the 30-year, and things like that. Are those charts that you would look at today for potential trades, just knowing that we have that rate decision coming up?
Well, I don't have them attached to this live account. There's been bond future erasure. Yeah, but I would only be trading them in spreads or a hedged way. They'll move a lot. I mean, there is, if I was looking for a longer swing trade, maybe if they seem more aggressive with the cuts, maybe looking for the front end of the yield curve to lower quicker than the back end, which could, as I mentioned, the yields could go up on a cut.
Okay.
I don't want to lull people into a false sense of security because yes, the bonds don't, if you're used to looking at an equity ladder, the bonds don't move very much, but they will during the Fed, right? They can move a lot and in ways I've seen, I mentioned this the other day, in the Operation Twist announcement way back in the day, I saw people get blown out of their daily loss limits on what I would consider to be insanely small size to do that because you trade a spread. The idea is they won't just go the opposite direction, and that's kind of what they did. So always be careful. They're all leveraged products.
Absolutely. Be careful indeed. Right. Braden so long, house count so long as well. We got up to that VWAP and looks like we rejected off of there for now. 66.66 in the S&P last trade here, 66.61.75. VWAP acting like Matumbo right now. Go ahead, Jack.
A little greedy there. I had an order to take half of this off just below that VWAP, and then I let it ride. But we're okay as long as we hold this 66.60, which we are going right back to right now. So
66.60 quarter last trade in the S&P. NASDAQ 24,417.5. We still have some bids here at 24,400. 61 bid now at 24,400 evens. Let's see if the NASDAQ wants to go take that out. I see James in the background. Is it time? Is it time, James? Give me a thumbs up if you're ready.
Yeah, give us something more than a head shrug. We can't really Maybe heads or tail of
maybe
James.
it's time. Thumbs up. Let's bring James in. Let's see if we can get these markets moving. I think he's here for an announcement. James, what do we have?
Thank you, Jay. Yes, hello everybody. Today is the day. Today's the day of the FOMC watch party here on TopstepTV. Got a lot of questions in chat about where can I watch it, when can I watch it. Well, I got great news for you. You can watch it right here on TopstepTV today at 1 p.m. Central. So we're kicking things off. The show begins. Come watch Jerome Powell with your favorite TV crew members. Andre, Hoag, and Jack are going to be here to break down everything that happens as we broadcast it live here on TopstepTV. So you don't need to go anywhere. Just hang around, grab a ham sandwich, and be here at 1 o'clock when we broadcast the FOMC meeting live. Also, later today at noon, 12 p.m. Central, Hoag is back. Hoag is back for group coaching with Hoag. Today, Hoag and JD are going to be sitting down for an hour and taking your questions. If you have any questions you would like to pose for Hoag or JD, we are going to drop a link in the chat now for you to submit your questions ahead of time. Then be back here today at 12 p.m. Central for group coaching with Hoag. We love this segment. We hope you're getting a lot of enjoyment and resources out of this segment. And if you have yet to tune in for one of these, I implore you to do so today. You can get all your trading answers or trading questions answered, and then we'll roll right into the FOMC watch party. Both things happen today on TopstepTV. There's nowhere else you want to be, so stick with us. Back to you, Jack.
Thank you very much, James. I was looking to see when I started saying the words there if I was on mute. I was not.
Nope. Have you ever paid a mute fee, Jack? Have you ever had to do one? I think
I put it on the books.
It's like Monopoly, right?
I tell you, it's been hard. I've been doing it more than usual lately just because I have fall allergies, and so I have a cough, so I'm constantly like muting and unmuting this.
Right. Yeah, I got my mute button on my mouse here, so I'm usually pretty quick with it, but every once in a while I forget. NASDAQ getting ready to potentially push the low here, 24,410 last trade, and the NASDAQ 404 is that low of the day. We got that 60 bid at 400 evens. Successful downside auction here.
Where are the buyers?
Yeah.
They're gone.
There would.
That was unexpected.
So it was 407's last trade here in the NASDAQ, 66.57.75 last trade in the S&P. Right in the house long right now, but ES may be looking for that overnight low now.
Yeah, are you getting out below the overnight low, Braden?
No, I kind of have the order right at the overnight low because I figure we test it, we'll probably break anyways. So
yeah,
it's right at the low.
Got a little bit above it just because I figure if it gets down there, it's gonna take out the low anyway.
Yeah, I don't see too much room to the downside.
We've got
enough that I would say I like towards
a nice megaphone pattern on the 5-minute in the S&Ps.
And the 15.
We're at a major level of support here in the NASDAQ. If we could get down to 400 even, like that's September 12th and September 15th. That was a major support and resistance that we broke through. So we're hovering right there.
So if we, what date was that, Dakota?
It's September 12th and September 15th.
Oh yeah.
Those are the high days.
So if you pull up a regular trading hour chart, if you switch your charts over to regular trading hours, there's a gap. Coach Paul was actually talking about this at the buzzer yesterday. There's that regular trading hour gap that is not filled, and right in that zone that you talk about, right, 24,418s down to 360s maybe.
Yeah, okay. I can see 370s. Yeah. I have a hard time for seeing us go fill it before FOMC though. I have a very time seeing that.
All right.
I mean, ACH, anything can happen.
Anything can happen for sure.
Google took a big hit the last 10 minutes.
Squeeze them.
Go ahead, Jack.
Google's just been on fire in the last month or so. I was just talking to the market. It doesn't really listen, but
sometimes.
Worth a try.
I guess it depends how you talk to the market, right? Do you get aggressive with it? It's like, come on, what are you doing? Or are you just like, sweet nothings to the
Yeah.
market? You say, please don't. Yeah, you know.
Just
How
more
do you
like
talk to it?
mumbling to myself.
Yeah, I hear you.
It's like kids. Kids never listen to me, so.
Let's see if we go take out this low. 24,411 last trade in the NASDAQ. Still a long tilt, 60% long tilt in the NASDAQ. 54% long in the S&P. Gold still holding this long tilt, 69% over there. Nice. And gold holding on to the highs of the New York session so far, 37.20 last trade over there in gold. Longs had a little quick opportunity there, but this is, Dakota, like you said, different price action than yesterday that we're seeing. Slightly channeling lower. Where do the buyers step in? Where do the buyers step in? We got the
this
London.
level once before. I was looking at that
Oh, we
half
did
percent down in NASDAQ. We're about there. That 0.5%.
London
Maybe we
closed,
can
kind of
go-
came and went, pretty uneventful. But London is closed now. Got a half an hour, about a half an hour left in fast markets here. Tom says, man, there are no buyers.
Well, it's getting late, guys. I've got to sign out for some recap wrap. Braden, Dakota, great trading today. And Jack, Jay, always a pleasure. Always a pleasure to be with all of you and all of you. We'll see you in a few minutes for the recap.
Sounds good, Hoag. You have a good one.
Excellent,
soon.
Hoag.
Take it easy.
We'll see you soon. Well, if we're saying, where are the buyers? There was that buyer at 24,420 right now. We don't know whether or not that person's buying to open a position, close a position, hedge a position, whatever it is. But there was some buying there at 24,420. If they were buying to open, we got to see whether or not there's more behind that, right? If not, we may continue to see these markets sell off. But I'm keeping an eye on that 24,420 price where we had those 300 contracts bid on the way down. Kind of a line in the sand, right? Long above that, short below it. And we're kind of testing it right now.
Yeah, so far we're defending these lows.
Defending the lows pretty much right at these guys' average right now, right around 660s here. Remember, today is
actually
Fed. Yeah, go ahead, Braden.
Sorry, Jay. I was going to say, adding to that comment, there's actually a lot of buying. Like it's such controlled. There's actually a lot of buying. That's what's making it so difficult. It's almost like a bull trap in that sense. There's actually a lot of buying. Like we'll take low of day by 5 or 10 points. The issue is not so much that we can't find buyers on this low day break. It's that they become exhausted when it peaks. They come immediately exhausted, and sellers take it all the way back down. But like we'll bleed through low a day by a handful of points, get 20, 30 point retracement to the upside, and then it's just like heavy selling again. So that's really the issue here. It's like a staple bull trap setup.
Yeah, that's a great point, right? Because if there really was no buying, then we just see a liquidation move and any of this selling. Now we're talking about, Dakota, like you said before, with the Mag 7 being this negative, right? Most of the Mag 7 being negative, this is probably a liquidation day if this is not Fed day, right? Where we're seeing, 1% down move, 1.5% down move. So someone is coming in to buy this. Maybe they're buying to close their shorts. Who knows? We can think of hypotheticals here, but someone's on the bid, or maybe just taking some profits, and that's why we're not seeing that any of that buying gain any traction yet either, right? Because if I'm buying to close a position, I don't necessarily need this market to continue going higher. But as a seller, I mean, let's think if you're a seller from 24,500s in the NASDAQ, and we don't push 400s. Dakota, we saw you do it, right? You start to scale out of that position, which makes you a buyer, where we're not, maybe there's not that much conviction to the downside to hold on to these trades, at least full position wise. So great point there, Braden. Hugh says he's fighting the trend. It would have been easier to stay short. Do we still have that Hindsight Capital link?
That's you.
Is that still out there somewhere in the internet? Insightcapital.com.
Well, no, you could
Yeah,
have
go ahead,
traded
Brandon.
this market long if you're executing on your exits well and you're not. Once again, I mentioned it at the beginning of the session, but I've ignored my own advice not to marry anything today. Just a downward channel, but once again, there's been. I mean, if you buy low of day by 5-10 points, you could hold it for 20-30 points, and if you're cutting it, great. I've been in almost every trade I've been in today. I've realized over $400 or $500 just looking for too much continuation, and we're in a downward channel. And I need to realize that.
It's a great point.
Lock in profits. Yeah, you got lock in profits.
Base hits.
Right, we've seen a couple of 20-point bounces in the Nasdaq, right? So there is it easier to short here? In hindsight, sure, but there are definitely trades, like you're saying, to the upside. It's not that liquidation sell-off, so just got to manage expectations. Okay. Thought I missed that, but we're good for now. Dakota looks sad. Dakota looks happy to me. I don't know what you're talking about.
Damn, it's like he's neutral Dakota. Well, we got
What's
all
there to
this
be
like
sad
rotation
about?
going on. People are talking about you know, the lower interest rates better for the Russell and stuff. I'm like, awesome, but why today? Right? I mean, we've had like a 96% chance of a quarter point cut for a while.
Right.
Like,
Seeing the
unless
Russell
something
pull off.
changes dramatically with what Powell says today, it's like seems pretty priced in. Anyway, go ahead, Jay.
Right. No, I was just going to say, speaking of the Russell, we saw it pull back off that highs. It was above a percent, kind of rejected right at that major level, 2450s in the Russell. The Russell is trading at highs of the year. So if there is a market to play catch up and take out all-time highs, maybe it's the Russell. But we also see this, market a lot of times end the year pretty much flat. But we are trading highs of the year in the Russell right now. Still about 5% off the all-time high. So still has a little bit of work to do.
It is, but one of my favorite charts. One second, let me clean this up a little. And we'll leave it on the daily here. I mean, you look at the Russell, it's been a long time for this to come to all-time highs because its all-time high, it hasn't even hit since back in 2021.
Yep. Yeah.
Getting close to
5
it again.
years.
It's been a tough couple of years for the Russell.
Tick value on the Russell, I think it's 5 points, if I'm not mistaken. I think it's 5 points.
I should have just bought Open Door.
You did.
What is it trading now, Dakota?
It just keeps going up, man. And if we break through this, I mean, we're up, like I said, almost 20% from yesterday. Yeah, I did. I made 10% yesterday, but still.
Yeah. Whoever caught me, Dakota, on Friday to sell a few calls, I got out lucky. I don't have any position open, and I'm not gonna touch it for now because it's got a low enough market cap that I don't want to play with shorts with.
I know. I wouldn't play with shorts on it. It's just one where all I've been seeing on social media was everyone just buying Open Door. It's like that GameStop feeling where it's like no one cares about what's going on. We just buy it. And don't fight the trend when it comes to that. Next thing I know, next week, Open Door is going to be up at $20 a share. Ooh, that'd be insane.
Yeah. Let me show you another chart.
It does look like it is ready to break out here.
I know.
Interesting.
I'll share it.
Well, look at this. I just wanted to show you. This is another one. I haven't seen this much like internet bull energy behind something since Figma's IPO. And here's the daily chart of Figma since its IPO. It was supposed to be sold somewhere in the 30s or whatever else. Went up to 143. It's now trading $54 just not too long later, a month or so. So,
wow.
Yeah, if you see a bubble, run to it. But where you only make money once you sell something.
Yep. Speaking
Yeah,
of selling,
there's
seeing a
the
little bit of selling continue to come in here in the NASDAQ. Are we going to go take out this low? 407's last trade here. 404 is the low of the day. Again, about 60 contracts, 70 contracts bid at 24,400 evens. Kind of looks like the NASDAQ is a magnet towards that whole number level. We'll see what the market's reaction is there.
let's see these 390s.
390s you're looking for, Dakota?
Yeah, just let's. I wouldn't mind a little run to the 90s and bounce. Seems like kind of just going sideways now.
Seeing a lot of red on the quote board. I got the full 36 markets we have with Topstep accounts, and 2/3 of that quote board are red. Seeing some of the currencies red. Micro Bitcoin's down about 1% right now. Of course, the equities are red, with the Nasdaq being under settlement, down about 0.5% right now. The ags are red. Everything. A lot of red here on the quote board.
VIX is
Sell
green.
it all today.
Briscoe.
VIX is green, and the Russell's green.
Yep.
Russell's green, 1%. Russell and the Dow.
Wrestling now and open. Open door technology.
Something to buy. Always something to buy, right, Dakota? Buy the dip.
There's always a bull market somewhere.
Dakota, can you explain what they do as a company?
No idea. Absolutely no idea what they do.
New lows. New lows in the Nasdaq. Yeah, what is Open Door? Is it a real estate company? Is that right?
Yeah.
No.
Yeah.
Are they really?
It's the future. It can't just be a real estate company because then it would trade at a real estate valuation. It's the future of real estate, Jay. And you're in at the
Future
bottom
of real
level,
estate.
not financial advice.
Sounds like Carvana for homes. Sell your house fast for cash. We buy homes for cash and without real estate agents. Open Door. Go. Nasdaq made new lows there. Did trade under those 400s. 24,398 low of the day now. Seeing a little bit of a bounce there, back up 10 points from that low. 24,409 last trade here in the Nasdaq. Still a long tilt, 53% long. I guess you could call that a flat tilt. 70% long in the gold tilt. It's probably the one to pay attention to. Dakota, we got down to 390-ish, right? This is the NASDAQ, so it's a zone. 398 and seeing a little bit of a bounce. Was that enough of a flush?
Yes.
You were
That's
looking
all I was
for?
wanting to see. That's all I was
There you
wanting
go.
to see. It's just something simple like that. Open Door, they should sell their house for Bitcoin. Then they might be onto something.
Start a
There
treasury,
you go.
like house coin or something like that.
Yeah, we ran the what? We just barely peaked below 400 here in the NASDAQ.
Yep.
And that's what I was looking for.
Peak below, made a low 398, up about 20 points off of that low right now. 15 points. It's okay.
What
We can
happened
round up. It's the NASDAQ.
Yesterday, what did we see? It was like something 99. Maybe it was the day before.
Right
That
under
might be.
500s yesterday. It was right
Yeah.
under 500s yesterday. I think we got down to 497, and then saw the bounce from there. So let's see here in the Nasdaq again. We got house account Braden both long, 66.60 in the S&P, 61 last trade here. Really loving the conviction on this trade, guys. Right, holding on to it. Just really not seeing the S&P push lower. The Nasdaq's going to do what it does, but there's a buyer somewhere.
Yeah, that's awesome. I like to see that. I had to stop. I had my risk at overnight lows. If you're trading NQ right there, I mean, you could kind of float a stop somewhere in the 380s, 390s, but I guess that's a bit of an assumption that we're not just going to flush away. Although ES, you can actually have a hard stop at a valid price point where we held last night's lows. So I like that. Because if you try to take
There we
NQ
go.
long, stops, you would have gotten taken out for sure.
Nasdaq just does not love to respect levels as much as the S&P does, and that's what makes it such a difficult market to trade. Right, you can identify a price in the Nasdaq, and you're not wrong. You just may be wrong by 40 points, which we could get a 40-point candle in 30 seconds. Right, so
yeah, 40 points is about your stop loss.
Right.
Not Doom stop loss.
Yeah, Doom trades with a pretty wide stop loss, but again, a function of trading micros, right? Doom would not be able to trade with that stop loss that he does trading minis at all, right? Account balance would be
Exactly.
in the negative.
Small stops, small size, wide stops.
Nope, that is motto. 398 made a low there in the Nasdaq. Saw a little bit of a bounce, trading 24,412s right now.
Chop now.
Yeah.
Chop. That's what this is
Yep.
kind of what I was afraid of. We made the move. Now we start to see this kind of price action going into FOMC.
Yep. Yeah, Corey, you're not wrong in the Nasdaq. You just needed another 40 points. Just need a little bit more space. That is how the
Never
Nasdaq
wrong.
trades. Never wrong,
Never
just
wrong.
early.
Always early. Story of a trader.
So here we go, back to Braden's point of there being buyers in this market, right? We just saw it right below 400s, nice 30-point pop. The question is, do they sustain, right? Do they gain any traction? And they haven't so far. So it's almost like, the way I'm kind of reading this is that this buying is just profit taking. I'm holding onto a short. We get to a level, makes sense that we're seeing that bounce at that major level, 24,400. Just not enough sustained buying to see it continue pushing for now, at least, right? So there are longs. That was a 30-point move in the Nasdaq. You could make something out of that. Just having the reasonable expectation, right? If I'm looking for the 100-point trade in the Nasdaq or back up to the highs, I probably have to look at a different time frame, right? Looking at a higher time frame. We heard Braden say with his trade, planning on just holding this one, right? Until at least the end of fast markets, which is coming up in a couple of minutes here.
Yeah, I feel like I'm in the twilight zone or something. I'm just like long. It's like the same position as yesterday.
Same
This time we got
exactly.
Powell speaking, so we won't hold it all day. I don't think.
Right.
We could be in the same price action as yesterday now.
You think so, Dakota? We're in that range now?
I'm gonna lean towards yes. We never know, but I'm gonna lean towards yes, that we're gonna see more similar price action now going forward, that similar to what we seen yesterday.
Where did you get out of the open door, Dakota?
Yes, I traded it yesterday. Like I could tell you right here. Second. I bought it
before
at.
we end fast markets. Let's unless it's too late, James, you let me know if we're too late here. If we want to bring in the news now, let's bring it in now. Let's see if we can get these markets to bounce on some James news. We'll come right back to these charts and Dakota open trade.
45.
Don't worry, guys. I'll make this short and simple, but I know this is the information that you need to know to make sure that your Wednesday is complete. For instance, did you know here in Chicago, we're slowly sinking? That's right. Chicago joins New York, Houston, Dallas, and Fort Worth as the cities that are slowly sinking. How fast? About 1/10 of an inch per year here in Chicago. And that's due to a lot of different things, but mostly groundwater extraction, a very boring but very important topic of conversation here in the city. All you need to know about it is we're taking a lot of water out of the ground. We're not putting a lot back in. And that is slowly making us sink over time. Jack, do you feel like we're going down?
I can feel it in my bones.
I feel every day I wake up.
Swamp, right?
We're built on swampland. I can't believe anyone's surprised about this. You take the water out of the swamp, you literally drain it, and it goes down. So
Can we bet on
we'll
it?
check back in this story in 100 to 120 years, and we'll see how we're doing here in Chicago. See if we can see the ground level any further. Next, a story out of South Korea. What do you guys think about this? Is it a crime to insult a virtual idol? The court system says yes. What you see in the picture there are 5 digital avatars representing the digital band Plave. These are 5 real performers using motion cap technology to broadcast a fictional character. So the actual performers, you don't know their real names. You don't know what they actually look like. All you know are these virtual performers. Well, one commentator on X decided he didn't like it, and he let his opinion known. Well, as one does when you let your opinion known on the internet, you are sued. And when you are sued, Sometimes it does not go in your way. And in this case, they found the guy to be his derogatory comment posted on X in July 2024 targeted the virtual avatars representing the group members, and the court recognized the real people behind these digital characters and upheld their claim for damages. The man online was ordered to pay $6.5 million. That's $4,700 per person.
Whoa.
For his derogatory comments on X towards this digital band. Kind of raises questions as to what counts as derogatory statements anymore. If I say, I hate Bugs Bunny, does the guy who voices Bugs Bunny get to sue me? I don't know.
Wait.
Hey, Bugs, you're old and tired out, and I hate you. What's up, Doc? Go take a hike. My name is James Harden.
Is that U.S. dollars or is that
that's
just
U.S.
local?
dollars. I did the math for people listening. I don't know what it is in the local currency exactly, but yeah, USD.
Wow.
What world are we
And,
living in?
What a crazy
Pretty sure
world.
Mel
You wanna
Blanc
even-
has passed away, so you're good on Bugs Bunny, but be careful otherwise.
Well, there's a new guy. My last story. Back in July, we talked about this. Fire Festival was being sold on eBay, and it actually closed out on eBay for a whopping $245,000. Quoted by Billy McFarland, it says, "Damn, that sucks. It's so low." I guess he was hoping to sell it for more than $245,000. Well, the buyer back in July never identified themselves until today. Today, let's go to the next image. Popular downloading platform LimeWire is the one who has acquired Fire Festival. That's right, LimeWire, the thing that destroyed more family computers growing up in my youth than anything else. And LimeWire, tongue-in-cheekly, even said, "What could possibly go wrong?" after buying the Fire Festival from Billy McFarland. LimeWire themselves got bought out in 2022 after they were shut down for, copyright violations. I can't imagine. I think most songs I ever owned on my iPod were downloaded from LimeWire in a good couple of years there. And they were actually brought back in 2022 by Australian brothers and turned it into an NFT service. So now we have two reanimated corpses dancing around, selling NFTs and putting on cool parties at the beach.
Wow.
Do we?
Yeah.
Are
I can't wait
these
for
like
Fire
stupid
Festival 3.
purchases? Are we considering these when we talk about consumer spending is up? Like, why are people buying this shit?
When we talk about consumer spending, we're talking about Fire Festival 3. And you can bet the Top Step TV crew will all have the VIP passes eating cheese on bread like true winners.
Hey, at least that might have some sentimental value. More than a duct taped banana on a wall.
Oh, come on. I paid so much money for that. Anyway, that's all I got. I know we're closing in fast markets. FOMC day, baby. Let's go. I'll see you guys later on.
Thanks, James.
To answer your question, Jack.
Yes.
I sold open at $10.45 yesterday.
Well, it's 10:30 right now, so it's your chance to get back in.
Nope. No, I'm not going to touch it.
Sorry, I was just getting nostalgic about LimeWire on like a gateway PC. Those were good times.
And how many versions of a song did you have to go through to get away from that Bill Clinton clip? If you know, you know.
Yeah, you never know. You never knew what you got.
Right. Till you played the song. All right. We are testing the lows here in the NASDAQ. Last trade, 24,404. Low of the day, 24,398. But we are coming to the end of fast markets here. It's been a good one so far. We got some market movement, right? We got some market movement channeling to the downside. Dakota taking some shorts. Braden trading on both sides of the market. We got Braden and the house account in longs in the S&P right now. Braden, we'll go to you first. How do you approach the rest of your day with this trade and going forward?
Yeah, we're still in a downward channel. We're at the lows of it, so kind of still expecting a bounce at this point. Optimistic leading into FOMC, but probably try to limit risk the closer we get to that. And yeah, I still like the long idea. It's just very slow market, but we'll see. I'm just going to keep this long on, and I guess I'll keep you all updated on that.
Awesome stuff. Thank you for that, Braden. Coach Dakota, we're going to see you back on. Jack, we're going to see you guys back on as well. Jack, keep us updated on this trade. Anything you guys want to say before we head into a break and to Hoag for the morning recap?
Will do. We're at exactly scratch right now, so I'll probably be in this until FOMC would be my guess. But yeah, good
Awesome
stuff, Jay.
stuff. Good stuff to all of you guys as well. I am trying to buy myself some time here so I can pull up the schedule. We got Hoag coming up with the morning recap. Hoag coming up with morning recap. After that, we have trade with Topstep. That is going to be JD, John London, and Coach Hoop. After that, Hoag and JD for group coaching. Make sure you get your questions in there for group coaching. And then, of course, the FOMC watch party, Andre, Hoag, and Jack. Wall-to-wall coverage of the Fed rate decision and Powell's speech. And to wrap it up for the day, Power Hour, Andre, Dakota, and Jack. So a lot more Jack on Topstep TV. And if you don't like that, I don't know why you're here, but hit that thumbs up button either way. We appreciate you here. This is Topstep TV. Let's go.
With our new profile management system, you can easily update your personal information and your account preferences so that everything runs smoothly on Topstep X, and we will call you the right name when you end up on the big board, perhaps.
All right, it is time for the morning recap. As always, we are hoping you are all positive on the day. FOMC day. Don't forget about the FOMC watch party. At 1 o'clock today. So 0 for 2 again today on the opening range trades. You guys are voting for the 5-minute opening range trade, and we do appreciate you participating in that. Let's take a quick look, starting with the gold trade this morning. What was the context? Well, we had some pretty considerable overnight inventory to the short side. We had a new all-time high during the regular trading hours yesterday. The market has been kind of coming off ever since, but I think what we ran into today was a little bit of a sweep below the opening range, and then overnight inventory just kind of coming right back towards settlement. Haven't hit there yet. Settlement 37.2510. So going to a shorter time frame now to take a closer look at the opening range trade. Market got us short, broke below the 5-minute opening range, hitting our stop to get short. 5 micro gold, 37.0510. And it wasn't very long until we got stopped out at 37.0830, $175 loss. And the market has been basically rallying back towards settlement, eating up all of that overnight inventory shorts from last night. Take a look at crude oil now. We just got stopped out not too long ago on this one. And I wasn't really that much of a big fan for this one. I'm going to take this box off of here to make things a little bit more clear. But again, on the 30-minute chart, we broke out above the weekly kickoff high, $64 yesterday, and we started a trend day to the upside. The market really opened in the center of that range, inside range, inside value. Wasn't really a very big fan of taking this trade today, but it is a mechanical trade we take every day, and we did end up getting stopped out on a loss on this. We held this into the EIA petroleum status report. So, and it was a boost in inventories, which should push price lower, as we all know. Crude oil doesn't always follow suit with that. So we stayed in the trade. The 5-minute opening range breakout got us long 5 MCL, crude oil, micro 64.32. And then we did have some price action to the upside. Now, if you remember during opening call, we were looking at a little bit of overnight inventory to the short side. And basically, all we did was completely take out all of those overnight shorts. We traded basically right back to settlement. Jay had a great level up here at 64.5. He liked that level to look for possible targets, maybe even a short, and it turned out to really be the best trade location of the day. The market rotated lower, took out our stop, right back to $64. $64 weekly kickoff high, finding buyers back in that level and continuing to push to the upside. Wouldn't surprise me if we saw a little bit of continuation to the upside. Why? Well, because of course there was a boost in inventory. Crude oil has a tendency to do the opposite of what you think it's going to do on EIA day. You know, if there's a boost, you'd think it would be going lower. It did for a period of time, but has a nice recovery. We've traded both sides of the initial balance, really turning into more of a neutral day. But it wouldn't surprise me to see this market maybe find some more legs to the upside, especially with the advent of the weekly kickoff high turning into support after being resistant back here on the 12th. Of course, none of this is financial advice. Take your own trades. Let's take a look at the S&Ps. We've had some trades on in the house account for quite some time. The average for the house position is 66.60. We're long 10 micro ES, right basically at the initial balance low. We did leave a failed downside auction below that level, and we're really just kind of finding it magnetic right now. Though we know that the FOMC release is coming out here in this afternoon. Markets have really just kind of fallen into kind of a range. I'm a little bit surprised. Let's take a look at the context in this. So we've got overnight inventory a little bit to the short side. The market opened basically in the range and in value. S&Ps took a look higher initially, not leaving the opening range at the dead ass high. NASDAQ left the opening range at the dead ass high. We looked both sides of the opening range in the S&Ps, which makes sense to me. Where we opened in range and in value, suggesting maybe we find better trade locations as the day goes on. But with some NASDAQ stocks kind of hitting the skids, NVIDIA being one of them, eventually the NASDAQ seems to have won. Now, we did have the failed downside auction here. We did not have a failed downside auction in the NASDAQ. As a matter of fact, that downside auction is still intact in short time frame. So House and Braden, both long. House long 10 MES, Braden long 15 MES. Braden's stop is just below the overnight low down here. I would probably say about 66.53 House account stop is a little bit tighter than that, but we're just not really seeing any reaction here at the initial balance low. Get the feeling that this market is likely going to kind of range here in this area for the rest of the day. We've got a tasty little megaphone pattern going on here, which makes me crazy. And we're really just kind of barcoding both sides of the initial balance. The longs are valid, folks. I mean, the longs are valid. We were looking at this 30-minute chart. We did look below the 200 session moving average, showing some rejection down below that level. And we're kind of back inside the initial balance now. I'd like to see this market turn around and go check the high of the initial balance, 66.75, but I don't get to choose that, do I? Trade what you see. Take a look at the NASDAQ. Trade of the day, Dakota, So again, looking back at context, the market opened at low of value and rejected value from yesterday right away. No real overnight inventory, but the sellers started coming after the NASDAQ right away. Again, the opening range is the dead ass high of the regular trading hour session. That's usually going to tell me I better start looking for shorts, and nothing could have been more true than that. Let's take a look at the 5-minute. We'll take a look at the trade of the day here from Dakota. And, Braden was looking for longs for the better part of the morning, and almost all of the longs that he took were in profit at some point. He managed the risk on those trades, very, very, very well. I mean, by the time he started kind of looking at that trade in the ES, he only lost about $519, and he took several trades to the long side. Now I'm going 1, 2, 3, 4, 5 trades in the NASDAQ to the long side. And again, almost, I think all of those were at a decent profit, especially in a kind of a contrary move at some point. So he did a very good job of managing those trades. And again, he's still long the S&Ps right now. But the trade of the day was taken by Dakota. Now, Dakota was looking for shorts. He started selling right around, I don't know, 24.40, 490. He got his best sales off at 24.510, right up here, 510, so to 490. So his average of all of them was probably right around 24.500. And he started peeling them off. He had 10 micros on. Started peeling them off in different levels here. Now I can kind of go through 494, 485, 456. And he kind of left his last little runner on, and he was looking to take 100 points on this trade. And with his average at 24.510, his best sale was obviously going to be above that. And he did. He took 100 points on this downside move, right down to 24.412. Locked it up for the day, up $1,000. Great trade. Braden, again, very good risk manager, a very good trader. I have all the confidence in the world that by the end of the day, Braden is going to end up looking real good. On that note, why don't we take a look at today's quotable quote for a little bit of inspiration. All right. Progress is not achieved by luck or accident, but by working on yourself daily. Epictetus reminds us of that. And that is so true when it comes to pretty much anything. Anything that you are trying to improve on, work on it daily. You can't just stick the book under your pillow and expect to read it while you're sleeping. It takes work. So keep doing the work. Always trade for tomorrow. And just take a little step forward every day. And by the time you know it, you're going to get there. You're going to get there. So coming up next is Trade with Topstep. We got John London back with us for Trade with Topstep. JD and Hoop are going to be joining him. Looking forward to that. And as always, folks, this is Topstep TV. Let's go.
Good morning, friends and traders. Welcome back to Topstep TV. It is time to trade with Topstep. Right in the middle, we've got Texas' favorite son, Mr. John London, back with us. He's trading up some MNQ. Over there on the right, the other bookend, we got Coach Hoop, head coach of the Pit Raiders, Topstep VIP. John London, how are we feeling today?
Oh, it's a scary day, I think, for markets. NASDAQ's down. I'm trying to be brave and go the other way. I've got a tiny little position now at 3 micros long. I think my thesis here is that sometimes we move really big in one direction leading into the FOMC, and then we rebound a little bit closer to it or sometimes afterwards. But I think it's a big day. I'm trading small. Big FOMC, and we'll see what the economic projections look like moving forward. But an interesting day for sure.
Yep. It is Fed Day, folks. If you're just joining us, we've got that FOMC announcement coming out at 1 o'clock p.m. Central Time, followed by the Fed Chairman press conference at 1:30 p.m. Central Time. We're going to have wall-to-wall coverage right here on Topstep TV. We'll be piping in as much as we can for you. We're going to be listening to that Q&A, Fed Chairman Powell's comments, and then his Q&A afterwards. We'll have that live here on Topstep TV. It's a watch party, folks. Make sure you got plenty of popcorn ready. Coach Hoop, what's happening in your world today? Tell us everything.
Traded some gold overnight. I was actually on with Aaron Trades for a little bit, and then I gotta get to bed because I got to get up early. So, we could talk about it a little bit later, JD. I kind of dropped you a message there. I kind of built off of something that Coach Vince was talking about trying to revive an account, and I'll call it sheckling my way back. And I did a little bit
sheckling your way.
Just some one last micro gold. And then, I've heard John say you kind of build that cushion up, and then you can, you widen it out a little bit, and took a couple cattle trades, and I can get them to a little later. But yeah, it's Fed days just can be, after about another hour can be pretty wicked. So I'm with John, small and patient, and just watch the party, right?
Yep, for sure. Right. For those of you in the chat that didn't know, Coach Hoop loves to lead by example. He's a VIP coach. He opened up a 100K trading combine on his own to trade along with his team. Is that the account you're talking about, chipping away at?
Actually, one of mine, I shared this before the other day, when I was trading overnight with Aaron Trades and taking some gold. We always forget that I have a trade limit, and it kicks me out for the night. So I got locked out. I was up $200, but it's the best thing I've ever put in, and that's the one feature I love about Topstep F is my favorite, is that and once again, when you scale in and scale out micros, yes, it's like Dakota had 80 trades up there. Well, it's not 80 trades. If you scale in, scale out in micros, it might only be 7 trades, right? Right. But I just know my weakness, and it locked me out. And then I went to one of my 50Ks that was, I think we talked about on life support, and just, kind of, like I said, shackled my way out. And I'm up on that one, $800 on the day. So
nice. That's a good day.
Yeah.
Jab, 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 brick by brick. Mm-hmm. That's how you build a house. All right, guys, let's check in the markets real quick. I'm going to take a look at the tilt real fast. We got 53% long in the ES, 61% long in the NQ, 57% long in the crude, and 62% long in gold right now. Things are going a little bit flat, kind of sideways. We heard Hoag talking about it just now. During the morning recap, he's looking for just some barcoding going into the Fed announcement, and I think that's what everybody's looking for. That's the basis of John London's trade right now, just playing the range until it's time to not play the range anymore.
Sure. Yeah, you got to keep it small today, guys. It's the summary of economic projections today is going to influence a lot. I think last time they thought we'd get 2 cuts for the rest of this year, so when that comes out at 2, we might see more volatility than like last time. It happens every 6 weeks or every other meeting. So that might push markets in one way at 2 o'clock. But leading into them, I think just small range-bound trades. We're really down on the last few hours, so I think the long side makes a little bit more sense. I usually try to go with the trend But I think right before FOMC with big extension on the downside, long makes a little bit more sense. But, maybe I'll eat my words. We'll see.
We'll see. We'll see. What do you think a bombshell looks like for this Fed meeting, or this Fed announcement?
If
we
we
talking about a
pause,
25 basis point? If we pause, what about a 50
Yeah.
basis point cut? What does that do?
I think that could go either way. I think 50 could induce a panic. Like you never know how people are going to respond to a cut. A lot of the time, it's buy the rumor, sell the news. So we actually move up in anticipation the weeks preceding it, and then after we announce the cut, we actually correct a little bit to the downside. But if we do 50, we could go either way, but it could cause a panic. People might be worried they're reactionary instead of proactive with rate cuts and fear recessions, stuff like that.
Mm-hmm.
And JD, you said it before this morning, plus we got Trump going to give his 2 cents after Powell speaks too. So you got that little nugget hanging out there, which
I anticipate.
I just put it this way.
Yeah, I anticipate President Trump starting to chirp as soon as that announcement hits the tape at 1 o'clock Central Time.
100%.
He'll be talking. He'll be posting on social all the way up until he hits the podium and gets the microphone and the camera in front of his face. I know he's going to have something to say. I made a joke this morning about him kicking down the door to the Fed meeting and demanding a 50 basis point cut. Would that be breaking and entering? I don't know. Can you arrest a president for breaking and entering into a Fed meeting? These are jokes, guys. These are jokes.
Yeah.
But he's got something to say. The markets have priced in a 25 basis point cut. Everybody's expecting it. But Trump is going to say it's not enough if it's only 25. Or will he say more?
Yep.
Does he want a full percentage point cut? I don't know. Boomer Brian
sure he
says
does.
You can't arrest him for anything.
Yeah. I'm sure he wants 100 basis point, but yeah.
But yeah, it's gone flat. We're down back towards the lows in the ES. Regular trading hours low. We just printed a new one. We went down to 66.58.75 in the minis. I'm looking at a 15-minute chart. Let's go back down to a 5-minute.
NVIDIA news overnight kind of started that whole thing on the NQ, didn't it, John? With them China not being able that kind of just seemed to kickstart this thing.
Sure.
It did recover a little bit after that announcement. It was down, like 2.5% overnight. Then it popped back up a 1.5. Where's it at now? Where's my watch list?
NVIDIA is 169.80.
It's been breaking down, yeah.
Mm-hmm.
Yes, news wasn't good for NVIDIA.
No.
Yeah.
No, not at all.
No. It's kind of a response to us, though. We had export restrictions there earlier this year, and so they're kind of responding to us about it. But NVIDIA's been flat for months, and it moves the Nasdaq, it moves the E-mini, S&P E-mini as well. So it's just been having a tough couple months. It's been sideways, and now it's starting to break down. So I watch it a lot to see if I want to take some trades, but it's weak today. It's under 170. I think that's like a big milestone area for it.
I think the VIX is the best buy around right now, if you're going to ask me. That's the one that I think, I think it's cheap. It's 16.
Yeah, I think that makes sense.
September and the VIX at 16. I just, JD, and John, this time of year, volatility's coming.
Sure.
And when we're at all-time highs, it's pretty easy for it to come pretty fast.
Yeah. So buying the VIX, getting along the VIX, does that mean inversely that you'd like to be short equities?
I think I like it because I don't necessarily have to be. I just want it, like Dakota said earlier, I just want it to move, right? As traders, we want the market to move. And I don't, up and to the right, gets a little bored. I mean, once again, I know it's great because you can just get long equities, but ultimately volatility is what traders want, right? I mean, rollover tends to chop people up a little bit because it gets contracted and tight. And then, once we get through this, get through triple witching, like, John was talking about earlier, it just, I think volatility can kick in pretty quick.
Sure.
Yep, very true. Very true. Coming
Market's
up
at
on new
all-time
lows
highs.
in the ES. Yeah, exactly.
Yeah.
ES still
Yeah, I was
hovering around
thinking
the lows a day. What's the NASDAQ doing? NASDAQ. Your trade's looking all right,
Kinda
John. You got a
rallying.
couple ticks in the money.
Yeah, I'm up a little bit. We're up 20 ticks or so right now. I think I'm just gonna let it
What's your
stay here.
target,
It's
John?
ideally I'd like
Yeah.
475 or 475 is what I'm
Yeah,
looking
I see
for.
that.
Um, I think 475. There's some lows around that area. 465 to 475 is really what I'm looking for. I might slowly scale out along the way though, just to kind of
440, 4.5.
Yeah.
Bryce wants to know why is the NQ not following the ES? Well, there could be multiple reasons for that right now. In particular, I would say there is a very large lack of participation in the market right now. Volume is down. Everybody's just kind of sitting on the sidelines. A lot of money sitting on the sidelines waiting for this Fed announcement. So we could just be looking at a cannibalization of algos right now. The bots are battling each other at the moment, and they do operate differently across different markets. That's just my personal opinion, my humble opinion, but
sure,
could be a factor.
Gold's perking
What
up.
is gold doing?
Yep.
It was gold. Settlement
mad
price
at
in
gold.
gold, 37.25.
Yeah.
What's that, John?
I'm mad at gold still. I thought about buying it again this morning at like 7 o'clock. And then, the logic was that it might rebound a little bit. It kind of corrected some, and I didn't do it.
Yep.
And so hindsight's 2020, but I'm still mad at gold. Honestly,
That's
the trade's a
30
bit easier.
Yeah, that 3,700 area was a good spot to limit risk. I know we went down to like 95, but yeah, that was one that. Yeah, that one was a good one.
Mm-hmm.
Yeah.
37.25.10 settlement price in gold. It's a good target right now. 37.27.30 or 37.25.30 would be yesterday's volume point of control. We're trading back in range, in value, inside range, inside value in gold right now. A couple closes above 20. I like to see a retest of yesterday's value high all the way up at 37.38. Would be another target to the upside. Hard to hold gold down though.
Yep.
Yeah, that's what I was gonna say. Is that gold has lots of different arguments for the bull side. If we come in and cut 50, which I don't think we're gonna do, but if we cut, that might make people fearful of inflation. They might buy gold. If the economy's weak, people might buy gold as a hedge against the economy turning as well. So a lot of optimism for gold. I think the longs have made a lot of sense lately.
Yep. We had some good talking points about gold during the opening call this morning. I did make some notes. A few factors affecting gold. It did hit a record high. Spot gold hit a record high yesterday and pulled back off. What were the factors behind that? There was a stronger U.S. dollar and some profit taking weighing on gold yesterday. We're kind of making all of that back now. A lack of participation again, just like in the equities. We could just be seeing, a melt up until that Fed announcement. Some weak buyers just continuing to tick this market higher. We'll see what happens though.
That dollar's at a critical level too. I mean, John, you talk about it. I think it's one we don't talk about enough. It's it doesn't hold in here. Dollar could get weaker even more. So,
how many currencies is the U.S. dollar? The U.S. dollar index. It's weighted against, or is it 6 or 7 foreign currencies?
something like that. Yeah. You got
I think so.
pound, the yen, Canadian, Swiss. What am I missing?
The euro and the Swedish krona, I think.
That's right.
Swedish krona.
The kroner. Seinfeld, the kroner.
Yeah.
It's one of my favorite. 20 kroner.
Deutsche Bank did raise its forecast. Reuters came out with some commentary on gold earlier this morning too. Deutsche Bank raised its forecast for average gold prices next year to $4,000 an ounce, up from a prior estimate of $3,700, citing favorable currency rate conditions.
Doesn't that
already hit the
eventually
3,700 target?
The equities, JD. I mean, once again, for 20 years on the floor, gold and the markets had a negative correlation, right? I mean, it was always the flight to quality, the bonds and gold. And now, interest rates go down so that, and I get it, it's a stagflation thing right now. But at some point, we talk about the crack. Is at some point, gold keep continuing to go up, the dollar goes down. Does it eventually crack our markets? Is my question. So I don't know.
Good question.
Yep.
It could. Yeah.
Yeah.
Yeah. Gold's interesting. It can uptrend for a long time, but then it can also downtrend for a really long time. And so,
it can rip.
Yeah.
Yeah.
And when it gets directional too, it's very directional. It doesn't give you a lot of opportunity to get in on the move.
No. You can look at some 30-minute bar chart moves where it goes 8 candles in a row straight up. I mean, you talk about going directional. Yeah, market definitely does that. Both ways, up and down.
Sure, yeah. Yeah, I think this morning I counted 15
gold diggers.
Yeah.
15 what?
15 green candles in a row on a 1-minute chart for gold, I think, this morning. I think it was around 7.
Yeah.
It's crazy. Yeah.
Right before we got in there and triggered a short on our opening range.
Of course.
Of course.
Yeah.
Always got to give the head fake right on the open.
You called it, JD. As soon as it hit, you're like, oh, shit.
That's a head fake. They hoodwinked us.
Yep.
It's amazing how some of these institutional traders still adhere to regular trading hours, You see that spike in volume and volatility right at 7:20 Central Time. And it kind of, I don't know, maybe they're just offsetting some overnight positions, maybe, I don't know, or prior day positions. Or getting back in. Who knows what they're actually doing. But it's been good for a head fake the last 2 weeks. If you're playing those opening range breakouts, it's almost like you're better off fading. You're almost better off fading the opening range.
Yeah, I've seen a lot of the time, like we have news come out early and then the market rebounds from it. And then at the opening bell, we kind of correct back down, or, NVIDIA is a good example of that today. I've seen that a lot recently too. All right, so we're starting to creep up here. We got a nice cushion now in this one. We got about $80 in cushion. So it's small, but I think I'm just going to try to let it. There's a big chance it comes right back down and we just go really tight range sideways until the Fed meeting. But we got a big enough cushion. I'll probably lower my stop now a little bit tighter. I'll probably put it at about 68 right here. I think there's a chance we bounce at 75, so a little bit underneath that so I don't get squeezed.
All right, guys. It is 11:30 a.m. Central Time. Do you know where your children are? Let's bring in Gabe for a little news clip while we have a minute.
If you receive money from the federal government, you've only got a couple weeks left to make sure you can get it digitally. The Treasury Department plans to stop issuing paper checks for most payments on September 30th. That includes Social Security beneficiaries. It's part of the Trump administration's effort to fully modernize federal benefit payments, save money, and fight financial fraud. More than 500,000 Social Security recipients, less than 1%, need to choose another way to receive their benefits. That can either be direct deposit or through a prepaid debit card known as Direct Express. If you still need to receive a paper check, you can request a waiver. Some exceptions will be made, such as if you are 90 or older, have a mental impairment, or live in too remote of a location. You can apply for a waiver at the website godirect.gov.
All right, JD.
I'm sure that's going to piss off quite a few seniors.
JD, does Jack get his Social Security through the hardcore check?
Maybe his other Social Security card. Did you know Jack? He said this on air. He has 2 Social Security numbers, one under Jack Pelzer and one under Ack Pelzer. I'm not sure if they both still exist, but it is a true story.
Yeah, I don't even use checks anymore. I don't have a checkbook. I don't.
I know
They're becoming more and more obsolete. Yeah. I thought about
Don't
getting
you
one,
love when
but
you're the person behind the guy who busts out the checkbook
yeah.
I
in
haven't
the
seen that
line when
in
he just
forever.
starts getting the checkbook out and starts writing it out? You're like, oh, I'll be here a while. Oh.
Mhm.
You know it's gonna take a
Actually,
little
I
while.
take
to
that
make.
back. There's a place we go to in Michigan for pizza. It still operates cash only, so they'll take cash and personal checks.
Love it.
And on the wall behind the bar, on cardboard pizza boxes or the cardboard pizza tray things, you know, they have like 6 of them stapled to the wall. The bad checklist for the area.
Oh, wow.
And
Dave
some of them go back to
Portnoy.
like some of them go back to like the 80s. Like they never take them down. Once your name goes up there, it never comes down.
Oh, that's
So
great.
there's names on that bad checklist. People who have been gone for probably 25 years, you know.
Bouncing pizza
Yeah.
checks.
That's right.
Bouncing pizza
Yeah.
checks.
They must have really wanted the pizza, you know. The pizza must be very good, you know. I think
Right?
that's their point is you got to go there, you know. Willing to bounce a check for the pizza, you know.
Yep.
Yeah, we're back down to flat
Just
here,
about.
guys. I'm waiting. Yeah.
Yeah, it looks like we're about to print a new regular trading hours low in the ES here. We're about 1 tick away. Maybe see if there's some liquidity below here. I don't know.
Yeah, just range is so small.
Yeah, there's not a whole lot of news out right now. Not a whole lot of movement in the market. Going through the financial juice. And nothing is catching my eye.
Let me see.
So the ATR on ES is 55 points. Just going to see how much we expand today.
Yeah, news is light.
It's going to expand us for sure.
Yeah. New low by 2 ticks in the ES. No major liquidity grab. No stops. No stops being run just yet. Maybe underneath the overnight low. Overnight low in the ES, 63.53.75. About 2 points away. 1.5.
Does make your life easier when they're linked together sometimes, though, doesn't it?
Mm-hmm. Still down ticking.
Yep.
Yeah,
What's your exit looking like? What kind of risk are you
right
taking
now
on this trade?
So my risk is about 68 down here. So
68.
yeah, it's a little bit larger. I don't mind taking some risks, looking for just some chop, but my reward target was a little bit larger too. So I'm trying to just go with a 1-to-1 ratio. I've been doing really well trading Power Hour. Power Hour, I've been doing really well trading that. 11 a.m. I'm not as much used to. There's just really easy pullback continuations in the last hour of the day. I think like if we trend really well for the first like 20 minutes of Power Hour and then pull back a little bit, really good dip buys there. Could be because the market's breaking all-time highs.
It's good to know.
But
yeah, I struggle in that last hour. It's just only time I really like it is when we get the quarterly expiration. You know, like we'll get at the end of this month. You know, when you get the delta squeeze.
Friday.
Yeah, you get the squeeze east going. Yeah, I like to watch that one. There's usually some good opportunity there.
Triple witching on Friday. What's that, John?
I never have good luck on triple witching days. They say it's always good volatility. Every time I try to trade it, it's just sideways. You know?
Yeah, it can be nasty.
Yeah, just big up.
Markets are pretty unpredictable in general, but it just makes it exponentially more difficult trying to get on the right side. And you do have a higher probability of just getting chopped out of the market too on some of those moves. For everybody that doesn't know what triple witching day is, it's expiration Friday. The September contract for equity index futures will go off the board on Friday. The September contract will expire. So if you're not trading on Topstep X by some chance, make sure you are rolled into the December contract right now. December is the front month contract. The September contract will expire on Friday. Also, Friday is options expiration. That's why they call it options, or that's why they call it expiration Friday. Everything will be expiring on Friday.
Yeah, you got you got single stock options, index futures, and index options. So,
and as people roll out of positions, roll out of their September contracts into the December contracts, it does create quite a bit of volatility, choppy volatility. We talked about that a bit yesterday. You know, when you're spreading in and out of calendar months, there are auto spreader programs out there, so it doesn't they don't care what price they get filled at, just as long as they're getting the correct spread between calendar months. So that's where the choppiness comes into play. You know, they don't necessarily need to buy 66.55s. You know, they can buy it anywhere, just as long as the other leg is at the right spread distance or spread location. Does that make sense? What I said?
In this role, this role, I just haven't seen. And once again, maybe it's just me, and it's just because the order book has been, thick at times, but I just haven't seen, we saw like 500, 600, but JD, we just haven't seen any 1,000 lots or, 800 lots like we normally do. And maybe they're waiting for I don't know. If it comes late, man, it's hard to believe that they're going to wait for after Fed and try and bang everything out Thursday and Friday, but
they could just be under orders not to show them anymore, too.
Yeah.
Sure.
And they might just spread them out through the whole ladder. Yeah. New lows.
Yes. Just took out the new low. 66.52 half. New low in the ES. Took out the overnight low by a couple of ticks. Still ticking down. Let's take a look at what the tilt is doing. 52% long. Actually, let me refresh this just in case. Sometimes data goes a little better after a refresh. 55% long in the ES, 57% long in the NQ, 53% long crude, and our man Eddie's favorite number, 69% long in the gold. Shout out to Eddie. I got a message from him the other day. He's
I reached out to him last
feeling better.
Yep.
Oh yeah, he wasn't doing good, right?
Yeah, he's doing good.
He's getting there. Jab, jab, jab. Brick by brick. More new lows coming in the ES. 300 lot down at 50.
Yeah, I see that.
We're getting close to my stop. I'd love a bounce at 75, but if not, we tried. And
big fat round number here, 66 and a half. Yes, I might hold. I can't do the equities this time of day. I can't. As much as I want to
trade.
Yeah, it's just too close to this. I think
300 lots trading out on the 50 bid. The 300 lot was real. They're protecting that 50 level. Oh, they're paying up now. 300 lot 51 bid. Nope. Someone wants to buy it here.
They're chasing.
They are chasing it. 50 bid is still in there. 51 bid for 300.
Yep. God, it's very often very seldom you see it fill an order like this. Wow. That's the good old days right there.
Yeah, see if they keep
chasing it. Yep. Question is, did they get their hedge off? If they're leaving it there, they did.
Yep. They still want those 50s too. They want them all.
Yeah, Nvidia driving this, I think, too. Nvidia's just breaking down. I don't know about the evening.
Nvidia still.
Yeah, 69 and a half.
Yeah, the low of the day in Nvidia is 169.30. It just tapped 169.33. It's bouncing now, but it's looking like it's going to retest lows.
Just got an update from Jack on his house account trade. He is flat now, down $520. He was long back up at 62.5, I believe.
Yeah.
Yeah, I've been learning
He's
gold.
bounced off of 50. It's
So
been the
Coach,
trade of
you
the
trade a
Oh,
go ahead.
it's been the trade of the year.
Yeah, gold. Stagflation, gold. I think it makes sense. So you trade cattle prices, correct, Coach Hoop?
Oh yeah. It's when fundamentals were a bigger, chunk of what we did on the floor, and I think JD's dad would testify that too. It's just not in everybody's face like it was. But I talk to a cattle and hog guy we text every morning, and he kind of gives me an idea of what's going on in the cash market. But technicals still are driving that. I mean, I don't think I would ever say it. I use VWAP as an indicator on when I trade cattle.
I love VWAP.
It's just a really good, especially when it's not flat, John, and it's directional. It gives you an idea. Flat VWAP is no fun, but
sideways,
it's a lot of chop. I've just traded. I mean, like I said, I used to trade in the pits, and it's been, it's kind of like been gold. It's been the show this year. Finally getting a little bit of a pullback here. We'll see if it stays. It bounced a little bit today, but it's been a good trade pretty much since April. So,
yep.
Yeah. No, that makes sense. I got to run in 1 minute. I got to leave at 11:45. But we got to bounce right at that 375 level. That's why I wanted to set my stop a little bit underneath it, because a lot of the time at these half, quarter dollars, whole dollars, we could just get some buys stepping in. So better to see this. But
stop placement.
Yeah,
you are still in
this
trade.
Set it.
Yeah.
Correct. Yeah, I set my stop at just underneath that 75 level, because sometimes we can break them slightly, and then liquidity grab right back up. So far that level held really, really solid, exactly at 375. So we'll see if we can get back up. But yeah, guys, it was nice meeting you, Coach Hoop. I appreciate it, John. I'll see you guys on the next show. Hopefully, cross my fingers. Hopefully, I'll end green. Wish me luck, chat.
Keep us posted. All right, John London.
Thank you.
Thanks a lot, bud.
Thanks, guys. Appreciate it. See you.
All right, Hoop. So, Hoop, you were sharing a couple of things with me earlier. Let's talk about it. The Goldman roll. You wanted to bring up the Goldman roll.
Yeah, it's once again, we always used to joke about Goldman interns here on the show, and in agricultural markets, they always have a stake. Basically, in the agricultural markets, they used to have, and that was the first pit I traded in, was the kind of like an inflationary index, which was this like the CRB, if anybody's knows what that is, and they basically have to have a position in all these agricultural markets, and they have to roll those positions just like we have to deal with rollover in the equities. There's rollover in the ag markets, and they have a lot of business to get done. And if you saw, there's a specific date each month it starts, and I mean all the ag guys know, when these dates are, when they're going to roll. They position around them, and it's just when you see the amount of volume that they've done, and I think that one article I shared was a good old. If you got that one, I thought Beckett's got the one that shows the pie chart, JD, of what makes up kind of the basket of what they traded. I don't know if Beckett's got that one. You see that one?
Sorry.
If not,
I will look for that in just a second.
No, we can share it again sometime. We're coaching together. It's all good.
I'll tell you what we'll do. We're going to bring we'll bring Gabe in for on this day, and I'll go look for that pie chart real quick.
Yeah.
So, cool. Gabe, what happened on this day?
Oh man, we're taking a trip back to 1787. Founding fathers signed the United States Constitution at the Constitutional Convention in Philadelphia, establishing new framework for the American government and replacing the Articles of Confederation. The significant event is commemorated annually as Constitution Day and Citizenship Day, celebrating the adoption of the nation's supreme law. That is your history lesson for September 17th, 1787. Back to you, JD.
Thank you, Gabe. Important date in history. So I do have the pie chart. Did not send it to the production box.
That's fine.
Sorry, Hoop.
No,
Missed
no
that
big
one.
deal. You're good. It's all good.
But I see it. I see what we're talking about. The 2000 Goldman Sachs
So-
Commodity Index.
Yeah, that basically is why I've also traded so many different markets in my career, because as part of me hedging, I traded in those markets: natural gas, gold. The big ones are more important, like crude oil, and once again, cattle and hogs are part of that. So, but let's talk real quick about what we were talking about earlier from Coach Vince yesterday, real quick on this 50K that we were talking about earlier. So
let's do it.
I think I was within about $300 of losing a 50K, and I shared that I went to 50K because we had that conversation that over leverage, need to learn to get better at trading 50Ks and not 150. So I've been in 50Ks. So I basically took some one lot micro golds overnight and made I was up $100, then I was up like $150, then 200, and kind of scaled my way through it, built it up, and then as you can see on the chart now, cattle opened this morning, and the white line there is your VWAP. And if you look back first, I just expanded it. So we had a gap open the other day, and we kind of ranged higher. Then today we had a gap lower, and we came back and filled the gap this morning. So I took it short on the way down and took a long on the way up. And once again, trying to take less trades in a day and just taking small chunks when you're trying to build that account back, right, JD? That's kind of what Vince was talking about yesterday. And, now, the account balance is almost back to, 49.7. So just trying to take, high probability trades and taking small little bit chunks out of the market. So
yeah,
that's
awesome.
how you
That's
can revive
exactly the way
an
to do
account,
it.
right? Yeah.
Exactly.
So.
And it's a lot better for morale too, when you fight your way back in an account rather than hitting that reset button too. It changes your mindset drastically, I should say.
And I think
going back to that reset button.
Yeah, and I think in agricultural markets, they don't get as I think they respect just some old school things like, you've heard Coach Powell talk about, you see up in here, this is a good old crossover, the two moving averages crossover. So that's kind of a good confirmation that there might be more movement to the downside. So, it just seems this is, I kind of say why we talk about the NASDAQ and things like that. It's just these moves may not be as many, JD. So maybe you only take 2 trades in a day, but who cares? I mean, this is kind of, I'd rather take less mental capital, trading, 10, 15 trades in a day and take, 3 really good solid ones, and if I'm wrong, I'm wrong, but at least I feel like I'm not getting caught up so much in the scalpiness of the market with NQ.
Yeah. Avoiding the noise. Noise. We've got a little barcoding going on now in the equities just above lows. It's a nice little 5-minute range.
JD, what do you think they're going to do? You're always asking the questions. Let's ask it to you. What do you think is going to happen today?
25 basis point cut, and then a whole lot of noise from the president afterwards. That's what I'm anticipating. They will be sifting through the rhetoric of Powell's Q&A, looking for clues into the next rate cut, likely in December. Will that be 25 basis points? Will that be 50 basis points? What's the inflation target looking like? I'm not expecting a bombshell. It's good to anticipate it. It's good to know what a bombshell could look like. That's why I asked that question earlier. What does a bombshell look like?
Right.
No rate cut. Is no rate cut a bombshell? Probably. Is a 50 basis point rate cut a bombshell? There'll be some reaction off of a 50 basis point cut. But will it be a bombshell? I don't know. There's still a little tiny percent, almost 7-8% chance of a 50 basis point cut coming.
That poll had it at 40% this morning. So obviously they're not on the Fed board, but I think with the pressure of the president are some people. Once again, I don't think they'll do it, but it's for good conversation, right? So
yeah, exactly.
It'll be whippy.
Fed watch party starts.
I'll guarantee you that.
Yeah. Fed watch party starts in 1 hour, ladies and gentlemen in the chat. 1:00 p.m. Central Time. The FOMC decision on interest rates will hit the tape. 1:30 p.m. Central Time. Got the hat ready.
I'll send it to you when we're done this one, so you can have it for next one. So supports Pirates got you.
I'm sure I could find one at the dollar store somewhere. I still can't believe someone swiped that off my front porch.
Oh, dude, that was so classic when you had the little video. Just like,
we've had a big problem with that in my neighborhood.
When he opened the box, JD, what do you guys think the guy did when he opened the box?
He probably just dumped it in an alley. Like, what's he gonna do with that? What's anybody gonna do with that doesn't need it? But man, that's infuriating. Some dude just walks right up to your front door like he owns your house.
Yeah, it's scary.
Taking your shit. I got him on video. It's been a problem in my neighborhood, so we put up cameras all over the house now. I got his face, and we shared it. He's been hitting houses all over the neighborhood, too.
I could so see that guy around and you just chasing him on that bike one day.
It's going to happen. Someone will get him. Someone will get him.
Somebody
You crazy kids.
That'll be on Instagram.
All right, Hoop. That's about all the time we've got for Trade with Topstep. John Lennon was on. He put a trade on. Good on him. Can't wait to have him back again. John Lennon's always a great guest. Always great talking with
John.
you too, Hoop.
Yep.
I like John a lot, yeah. All right, we're barcoding in the equities right now. We're hovering just above the lows in the ES and the NQ. We're going to dip out of here and make room for group coaching. We've had that form pinned in the chat for quite a while, so it's been marinating. We've got some good questions, I believe. Hoag and I will be back in just a few minutes, and then we're going to get that Fed watch party started at about 12:50 p.m. Central Time. We'll start bringing everybody in and get ready for that Fed announcement. All right, folks, we're going to take a short break. Group coaching coming up next. Topstep TV. Let's go. Good afternoon, friends and traders. Welcome back to Topstep TV. It is time for everybody's favorite segment. It's time for group coaching. We've had that question form pinned to the top of the chat. It's still there. If you have a question for either Hoag or me, go ahead and grab that link, fill out the form, click submit, and we'll get your question. Mr. Hoagland, how are you feeling this afternoon? What's new? What's happened in the last couple hours? Anything?
Not too much. I'm feeling good. I always enjoy doing group coaching with you, JD, and answering everybody's questions that we can. I mean, nobody knows everything. I know I certainly don't, but I always appreciate the opportunity to kind of talk to traders and hopefully make a difference. And you said this is everybody's favorite segment. I hope that's true. They get to see you.
We are not know-it-alls. Yep. We are not know-it-alls, folks, but we do play them on TV once in a while. All right. We've got some good questions here. What do you say we dig in ahead of the Fed watch party? Here we go. Equities just bounced off the lows. Might be making a leg higher here in the ES. Did a little liquidity grab, made some new lows, and we're popping here. All right.
Yeah.
Question.
We could talk about this maybe later on in this segment, but it's FOMC day. It's all short time frame control right now. The longer time frame is working on getting their rollover done. So what does the market do in the S&Ps? Trades to a short time frame visual target. The point of control from the 12th of September, 66.50 that just put in the low there. Check that, 66.50 to the tick. Now we maybe see some buyers coming in this. Just want to set that out there. All right, JD, let's go.
We did see some buying down there too. There was a couple 300 lots that popped up as soon as we started printing 66.50, and they held that level strongly. Watched it happen live in the last segment. So nice. Buyers stepping in on those lows. Will we reverse all the way back up? Initial balance high, yet to be seen. We'll keep you posted. All right. Group coaching questions. Question number the first comes from LaShawn. LaShawn wants to know, hey guys, why isn't the opening range trade taken in the equities? Is it because it's not a single instrument like gold and crude? It's a good question. I'm typically not on with the fast markets crew. I'm in the background, usually managing a trade and doing some other work from the opening call. But is there a reason? Do you guys look at the opening range breakouts? I mean, you don't talk about it every day. I know that. Sometimes it's brought up, sometimes it's not, but the trade isn't typically taken in the equities. I know it's got a low probability. It's probably a big reason why, but is there any particular reason why we don't often take the opening range breakout in equities, Og?
Well, I think partially is because we've got our guests on. And for the house account, we're supposed to be kind of shadowing, or if we agree with the house traders, we're shadowing their trades. Remember about a year and a half ago, I was taking the opening range trades in the equities quite a bit. And they were pretty hot back then, but they're streaky like everything else. And the reason that they're streaky, in my opinion, is because a lot of people look at them. A lot of people take them. And the more people that take an opening range trade, the less likely it is going to be a successful trade. So you'll get periods of time where you may have, 8 out of 10 days with an opening range trade that's successful. And then you're going to have a period of time when everybody jumps in on it where it's not going to work for you for, an unknown amount of time. It also makes, I think, a big difference when the market is directional. Although it has been kind of scarce in the equities, which I still believe the S&Ps have been a little bit more directional than the NASDAQ, but it has a tendency, I think, to be a little bit higher probability when the market is directional in the longer time frame. There's no reason we haven't been taking it other than the fact that, I'm not on screen. It's right at the open. We're looking to see what our guests are doing in their trades and seeing if we want to shadow those. So no reason. Just, we're trying to support our traders.
Yep. Fair enough. Fair enough. And that is also why we pull the chat in the morning for our gold and crude oil opening range trades. We want to know how you guys feel about it. We want to get everybody involved. We want your take on the best trade setup. That's why we asked the chat. Should we take a 1 minute, 3 minute, 5 minute? We'll find some better ways to poll the chat on those trades in the future. But also, the risk on the gold and crude oil opening range trades is exponentially smaller than it would be in the equities, depending on the size you're trading, micros versus minis. We typically trade the micros for gold and crude. We don't like taking more than $250 worth of risk on any given trade for those opening range breakouts in those markets. So we adjust risk accordingly also. All right. Hope that answers your question, LaShawn. If you have any follow-ups, I see you in the chat. You're welcome for taking the question. If you got a follow-up, just drop it in the chat, and we'll be happy to get to it. All right. Next up, Jeff Prow. Sorry, Jeff P. I shouldn't be announcing last names, right? Jeff P. says, guys, question. When you say you have 3 open positions on, how do you split those up to take profits and then leave a runner? And also, how do you scale into a trade you already have? Well, there's a couple different ways to do it. As Hoag would say, there's 1,000 ways to peel an onion, right? You could trade off the ladder. You could trade off your chart. You could set bracket orders. There's a handful of different ways to manage positions. And as far as scaling into a position, stacking bids, stacking offers, it's basically just putting your bids in a zone on the ladder, and as price gravitates towards your zone, you're getting into a position. I hope that made a little bit of sense. Hoag, what's your take on it?
All right.
Got an answer?
Jeff, 3 positions in one product, or a position in 3 different products? That would be one of the first questions. If you have a position in 3 different products, you have to trade what you see in each of those products. You may be trading gold, crude oil, and the ES, and none of them are really going to be all that related. So you're going to want to focus on the market generated information from the particular product while you are managing that trade. I don't know about you, Jeff, JD. I find it difficult to manage too many trades in a lot of different products. It's just something that I feel like I don't do well. I'm not a very good multitasker, if you will. But if you're talking about, you get into a position long the S&Ps and you add to it, and then you add to it again, you're probably hypothesizing that this might be a trending type of day, right? Adding to positions in range days, you're going to have to do it quick, and you're going to have to manage that risk, because the fact that you're adding to a position in a range day that is it's going to raise your average trade price, but it doesn't necessarily change the overall point of invalidation on the trade. So you're adding to a position that's already going your way, and I applaud that. But it doesn't necessarily change where your stop has to be. So you're going to be adding a lot of risk in that regard. If you're, adding into a position that is already in profit and you're expecting a trend day, well, those are the days that you really want to try and add into a position, because, range days, like I said, you're going to probably have a pretty, solid entry point with invalidation, but you're probably also going to have a solid profit target. So you have to weigh, is the addition and the additional risk worth the profit target that I'm going to get on this trade? So wider ranges, yeah, maybe you can get into and add to a position as it's going in your favor, and then manage the trade as if it's one trade. Maybe you're scaling in as it's going up, maybe you're scaling out as it continues to go up. It's all in the context that you're looking at the market through, and the hypothesis of the potential outcome from that trade based off that market condition or that market context. When you put a position on and you add to a losing position, there's a fine line between accumulating an inventory and trading and adding to a loser. We call them moron trades. When the market's going against you, moron. And I don't suggest doing that, but I don't have anything wrong with seeing a zone as a support zone and getting into the position in that zone with a specific point of invalidation for the trade or stop level for the trade. I hope that helps, Jeff. And again, if you're looking at 3 different products with positions, manage each product as its own. Of course, you have to do that. But if you're adding to a position, that's 3 positions open. I mean, you put one on, you put another one on, that's still the same position. You put another one on, that's still the same position. I don't view those as 3 different positions. Hopefully that helps, Jeff.
And as you're adjusting positions too, TopstepX will automatically update your stops. So say you have a 3 lot on and you set your stop and you start stacking offers above to get out. Every time you exit one of those contracts, your stop position will change. So there's a lot of automation already in the TopstepX platform for you. We try and make it as simple as possible for everyone. But managing trades, I understand, for some new traders can be a source of confusion. But there are plenty of ways to do it. You have your TopstepX in 5 minutes or less videos right here on your platform. If you go to this left side, the navigation bar over here on the left side underneath where it says TopstepX, and you hit that question mark, you'll see the option for the Help Center, Platform Help Center, Topstep 5-minute tutorials. There's a whole library of information here to help you get familiar with your trading platform. Hope that helps you out. All right, next up, Shiner's got a question about Delta. I always hear you talking about the negative and positive delta on possible squeezes. Do you think it would be possible for Topstep to develop a delta indicator and add it to their platform? Well, from what I understand, it is in the process, right? It's on the workflow,
Yes.
or the workflow. You can go into the TopstepX platform and actually vote on the new. There, Hoag's bringing it up right now. It's on the roadmap. You can go in there and vote for what feature you want to see next. Features with the most votes get pushed to the top of the queue.
There it is.
It's all in there.
So there it is. Add cumulative delta indicator. Vote for it. Vote it up. Vote it up. So it's past review. It's in planned. Soon it'll be in progress, and then it'll be done.
Keep voting for it. The more votes it gets, the higher up it goes on the list. All right. Here's another question from David. This has it's pretty relevant to today's price action. How does lower volume impact trading? What are the dangers and what are the benefits? Well, liquidity is always going to be an issue. The thinner a market is, the harder it is to get in and out of trades, especially if you're trading market orders. I'm sure everybody in here has seen on something like a CPI day trading the NASDAQ how thin the dome gets. It'll be one up at some prices. There'll be no bids or offers at some prices. It'll be spread out. So when volume is low, that means liquidity is low. And liquidity is what you need to get in and out of trades. These are futures markets. For every buyer, there needs to be a seller. Someone needs to be willing and able to take the opposite side of your trade. For every 1 lot traded on the bid, someone is selling that to them. Does that make sense to you? A contract, there needs to be 2 parties for every contract to exist. So if there's nobody there to take the other side of your trade, then you have to keep finding new prices where people are willing to do business with you. Hoag, what do you want to add to that?
All right. Well, when it comes down to it, I mean, volume really drives price, right? Volume can tell you the strength of a move, whatever time frame you're looking at. If there's more volume coming in at higher pricing, more people are interested in trading at those higher prices. So there's information that you can use from that. But one of the things I would want to mention is, when you look at the S&Ps, this is the S&Ps right here, okay? So when we look at the overnight, this is the overnight. This is when the market opened the night before last. Look at the volume there. There's very low volume in the S&Ps and the equities. Certain products have a little bit more volume, like gold in the London session has more has a little bit higher volume. But we're trading U.S. markets. The majority of the volume is going to be during the regular trading hours. This is the regular trading hours from yesterday. Okay, what that tells me is in the overnight session, there's not a lot of institutional or longer time frame trading going on there. It's probably much more likely going to be shorter time frame speculators, pea shooters like me, trading through the overnight session. Now, occasionally, if there's some sort of news or something comes out, yes, the volume can spike drastically in that regard. You're probably not going to see too many institutionals that are going to be kind of monitoring unless there's something weird going on or some expectation of something weird going on, what's going on in the overnight. So when I look at the regular trading hours and I see all this volume here, to me, the information from the regular trading hours holds a lot more water, if you will, because we have all of the participants that are available to affect the market, paying attention during regular trading hour session. Okay. Overnight, nobody's really watching that matters. It's shorter time frame, weaker hands traders picking each other's pockets. Yeah. And sometimes there are great trades that occur in the overnight session. Doesn't mean that there's not opportunity. You just have to remember who your competitors are in that time frame. In the overnight time frame, when there's very low volume, you're dealing with your shorter time frame traders. When there's a lot of volume, you're dealing with the institutions, the banks, the fund managers, as well as a lot of the longer time frame, bigger speculators, as well as the pea shooter class, like us. We are pea shooters when it comes to trading. Okay, so keep that in mind. And when you see a holiday, like maybe it's an abbreviated trading day, but even if it was a full trading day, you would see very low volume because most people aren't going to be trading during a holiday, Christmas, New Year's, 4th of July, Labor Day, Memorial Day, Thanksgiving, any of the holidays where the market may be open but isn't acting open. Very low volume, very low participation. Be careful on those days because as JD mentioned, those days aren't going to have a lot of liquidity. If something were to happen and you were to have a stop place or something and something goofy happens, you're going to experience a lot of slippage on those days because there's nobody around to take the other side of that trade, especially if something happens that drastically changes the price action and the perception of value. David, I hope that helps.
And thank you for the question. Real quick in the chat, Sakar wants to know, he's got a question on order management on TopstepX. When I press the close position or flatten all button, is that a market order? Is there a way to set that to a limit order? So when you hit those buttons on the dome, flatten all, close all, those will automatically trigger market orders on your platform. And there is no way to go in there and change the functionality of those buttons. If you want to exit at the offer, there are join bid, join ask buttons on there also, or use limit orders to get out of positions. Mm-hmm. But no, you cannot change the functionality of the buttons on your platform. No. Flatten all and cancel all, or flatten all and close all. Yeah, get me out now. That's what those buttons mean. All right. Let's take a look at. I don't care what price it is. Just get me out.
Get me out.
All right. Let's take a quick news break, folks. We'll be back with some questions in just a minute. But what's going on at Target these days? Target is adding next day delivery to more cities. Target is ramping up next day delivery options ahead of the busy holiday season. We talked about this during the opening call. We are officially 100 days from Christmas. So Target, the chain, says it's expanding next day deliveries for online orders to 35 U.S. metro areas by the end of October. Target says the service is free of charge for orders over $35. free next day shipping for orders over $35 from Target. That's a big deal. And even faster delivery options are available also. Target says it's now offering same-day deliveries to more than 80% of the U.S. population. The retailer says it plans on expanding delivery options even further into more than 20 additional metro areas next year. Value shopping is becoming a thing.
Gotta compete with Amazon, I guess.
Right? That's a big move for Target. Retail competition. I like it. Free same-day shipping.
Nice.
On orders of $35 or more. That's pretty good. Good on Target. All right. Back to the questions. Oh, let's check in on the markets real quick. Still hovering just above the lows in the ES and the NQ. Let me refresh my platform and we'll check in on the tilt. We're looking at 59% long in the ES, 63% long in the NASDAQ, 54% long in crude, and 50-50, half and half in gold. Gold is about to settle for the day in about 3.5 minutes, or 3 minutes from now, we'll have official settlement price in gold. Of course, it will continue to trade until 4 o'clock Central Time, but regular trading hours in gold end at 12:30 p.m. Central Time.
And with
All right.
FOMC today, probably get a good example of how drastically different the last trading day of the session of the extended trading hour session in gold can be from settlement.
Yep. Has anyone ever traded through FOMC? Sure. A lot of people do. We don't stop you from trading through FOMC. You can do whatever you want. It is your account. You are responsible for it. You are accountable for it.
Hey, that's Louis C.K.
Yep. User beware. Yep. Louis C.K. Louis K. Anyone ever traded through FOMC? Yes. Short answer, yes. All right. Next question from Mohammed. Mohammed wants to know, hey, coach, what is the reason I can hold the drawdown more than expected? And as soon as I'm in the green, I want to cut the trade, even though I can see it can still go in my direction. Is it only me who's facing this? Or generally, does this happen with all traders? It happens quite a bit. I know it's happened to me. Sometimes it's just you don't want to deal with the stress anymore. You've been in drawdown all day long, waiting for this trade to come back. You keep moving your stop because your convictions are so strong that it's going to come back. And as soon as it gives you a couple ticks in profit, you dump it because you don't want to deal with it anymore. And then it continues to go your way. There's a number of reasons for it. It could be fear. It could be stress. It could be there's something else going on in the world around you, and you got to step away from the screen and you just don't want to deal with it anymore. But Hoag, this is a common occurrence, and I know you've coached thousands of traders through this exact specific scenario. What can we say to Mohammed to sort of ease his mind on this particular scenario? He's not alone. It happens to all of us. What about some kind words for Mohammed? Get him on the right track.
Yes, Mohammed, you are certainly not alone. I think most people are kind of hardwired the same way you are. And JD really touched on one of the biggest parts of why this happens, and it's fear. You are afraid to take the loss because then that loss actually exists. So most people, especially newer traders, before they learn a little bit about how to rewire their brain to be a trader, they're going to get in that trade and it's going to go against them. And they're going to say, well, if I just wait, maybe this market will turn around and get me back to break even, or even better, maybe it'll even make me money. So you kind of fall into hope or hopium when you are at great risk. You are hoping that the market is going to turn around when you are at great risk. When you have a trade on that is going your way, even though you may have a perfectly logical, reasonable, and probable profit target on it, you're thinking, oh, I got a winner. Man, I'm so afraid that this thing is going to turn around and turn into a loss. I can't take it anymore. I got to get out. So you just lost 500 on the trade that you married and fell into hope on, and you just took $50 on a trade that was actually paying you, and you were afraid that the market was going to turn around and put you back in a loss. Everybody seems to be hardwired this way, Mohammed. We don't want to take the loss, so we default to I'll wait. Most of the time creating bigger losses. We get into a profit and we can't wait to take that money because, again, we are now fearful that the market may take that profit away. Even if it's just a partial pullback off the high, the P&L high on that trade, you start to feel loss. Even though it's a winning trade, you start to feel loss if you don't sell the damn high tick. It's just human nature. Just human nature. So, Mohammed, know when you get into a trade where your probable point of invalidation is on the trade. Do not move that. Okay? Know when you get into a trade what a reasonable probable profit target is for the trade according to the market state of the tools that you're using. Start thinking about only taking trades where you can see. No, nobody knows the outcome of anything. You can control the risk on the trade, but unless you're seeing, at least 1-to-1, maybe 1.5-to-1 or 2-to-1 reward over risk on that trade, think twice about taking it. Or look at the market from the stop first. Okay, if price gets down below this, I think it's probably going to continue lower, but I do like the long, so I'm going to put my stop in where I think the stop needs to be, and then I'm gonna try and get the best possible trade location. Be patient, put in a bid, see if you can get a good fill on it that'll reduce your risk and at the same time improving your profit target. But yes, Mohammed, you are not alone. I don't know that I've ever seen anybody come into trading that's hardwired in their brain the right way, and that's cut losses and let winners run. It's cliche. I know it is. It takes time, though, also, Mohammed. So, like everything, it's like building a muscle. The more often you exercise, staying in those winning trades and getting to some profit targets and understanding and accounting for each trade as something different and unique. There's no trade that has anything to do with a past trade, but don't marry losses. There were two things that were told to me when the first day I walked on the trading floor with my shiny new badge. First one was, you can make anything you think you're worth. And the second one was, learn how to take a loss. If you can't take a loss, you're just going to create bigger losses. It's like a self-fulfilling prophecy. I don't want to take a loss, and you end up taking huge losses. Find a way to get your mind hardwired the opposite direction. Cut losses. Admit when you're wrong. Even if you get your stop hit and it starts to go in your direction again, you can always get back in. But don't hope losing trades and don't fear winning trades. Turn that around the opposite.
Yep. Well said, Hoag. And I'll also add that, confidence in your trade setups comes with experience also. The more you trade these setups, the more confident you will become in them. Also, don't forget either that you took the risk on the trade. You did the hard part. So you also deserve to reap the rewards of that trade. So give your trade some time to play out. Let them play out. Let your setups play out. You've already accepted the risk on the trade. Hopefully you set your stop when you get into it. You've accepted the risk. You took the risk. You deserve to reap the rewards. Don't forget that.
Mm-hmm.
You deserve it. That's the important part. You deserve it.
Charble in the chat. Read Best Loser Wins. Exactly. I mean,
exactly.
That book embodies all of the lessons I've learned in trading in one book. It's a great book.
I've read it almost a half a dozen times this year. I pick up something new. It's one of those books. You learn something new every time you read it, right? All right. Mohammed's in the chat. You got it, bud. You're welcome. All right. Next up, we got Soupy. Soupy says, hi, Hoag. How do you find the initial balance high and initial balance low when you're looking at a 2-minute chart? Thanks. Well, the initial balance high and the initial balance low, the initial balance in general is the very first hour of trading in regular trading hours. So it doesn't matter what time frame chart you're looking at. You just got to find the first hour of trade, and then that's your high and low. That's your initial balance high.
So this is on a 3-minute chart. This is the S&Ps. If I'm on a 3-minute chart, I can go to an hourly chart. Hourly chart. Take a look at both ends. This is an hourly chart. Yeah, this is 8 to 8.
Yeah, that's
8 to 9. So do I have my IB at the wrong spot here? Let's see.
I don't think so.
66, 59.75. 59.75. So, well, here's how I do it. I'll look at the 30-minute and the top of the 8 o'clock bar and the bottom of the 8:30 bar. And then I can go back to whatever time frame I'm trading.
And you can even just draw. Yep. You got it.
I wonder why
you can draw a box right around it also.
Looks funny on the, oh, this is the 8 o'clock. Here, there it is. So that, just take the first hour and get, put a line across at the top of it, line across at the bottom of it. Although this isn't really working that well. Let's try this again here. Okay, that's the 8:30 bar. So I don't know, something not necessarily working right for this on the hourly chart, but I always go off the 30-minute chart because that's basically what I trade off of. Look at the high of the 8:30 bar, the low of the 9 o'clock bar, and there's your initial balance. Piece of cake.
Yep, simple enough. You could draw, that's it. You could draw lines, you could draw a box. Switch over to my charts. I just drew a box around the initial balance in the ES for the day. And shade it in. So now you know what your initial balance is. We're approaching initial balance low as we speak in the ES. What can we expect if we start trading back through the initial balance, Hoag? Is there a play involved here? I know it's too late for a failed downside auction, but possibly a new rotation back up to the high.
On a normal day that we weren't 20 minutes from FOMC, I would probably have a lot more to add to this. But at this point, we've been through that initial balance low so many times. The one thing I do like about this is we reached this visual target. And these markets are resilient. We don't know what's going to happen with FOMC. Really think twice about doing anything now. It's 20 minutes away. If it comes out as expected, yes, there will be some volatility, but it probably won't go anywhere. It's Chairman Powell's speech and Q&A at 1:30 that I think is really going to possibly be the market maker, unless, let's say they do decide to cut 0.5%. That is going to kerfuffle the market a little bit.
You see Joe Black's comment in the chat? This guy cracks me up all the time. What's the difference between FOMC and USMC? Get my dad in here to talk about that. My old man's a Marine.
Yeah.
He'd love to educate you. All right. Check back in on the markets.
A Marine is more dangerous for you.
What's the difference between a Marine and a Fed governor? Let's play the game. All right. Simon says, there's another game. Simon says, I use Coach Ray's break of channel method to decide when to get out of a trade. How do you decide when to get out of a trade? Well, there's a process for setting up a trade. I use a process, at least. I look for a point of invalidation, and then I search for best trade location. I typically like to know what my risk is before I get into a trade. That's just me. Again, there's 1,000 ways to peel an onion. But I think the best way to exit a trade is to look for points of invalidation before you get in, so you know when your trade is no longer good. Market generated information will also tell you when you're on the wrong side of the market and when it's time to get out of a trade. Some people say you should set stops so far away that they never get hit. You should be out of the market. You should be out of a bad trade before your stop ever gets hit. That's another way to play it. But Hoag, you've been doing this for a long time too. What's your criteria for exiting a trade or setting a stop?
Yeah. So, well, like JD says, and we always say, there's a million ways to skin to peel an onion.
You almost said it, Hoag. You almost said it.
Yeah, I know.
Skinner.
I know, right? So without knowing your strategy, your time frame, anything like that, is Simon, I'm hoping that you have, an idea of when a trade is invalidating. And it's not a financial decision, it's a technical decision. Where does price have to go to, in essence, prove this trade wrong? JD was saying he looks for that first, and then he looks to try and get good trade location on any trade he takes against that point of invalidation. But how do you decide when to get out of a winning trade? To me, that's the hard part. I know typically when I'm wrong, and my stop is usually going to be placed in that area, right? But how do you know when to get out of a winning trade? We've been talking a little bit about Tom Hoagland's book, The Best Loser Wins, and he doesn't put profit targets in. He has no idea how far it's going to go. But what he does do is he has a very good understanding of technical analysis as well as market context. So if he's getting into a trade and he's adding to a winning trade and a trade that's moving higher, he may not have a profit target. He may be trailing a stop, moving his point of invalidation higher based on technical levels, basically market generated information. And it also depends, Simon, a lot on your assumption or hypothesis of the current market state. If you're in a directional market and you've got a trade on that you believe is number one in the direction of the directional market in a longer time frame, and you're in good trade location, you may be looking at a possible bigger outcome for that trade. We never know 100% anything that's going to happen, but if you do hypothesize for that and you trade to that hypothesis, and that hypothesis continues to ring true, then you're really into something good. So, knowing when to get out of a trade is harder for me than knowing when to get out of, knowing when to get out of a winning trade is sometimes harder for me than understanding when I need to get out of a losing trade. I'm pretty solid with that, even if it's, I get taken as liquidity and the trade goes in my direction, I'm okay with it. I can always try and get back in if that's what I want to do. But, getting out of winning trades, have a hypothesis as to what you think the context of the market is telling you. Always ask yourself, Simon, and for everybody, this is Jim Dalton, what direction is the market attempting to go, if any? And if it is attempting to go in a direction, how good of a job is it doing getting there? There are, like we say, a million ways to skin an onion, and there's a million ways to have an idea or a couple of tools to determine how good the auction is doing in a particular direction. But do we ever really know? No, it's all about risk management. So, great question, Simon.
Excellent. Thank you for the question, Simon. All right, we've got 15 minutes just about until the Fed release. We're going to start transitioning to the Fed Watch Party in about 10 minutes. Before we take another question, though, how about another quick news break? UK steel deal was shelved before Trump's visit to Britain. A proposed deal that would have ended U.S. tariffs on British steel has been shelved. That's what UK media outlets reported last night, Tuesday evening. The current U.S. tariff on British steel imports is 25%. Before leaving for his state visit to Britain on Tuesday, President Donald Trump said he was into helping London to refine and finalize its trade deal with Washington, which included the agreement on steel. According to the U.S. International Trade Administration, the United States is the 5th largest importer of UK steel. So, looks like we are curbing tariffs on British steel for the moment. That's not a bad thing, right? Keeping those steel prices down.
Did you know that the CME has futures contracts on steel? They have a futures contract,
honestly.
Midwest domestic hot rolled. There are
Midwest domestic hot
75
rolled.
in open interest. We also have aluminum contracts, Euro premium duty, 50 contracts in open interest.
So you're saying we can corner the market?
Yes. Actually, there is no open interest. Seems to be some block trading going on, but no real open interest in the futures.
It's time to corner the steel market. Mr. Hoagland has set the price.
Yes. Where the hell is Beeks?
We got to find Wilson and tell him to sell.
Get back in there and sell.
Morgan, your brother's not well.
Have him.
Well, we peaked above. We peaked back into the initial balance in the ES and pulled right back off of it, away from it again. 66.57 last trade in the ES.
Yeah, that's going to be a pickle.
Quite the pickle.
After FOMC.
I'm hungry. All right, here is a question, Hoag, from Curtis. Oldie but a goodie. We've answered this one dozens of times in the past. At what point, Hoag, do you quit the 9 to 5 and go all in on trading? I'm sure this will be different for everyone, but at what level of profitability should you be looking? Tough question. Tough question. Of course, it's different for everybody. Naturally, my first response is always going to be, don't quit your day job until you've got yourself a nice little nest egg to fall back on in case trading doesn't work out. I do not recommend to anyone putting all your eggs in one basket. I think it's important to have multiple streams of income, especially if you're going to quit your 9 to 5 and take on trading as a full-time gig. It's very, very difficult to do, and you need to have some pretty deep pockets if that's the route you're going to take. The second you start depending on trading profits to pay the electric bill, shit's going to turn around real fast on you. But Hoag, how do you feel about it?
I'm of the school of thought that you better be very, very well prepared before you forsake any other forms of income and depend solely on trading. Many are called. Few succeed at this. When I first started, I was tending bar 4 nights a week, and for 3 or 4 years into my actual trading career, I maintained that job because it made sure that the bills were paid and there was food on the table. Now, I wasn't married with kids or anything like that, but for 4 years, I kept that income because it took a lot of pressure off of having to trade to make the bills, right? So I had pretty much saved probably about 2 years of sustainability without taking any money before I quit that job. Okay. And I was working in a prop firm. I had resources behind me with the prop firm as well. But when I left the prop firm and funded my own account, that was probably one of the scariest periods of time because I didn't want to go back to bartending, but I knew that was a distinct possibility. So I just tried to remember that if I'm going to put pressure on to make it, a daily amount of money or to pay the bills every month, it's just going to keep me from concentrating on being a good trader. And that's the goal, is to be a good trader. So I did that for a while, and then when I got married and started having kids, an opportunity to become step up and become a broker arose. And being a broker, even though you can, sustain some serious risks, seemed like a more stable income for my wife and my family. So that's what I did. Just became a broker and was trading NASDAQ on text messages to another friend of mine who was a broker in the NASDAQ bit. And, it was, it's really scary to do that if you ask me. And again, I would suggest you having, 2 years of savings that you're going to be able to tap into if things start getting rough, and things inevitably do get rough. My dad was one of the first ones to tell me, hey, you're trading now. You're going to have really good times, and you're going to have some lean times too. When you're making money, you better put it away, and because you're going to need it for some of the lean times. And I had a lot of people I knew. Some of them were actually friends that started making big money on the trading floor, big brokers, big traders. And as the floor started to go away, so did their income, and so did their big houses, and so did their big cars, and so did their big wives. A lot of them lost a lot more than just money and a career in that. They overspent. They wanted the big house and the big cars and the big lifestyle. And thanks to my dad, I always lived well within my means, and I've been able to withstand many difficult periods in trading and in life because of that. So when you start making money, put it away. Put it away. No Lambos. No Lambos. There's nothing wrong with the Honda Civic. 100%.
I bought a Honda a couple months ago, Hoag. I love that car.
Yeah, they're great cars.
All right, we are about 7 minutes out from the FOMC rate decision. We're going to start transitioning to our Fed watch party. I see Jack in the back. Whenever you're ready, Jack can come on in. Maybe we'll take another question. But again, we got about 7 minutes until Fed's decision on rates. It's such a tough decision, though, going pro and trading. You need to be prepared. You need to be serious about it. It's the best advice I can give you. All right. How about one more question? Hi, what is an average good profit per day on a 500 or a 50K account? I'm one of those guys who have a clean track record each day green. Oh, I think this question got cut off. Ooh, this question is a lot longer than I thought. All right. I'm one of those guys who have a clean track record each day green, win rate between 70 and 80%, but I can lose my account in a single bad day. I got much better, I have to say, and I will make it to live soon, but I think I see wrong numbers for profits in my head, and that's why I keep chasing higher wins per day, where I shouldn't. Currently, if I only need $150 tomorrow on Friday, and I have another 9K payout. So please tell me what I should be aiming for with a 50K account per day, please. Well, first thing that caught my eye here is having a 70 to 80% win rate, but one bad trade could blow out your account. Am I reading that correct? Something's off on those risk parameters there. Oh, do you see what I'm reading here?
You said one bad day, I think.
One bad day.
Yeah, you can lose the account in a single bad day. Yes.
Well, sounds like it's a tough call, making a couple $100 a day and then potentially losing the entire account in one day. Time to adjust those risk parameters a little bit. 70-80% win rate. That's pretty good. I'd love to see a trade report on this trader. Batondo is his name. But on a 50K account,
take what the market gives you, Batondo, and take a look at your trade reports. If you have an average winning day of $500, you have no business losing more than that in one day. Take a look at that in your trade reports. Okay.
Yep.
Right.
All right. I see Gabe in the back. He wants to get rolling. Spring jacking.
What gave you
Spring
the
jacking.
clue, DD?
The circle on the wheels there. All right. We've got Jack. We've got Andre in the back. Fed watch party is about to start. I'm probably going to be rolling out of here, but I'll be in the back for a few more minutes in case I'm needed. But let's get this party started. There's the bell.
What's up?
Bam.
Good afternoon.
There we
There he is.
are. FOMC.
Long lost Andre.
Long lost policy decision. September 2025. Hoag, Jack, catch me up on the markets. I just sat down about an hour ago. What do we see? The sell-off or rebounding just a little bit. We do have the announcement in about 3 minutes or so. Jack, catch me up to speed.
Yeah, we had a pretty decent sell-off. NVIDIA got hammered with some news last night. Bouncing now. I can't tell. It could just be shorts covering ahead, or just people not wanting to sell it further ahead of this 1 o'clock number, which is going to be wild. Right now, we're still just hanging above about 4.04% in the 10-year yield right now. How was your day, Andre? Did you get a free breakfast?
Oh, free breakfast indeed. Yes. Coffee, some tea. Yes, absolutely. Back in mind, I was thinking about this huge announcement we got in about 3 minutes or so. Hoag, talk to me. You've seen a million of these. You've been through a million of these. What are we looking for here? We're expected for a 25 basis point cut. Where do we go from there, Hoag?
Well, yeah, if it comes out as expected, there will be some period of a little bit of volatility, but that is what probably has been baked into the market. It doesn't help that the equities are in rollover. That is going to change things a little bit. It's probably going to be a little bit less liquid, probably more shorter time frame traders involved in anything that happens unless something big happens. So be careful. Yeah, it's going to be thin. If it comes out as expected, then I think the real news is going to come during the press conference. S&Ps have traded down to a visual short time frame level in the form of a naked point of control down here from the 12th at 66.50 to the tick. That's what tells me that this is shorter time frame control. Traders were looking for that. They got it there and said, now what? And we've been kind of rallying back into the range ever since, back inside the initial balance, back inside yesterday's range. Just really kind of want to watch and see what happens when the release comes out. And again, it's probably going to be a 0.25% cut. That's almost for sure. Of course, anything can happen, but I think we're going to see some volatility and kerfuffleation right after that. And then everybody's going to go back to sitting and probably waiting a little bit for the press conference at 1:30. That's where I think the real news is going to come in. I know Jack has been kind of saying and feeling the same way about it.
Mm-hmm.
Yeah, we got under a minute right now, Hoag. So everyone do yourself a favor, hit cancel all in case you got something. Oh, we got some freaky deaky movement already.
A little pop there.
Cancel all.
One more, Gabe. A little more. I move around. Yeah, cancel all indeed. 100%. So it's going to go with the announcement for the rate. And then we're going to prepared statement, and we'll have the press conference, the Q&A, about the bottom of the hour. But here we go, 30 seconds. Great advice there, Jack. Cancel all, flatten all. Let's get ready to rock here. Keep an eye.
Blood's boiling.
Yeah, I still get Jack for these things, man. Still. Only get it. See what the statements are. Again, I'll be talking about the labor and inflation, right? Dual mandate. Here we go. 24,458.
Now we're trade words. What does the Powell say?
Here we go.
Dome disappeared.
Woo!
It did. All right. Pop there.
Back to the upside initially.
Yep.
The dome is gone.
Yes, it is. Look at that. ES as well. Yep. All right. Confirmed as expected. 25 basis point cut. Gold did pop. Yes, popped.
They
If you
released
see
the
some
remarks at
language
the
there.
same time, so they're
Yeah,
parsing through the language right now. Some of the
yes, they
algos
are.
liked what they saw initially.
Yes, they did.
Woohoo.
10-year popped in price. It's like 600 on the ES just popped in here. 66.75 on the ask.
Party.
Look at that.
Yeah.
700 lot popping
That
in on the offer. We're about 2 points. It's 2 points above right now. Look at that coming on
77,
in. Holy cow.
75.
Wow.
Blood's coming back in the dome now.
Yeah. How see how thin it got there? I don't know. Let me know if
You see
some.
the S&Ps get down to 1s and 2s and little spaces between bids and offers. You know it's
Get out of
thin.
the way. Yup. Get out of the way.
This guy not gonna get filled on a 700 lot.
It's gonna run away from it. Gold selling off here.
Should have marketed it.
Wow.
Yep.
Wow.
And they pulled it. At 600 lot got pulled. Right off the announcement we did pop. What are they saying here? What are they saying? I'm not seeing
What
any.
the heck happened to gold?
Gold sold off hard. Whoa, gold sold off super hard. Holy moly.
Yeah, it did.
We got the
Wow.
plots out.
Damn.
Take a look at
Gold
GC.
sold off. Holy cow. Gold sold off $40, $50. About around 36.85. 36.85. Go full screen. Go full screen gold here. Look at that.
Woo, madness.
That is a-
$50.
That is a
High to
5-minute
low.
chart. Look at that thing. Holy moly. Currently trading 37.18. 37.18. Gold, the big mover right now. Have you seen any language yet?
The dot plots are out.
Okay.
We'll keep an eye on the language. The projections imply an additional 50 basis points of rate cuts in 2025.
More. Okay.
That's what's
Really?
been expected as well. We were saying there was over a 70% chance. After initially spiking up, it looked like. I'll have to look at the
Sure did.
futures. The 10-year rate is down very close to 4%, 4.15 right now.
Prices are cooking to the upside. Gold right back. What was the size on that order that just cleared out the books? Gold trading 37.25. We did bottom out $40 lower right off that announcement at 36.85. More buyers stepping in here in gold. Buyers stepping in the ES, and we're pushing this thing higher. You said 50 basis points more.
Yeah, but this was expected. If you look at the Fed watch for the December meeting, they had by far the most concentrated probability was for 75 basis points of cuts by the December meeting. So that would be a quarter point in each of the next 3 meetings, most likely. 2 more.
Okay.
Today, they've already done it.
Okay, I always like that. Look at the ES chart right now. It's on the 5-minute, cooking high here. 66.86 last trade.
NASDAQ still hasn't taken out the session high. S&Ps have left it behind.
It has. Damn. Yeah, we'll be piping in that press conference live feed at the bottom of the hour. Right now, watch that action play out here. Look at the tilt. 70% long in the NASDAQ. Careful. Be careful. So, the 25 basis point cut, as expected, is priced in.
Yeah, only 1 dissent.
Who? To say yet?
Yeah, it does. You know who it is? Take a guess.
Waller.
Myron, our newest member.
Oh,
Gave her the 50%
really?
basis point.
My man. Oh, wow. Well done. Oh, let's take a look at gold. Go back to gold here.
Rabble rouser.
Look at gold. What a turnaround. Man, oh man, Hoag. What was that?
Phew.
Again, gold.
Illiquidity, my friend. Illiquidity.
Exactly. Exactly what. Holy cow. He just came in and hammered
That was
that thing.
sick.
Gold. We'll bottom out at 36.85. We're now $40 higher. 37.24. Seeing the dollar's getting weaker. What's going on the 10-year? 10-year continuing to pump higher here in price means yields are going down. Wow.
I'm reading through the
Good one here.
statement. The press release is out.
You got a good one. All-time highs in ES, 66.96 in the orders. 12 points away from all-time highs in the ES. Incredible.
Maybe it's just the 1 dissent. I'm trying to parse what's making this particularly bullish with what I see so far. Could be the dot plots. I was expecting more dissents.
For the 50, he comes in here. Let's cut by 50, my guy.
You know what it is? It's the dot plots. I think it's the Fed itself. The median Fed projection shows 50 additional points, basis points in rate cuts. So kind of getting in line with the bond traders we're looking at.
Jack,
We have the beautiful dot plot out.
Yeah, what is the dot plot?
So they give all the Fed members a dot, and they get to chart out for the next. They have a long run, and then through 2028, and they basically put their dot where they think the Fed funds rate will be. And yeah, the fact that they are looking at the 75 basis cuts total this year is new information.
Yep. Yes.
Okay, now we're selling off a little bit.
Yes, they did cut. They did cut rates as expected by 25 basis points. Yes, closing in on is that all-time highs? 37.33. $5 away from that. Yeah. Closing on that. Whoever got filled down there on those, Hoag, on those 85, 36.85s.
That would
be happy. So.
That would have been a wishing order.
Oh man, oh man. Yeah, we got a little pullback coming in here in the ES. We are moving. We are moving big time right now. 66.77 last trade. About 8 points from the highs.
Okay, we are in the mythical 3 handle for 10-year yields right now, 3.999.
I can hear them. I can hear the music. Oh.
Mm-hmm. I'm wondering if they do talk about some political things. They even mentioned that political pressure. Did they allude to that at all? Stay tuned to find out. Bottom of the hour, we will have that press conference from Powell. But right now, gold is closing in on all-time highs, 37.32 last. 37.33. Sorry, all-time highs in gold, 37.39. About $7 from there.
Crude oil yawned.
Yeah. Maybe weekly dollar.
Yeah, the dollar is down. At the same time, I'm not sure what people were exactly
look at this turnaround
expecting.
Gold is cooking higher here. We've seen this turnaround in the NASDAQ. Top out at 24,530. Call it. We're now pulling back right to overnight VWAP 24,460. Gold on an absolute tear to the upside. Look at that chart, man.
It's going.
Yes, it is. Going for all-time highs here, about $1 away. Yep, $1 away from all-time highs. There we go. Yeah. Pew, 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 new all-time highs, and there is no end in sight. 37.41 all-time highs in gold just printed.
Dollar is getting smushed. That's the one that's just kind of straight down at the moment.
Guys, I'm gonna run away for just a couple of minutes. I'll be right back.
Sounds good, Hoag. I got the NASDAQ chart up here. Jack, anything in particular with the language? Anything in the language you're looking for? When he does take to the podium, we will be broadcasting that.
Everything I've seen so far is pretty like boilerplate, except for the obviously that they did make the cut. Would have been interesting if they did not, for instance. But as I said, the dot plots kind of confirming a more cuts than the Fed is kind of let on at a certain point. So they're kind of everyone's getting in line behind 3/4 point cuts.
Okay, what do we got here? You seen this, Jack? All right, downside risks to employment have risen. From the Fed statement, what's the first one to hit? I guess that has to do with that turnaround. Downside risks to employment have risen.
Yeah, they got it out.
Interesting. Okay. They really do. Okay.
Yeah, you can see, I'm looking right now, they have the statement out and they've crossed out what it was on July 30th and shown the parts of change because they use a very like templated thing here. Um, for instance, it started in July with recent indicators suggest. Oh, sorry. It started with although swings in net exports continue to affect the data, recent indicators suggest they eliminated the part about although swings in net exports continue to affect data. They eliminated the part that said and labor conditions remain solid.
Okay.
The unemployment rate is edged up. So that's where your quote you got came from.
Gotcha. Thank you. Great stuff, Jack. 10-year rate is, are we still in the threes there? 3 handle.
Let me check real quick. It is interesting to note that Myron voted for the 50 basis point cut. Waller and Bowman both dissented going with the cut last time of a quarter point, but they went back to the same thing, I guess.
Huh.
They did not dissent it. And
Interesting.
yeah, right now we're a little bit below the 4% handle in the 10-year yields.
And your price continue to pump higher here. NASDAQ has turned completely around. Now trading 24,418. Now 414's trade. Session lows at 24,374. About 30, 40 points off the lows there. Gold, new all-time highs. What a pop. And 37.44. We got crude selling off here a little bit. $64.09. Again, we have the Jerome Powell press conference coming up at the bottom of the hour. NASDAQ continuing to sell off here. 24,403. Now 400s, now into the 300s. ES holding up a little bit better. We were closing on all-time highs in the ES. We got within 12 points or so. And we've turned around. We're about 30 points off those all-time highs, trading 66.63. Now 64 is due trade. Markets are moving.
I would be so interested to see what is the thought, besides just chasing the momentum, is what I guess the dot plots cause the initial move up, but like it doesn't sound, what would I call it? Like a super optimistic report from the changes they made. The Q&A will be huge. We just went on a mission to kill every option.
Incredible. NASDAQ complete turnaround. Just printed some new lows there. Now trading in session lows, 24,365. Session lows there, about 10 points off. That initial release announcement, we did pop all the way up to 24,524.
New lows, NASDAQ. NASDAQ never took out the session high, and it's just barreling to the downside now.
Mm-hmm.
Wow. New lows, NASDAQ. Jack, we were talking about this on Monday. New lows, NASDAQ.
Yeah, someone has to explain buy the rumor, sell the news. If the rumor is strong enough for something, it's already priced in. In this case, we had, 97% chance that there would be a quarter point cut. So it had to be what else was shown in it to move it, right? You see this happen a lot when people go into any stock twits or whatever else after a company releases earnings that beat earnings and then it sells off hard. It's like, this is a crime. This is terrible. Why is this happening? They were good earnings. Well, yeah, but everyone knew that going into advance. It was in their expectations. So it was buy the rumor, sell the news.
Yeah. My dad explained it this way. You got a big crop release coming out in the grains, and everybody's convinced that it's going to be a good release, and it's going to push prices higher. So everybody's long coming into the release, and because of the expectation that it was going to come out and push prices higher, and it comes out that it's going to push prices higher, when everybody's already in it, there's nobody left to buy it. So they all stand around and look at each other and go, why isn't this thing rallying? And then they turn and they say, this ain't working. We got to get out. That's the buy.
Hey, new lows NASDAQ.
Yeah, there it is.
NASDAQ's getting absolutely hammered right now. 24,291. We're looking at about a 300-point turnaround in the last, I'll call it 15 minutes. 24,291 just printed up back up about 40 points from there. It is very thin on that NASDAQ ladder. Holy moly. Be careful. But yeah, Hogue, everyone's leading this one way. Well, they all got to get out, right?
Yep.
Position is going to unwind. Let's see if they want to keep selling into this NASDAQ. Again, 25 basis point cut as expected. What was it? Risk to employment increase. I believe that was something along
I
the
mean, I
lines of
have,
that.
Gabe, if you have that back there, we can throw up. This is, what they released. So you see they use pretty much the same template, and they just stripped out here what they changed. Well, I mean, this is the best we could do. It's a lot of text. It's not the best thing for showing.
Yeah.
But you see the change in descent. There's that thing, and judges the downside risk to employment have risen in light of the shift of the balance of risk. So they didn't change too much. But they are acknowledging the labor market slowing.
That seems to be the most important thing, because
this one's
we're seeing inflation remaining somewhat elevated.
Yep, that's the big one.
Yep,
we're pricing in 50 more basis points.
We kind of already were, right?
What's the disconnect?
Well, no, look at it this way. Like, the bond market was already pricing in, like, when I talk about how in December there's like a 70% chance of 3/4 of a cut, and then the Fed kind of came out and acknowledged that they were kind of in the same place, right? If they had if they had said, well, we only think there's a 1/4 point cut or something, that could shake things up.
Okay.
Also, this, there doesn't have to be a reason. Like, we haven't changed. Like, we're kind of right back to where we were.
True.
Right.
Not too long before it. Right. Things just whip around. There's all these. It's an illiquid market. There's so many options levels to hedge. You don't know what's.
That's true. Let's take a look
Things
at
can
the
just
ES
happen.
chart. That's true. This is the market. ES about 8 points off the lows. Buyers did step in. Oh, I mean, we got to hold on that, Gabe. Right now, we got 5,000 people watching all across the globe. While you're at it, click subscribe, click like, click notify. Again, Fed rate decision, 25 basis point cut as expected. The language is coming out a little interesting. There's some traders scratching their heads. Again, bottom of the hour.
This is what we were expecting. Volatility, illiquidity, and kerfuffleation. That's exactly what we got.
I wasn't expecting gold to bottom out like that. This is wild, Hogue. I wasn't expecting this. Yeah, we got a doozy on our hands right now.
Yes, we do.
Gold. Yeah, let's take a look at that gold over time. Look at this.
Right back to where it started.
Gold. The announcement, gold popped all the way up to making new all-time highs, 37.44. And the big sell order came in, like Hogue said, very illiquid, and we bottomed out at 36.85, went right back up, $40 higher. We were looking at about a $60 range in gold.
That's huge.
It is
huge.
The odds of the October cut went from 71% to 94% following their release. We're getting a rare triple juke here. We had the move up, we had a big move down. Switching away again here. This is beautiful.
That's what it's all about. Let's take a look at some of these prices. Again, prices are moving quickly. Last trade in the NASDAQ, 24,380, call it. Pushing higher here. Look at the ES. ES trading 66.55, about 15 points off of the lows there. Points off the highs. They come in and buy this. And bottom of the hour, we will have the press conference, the Q&A. Expect some more fireworks. This is going to be a good one.
No doubt.
Get your popcorn ready.
This is a good one, man. Oh, where'd my gold chart go? Looking gold. Again, also 10-year dipping into the 3% handle.
Well, we're almost back to 4 now.
Okay, that makes sense.
Didn't last down there too long.
Yep.
Yep, we're above 4 again.
Interesting language. Interesting language indeed. Gold trading 37.23. $20 the high off the highs. All-time highs. Very thin, Hope. Even the ES ladder got especially vaporized there.
Yeah, it did.
Man, oh man. You got a good one.
Dollar's getting smushed.
Still. Yep, lower rates. Lower rates.
Cheaper money.
$100. Yep.
Actually get some moves in crude oil now.
I saw that. Bottom out at 64.01. So off about 40 cents. Last trade in NASDAQ, 24,351. Bottom out at 24,291. We're looking at almost a 300-point range in NASDAQ in the last, 21 minutes. 21 minutes. Is that true? VIX is flat?
Yeah. It's flat, but like, if you think about it, it makes sense. There's a little bit of movement here, but also there's like a volatility crush because we have part of the information out. Going into the Q&A though, it's still super low, right? It's like 1640 right now.
Yeah.
Where they want to take this next? We got 7 minutes till the bottom of the hour. Oh man, Jack, I wanted you to what was that Poly Markets market on what
Paul I got a bunch of them up right now.
Okay, cool.
We got there's an 83% chance that he will say inflation 40 plus times. Let me see what happened. There was on how many Fed dissents. I gotta see what the chart was here because I would have expected more.
Same. All right, ES on the move to the upside. Here we go. 66.63, about in the middle of the range. And from this last 22 minutes.
S&Ps are just like ripping 10 points each direction.
Yes, they are. Any size on the ladder, Hoag?
I mean, so the blood's come back in. 140 at 66.65 on the offer. Nothing really as far as big, but at least we're back in the double digits on each bid and offer.
NASDAQ turning around as well.
Well, the odds of one dissent jumped from 26 to 100% in Poly Market. Jobs of 35% were looking for the 3 dissent like I was. That went to 0 pretty quick.
Okay.
Pumping higher. Back to VWAP.
Back to VWAP indeed. The 10-year prices pulling back off those highs. Any more headlines coming out? An additional 50 basis points of rate cuts in 2025. Okay.
Let's do it.
How's that going to work?
Well,
okay.
We're right back to where we were before they released this. So that was...
Yes, we are. Yes, we are.
A lot of movement to go nowhere.
Pretty much. Anything on the NASDAQ ladder. Some traders got 67% long in the tilt. Pretty thin right now. You're about 130 points off the lows in the NASDAQ that we just bottomed out there about 8 minutes ago. 8 minutes ago. And we continue to pump higher here. 24,416. Last trade. They cut 25 basis points. 25 basis points. Who are the volatility? Indeed. Who did? Where are the volatility? Well, we'll see if Powell can get the markets rocking as well.
This is great. With 5 minutes until it, we opened at 1 o'clock right at the last trade, 66.65 half in the ES, and we have done a big old round turn back and back again. I guess it was all priced in.
This is
a volatile kerfuffle.
Sure was. The 10-year prices are selling off. highs, and your prices go down, rates, yields go up.
Gold's basically the same. I mean, it's basically where the
Oh,
1 o'clock number came out. Right back to it.
Can we see the time and sales later? I want to see the time and sales or on whatever that print was. That was incredible. $66.63 last trade in the NASDAQ. I love it. Right in the middle of the range. Again, low in the ES, 66.40, high of 66.86. We're trading right in the middle right now. New highs, new lows. Made in the last 26 minutes. 26 minutes.
Funny if you just if you just take your hand and cover that 20-minute period right there, the chart looks pretty tame.
It's like nothing happened. Man. Range in the NASDAQ since the announcement. Low of 24,291. High of 24,540. Volatility, yes, is back. Let's see what Chairman Powell has to say. There's going to be a lot of eyeballs, a lot of ears tuned into this one. Again, we'll be pumping in that feed here on TopstepTV. Buckle up. We got Jack. We got Hoag in the house. We got Power Hour coming up later.
This off Truth Social. They came in and said, breaking Federal Reserve announces first rate cut of Trump's second term. The first comment should have been 2%.
200 basis points?
2% cut, yeah.
Okay.
Well, at least
it wasn't even Trump saying that. It wasn't even Trump.
Gnarly.
Who said it?
That would be so gnarly if he did that.
I don't know, some NM Patriot. I don't know who that is.
Incredible. Very thin on the ladder here in the NASDAQ. Got a 40 lot down there. It's gone. Okay. Sounds good, Gabe. Sounds good.
They're playing chicken. Let's put a 500 lot bid in and then cancel it real quick. Just hope it doesn't get hit.
How about that? The ES, they threw that 700 lot in there. Market ran right away from it. Let's start with good afternoon. Dual mandates. Yes, you are for the watch party. Hell yeah. Click like, click subscribe. Get the goods here. Continue to pump higher here in the ES. ES now closing in about 15 points off the high of day 66.71. NASDAQ following suit as well. Now about 100 points off the highs.
Gotta keep my cursor off the dome.
Oh, yeah, I know, man.
You get those intrusive thoughts that make you want to click one.
I know. All the time. Wow. Okay, what a reaction.
Devil on the shoulder.
What's the word?
Do it. Come on, you know you want to.
Mm-hmm.
More people trading it. You can see the
Luckily,
volume.
I don't know what
spikes.
the hell I want to do.
Okay, yes. Certainly remains elevated, perhaps with tariffs.
Russie's up 2%.
Okay. Sellers did step back in there ever so slightly. Maybe some profit taken after this relief rally, if you want to call it that. A 30-point relief rally in the ES in the last 9 minutes. Hey, Gabe, if you want, we could just, yeah, Gabe, we could just show the empty, or just show the room, or just show the empty podium. Yeah, okay, that's fine.
Exciting stuff.
It's crazy. We got a good one here. We got a good one.
Will he have the purple tie on?
Should we step into the podium any second now? So what we're gonna pump it. There we go. There we go. Whoa.
Yeah.
Walk up music for all.
He's playing the Grateful Dead.
So we're gonna be we'll pump in the audio here. Hoag, Jack, and myself will take a back seat to Powell. He's gonna read the prepared remarks and then go right to Q&A. I'll go full screen. How about this? Jack, you want to go full screen to ES? Or we
Yeah.
go full screen to NASDAQ, and I'll go full screen to gold. And we can just pop. Here we go. Jerome Powell, here we go.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. While the unemployment rate remains low, it has edged up. Job gains have slowed, and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated.
He's just reading the prepared
In support of our
remarks right
goals
now.
and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by a 0.25 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles has picked up from last year's pace. Activity in the housing sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June. In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and lower labor force participation. Even so, labor demand has softened, and the recent pace of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant. In addition, wage growth has continued to moderate while still outpacing inflation. Overall, the market slowing in both the supply of and demand for workers is unusual. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up, on balance, over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6% in 2026 and to 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 0.25 percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, and 3.1% at the end of 2027. This path is 1/4 percentage point lower than projected in June. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Policy is not on a preset course.
These candles.
The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Oh boy.
Here we go.
Thank you. Chris Rugaber at Associated Press. As you know, Fed Governor Stephen Miron has kept his position at the White House, even as he's joined the Fed board. This is the first time, I believe, the Fed's board has had someone with executive branch ties in decades. Does this compromise the Fed's independence from day-to-day politics? And relatedly, how can you maintain the public's perception the Fed is politically independent with this dynamic? Thank you.
So we did welcome a new committee member today, as we always do, and the committee remains united in pursuing our dual mandate goals. We're strongly committed to maintaining our independence, and beyond that, I really don't have anything to share.
Okay, and then just as a quick follow-up, I'm sorry, can you and other Fed officials have spoken extensively about the impact of tariffs on inflation, although perhaps with many companies appearing to eat the tariffs, tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here, that tariffs are the reason we're seeing some slowing, particularly in the labor market, rather than in inflation? Thank you.
You know, it's certainly possible. You know, we're beginning to see, we have begun to see goods prices showing through into higher inflation, and actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year. Those are not very large effects at this point, and we do expect them to continue to build over the course of the rest of the year and into next year. And you know, it's also possible that there may be effects on employment, but that I would say if you're looking at why employment is doing what it's doing, that's much more about the change in immigration. So the supply of workers has obviously come way down. There's very little growth, if any, in the supply of workers. And at the same time, demand for workers has also come down quite sharply, and to the point where we see what I've called a curious balance. It's, you know, typically when we say things are in balance, that sounds good, but in this case, the balance is because both supply and demand have come down quite sharply. Now demand coming down a little more sharply because we now see the unemployment rate edging up.
Nick Timmeros of the Wall Street Journal. Chair Powell, do economic conditions and the balance of risks no longer warrant a restrictive policy setting?
So I don't think we can say that. What we can say is this, that over the course of this year, we've kept our policy at a restrictive level, and people have different views, but a clearly restrictive level, I would say. So, and we were able to do that over the course of this year because the labor market was in very solid condition with strong job creation and all those things. I think if you go back to April and now look at the revised job creation numbers for May, June, July, and August, you can I can no longer say that. So what that means is that the risks were clearly tilted toward inflation. I would say they're moving toward equality. Maybe they're not quite out of equality. We don't need to know that. But we do know that they've moved meaningfully toward greater equality, the risks between the two goals, and that suggests that we should be moving in the direction of neutral, and that's what we did today.
Under what circumstances would a larger than 25 basis points rate cut be warranted, and how seriously was that option entertained at your meeting this week?
There wasn't widespread support at all for a 50 basis point cut today. You know, I think we've done very large rate hikes and very large rate cuts in the last 5 years, and you tend to do those at a time when you feel that policy is out of place and needs to move quickly to a new place. That's not at all what I feel certainly now. I feel like our policy has been doing the right thing so far this year. I think we were right to wait and see how tariffs and inflation and the labor market evolved. I think we're now reacting to the much lower level of job creation and other evidence of softening in the labor market and saying, well, those risks are maybe not fully balanced, but moving in the direction of balance now. And so that warrants a change in policy.
Colby Smith with the New York Times. Should we be viewing today's cut as the committee taking out some insurance against the possibility that the labor market is at risk of weakening?
Gold getting
or is it the
smoked
committee's
again.
view that the dynamics of a downturn are already in place? I guess I'm just trying to square the shift in the rate forecast in the SEP towards more cuts than just 3 months ago, with the fact that the forecast for unemployment didn't change.
Yeah, I think you could think of this in a way as a risk management cut, because if you look at the SEP, actually, the projections for growth this year and next actually ticked up just a little bit, and inflation and unemployment didn't really move much. So what's different now? What's different now is that you see a very different picture of the risks to the labor market. You've seen, we were looking at 150,000 jobs a month at the time of the last meeting, and now we see the revisions and we see the new numbers. And I don't want to put too much emphasis on payroll job creation, but it's just one of the things that suggests that the labor market is really cooling off, and that tells you that it's time to take that into account in our policy.
So just looking at the SEP once again, the median participant has inflation higher than previously expected by the end of next year, and the Fed not getting back to the 2% target until 2028. So I guess I'm just wondering how you characterize the risk to price pressures of kicking off a series of cuts at this point.
Hello.
Yeah, so I would look at it this way. We fully understand and appreciate that we need to remain fully committed to restoring 2% inflation on a sustained basis, and we will do that. At the same time, we've got to weigh the risks to the two goals. And I would say since April, to me, the risks of higher and more persistent inflation have probably become a little less. And that's partly because the labor market has softened, GDP growth has slowed. So I would just say that the risks there have been less than one might think. And in terms of the labor market, what we're seeing is unemployment is still low. It's still a relatively low rate, but we're seeing downside risks.
Michael McKee from Bloomberg Radio and Television. I'm a little confused by your explanation of the Fed cutting rates because of unemployment. If you think that most of what's happening in the employment area is related to immigration, which your rate cuts wouldn't address, how do you see that as more important than inflation, which has remained almost a full percentage point above your target?
Well, I was saying that what's happening in the labor market has more to do with immigration than it has to do with tariffs. That was the question I was answering. So I wouldn't say that all of what's happening in the labor market is due to tariffs. I mean, you clearly have a slowing in it due to immigration. You clearly have a slowing in demand, which is now perhaps more than that in supply.
And we know that because the unemployment rate has ticked up. So, that's what I meant by that.
If I could follow up, every year since 2015, the SEP has forecast that you would hit your target 2 years later. And this year, this SEP says you're going to hit your target 2 years later. 2% does not seem to be in sight. Does that suggest that the 2% target is not really achievable? And does this present any credibility problems for you in telling people that that's what you're going to do if you can never reach it?
Well, I mean, you're right. It does say we're going to get to 2% inflation in 2028, at the end of 28. But that's literally how you put the projections together. You're writing down a rate path, which is designed to create, over the course of the SEP, time frame, 2% inflation and maximum employment too. So that's all that is. No one really knows where the economy will be in 3 years. But the nature of the exercise is to write down policy that you believe would return to the 2% goal over at least by the end of the exercise.
Thanks, Gabe.
Thanks so much, Elizabeth Schulze with ABC News. The latest inflation report shows that prices are still going up across key categories for many households, including groceries. What will the Fed do if prices pick up more?
So our expectation, and you can see this consistently through the year, has been that inflation will move up this year, but that basically because of the effects on goods prices from tariffs, but that those will turn out to be a one-time price increase as opposed to creating an inflationary process. That's been our forecast. Pretty much all the individual forecasts say that. We can't just assume that, though, right? We have to. Our job is literally to make sure that that is what happens, and we will do that job. Right now, the situation we're in is that we see inflation. We continue to expect it to move up, maybe not as high as we would have expected it to move up a few months ago. The pass-through of the tariffs into inflation has been slower and smaller. The labor market has softened. So the case for there being a persistent inflation outbreak is less. And so that's why we think it's time for us really to acknowledge that the risks to the other mandate have grown and that we should move in the direction of neutral. So what will we do? We'll do what we need to do, but we have two mandates and we try to balance them. For a long time, our framework says that when our two goals are in tension, this is quite an unusual situation. How do we decide what to do? Because our tools can't do two things at once. What we do is we ask which is farther from, how far is each from the goal and how long is it expected to get to the goal? So, and then we think about those things and we see, as I mentioned, our policy had been really skewed toward inflation for a long time, really. Now we see that there's downside risk clearly in the labor market, and so we're moving in the direction of more neutral policy.
How concerned are you about the slowdown in the jobs market for households at home, especially younger Americans struggling to land a job?
So it's an interesting labor market, and obviously we think it's appropriate that we reduce our rates so that we become more neutral, which presumably will be better for the labor market. You see people who are sort of more at the margins, so kids coming out of college and younger people, minorities are having a hard time finding jobs. The overall job finding rate is very, very low. However, the layoff rate is also very low. So you've got a low firing, low hiring environment, and the concern is that if you start to see layoffs, the people who are laid off there won't be a lot of hiring going on. So that could very quickly flow into higher unemployment. In a healthier economy, healthier labor market, there would be jobs for those people. But now the hiring rate is very, very low. So that's been a growing concern over the last few months. And it's one of the reasons why we think it's appropriate that we begin to shift our policy focus toward a more balanced one.
Steve Leisman, CNBC. Mr. Chair,
Leisman.
In the past, during rate cuts, you used the word recalibration. And I wonder if you pointedly did not use it this time. And in fact, when you said policy is not on a preset course, did you mean that as sort of the opposite of recalibration? Are we meeting to meeting, data point by data point? Are we in the process here of getting back to neutral? Thank you.
So I think we're in a meeting by meeting situation. We're going to be looking at the data. You know what? Let me say a word about the SEP really here. So we often point this out. What the SEP is it's an accumulation of the individual projections of 19 people, showing what they believe at a particular moment in time to be the most likely path for the economy and thus the appropriate path for monetary policy as well. And as you know, we don't debate or try to agree on what that is. We just write them down and accumulate them. We do sometimes discuss them. And so we always say we're not on a preset path, and we really mean that. The actual decisions we make are going to be based on the incoming data, the evolving outlook, and the balance of risks at the time the decisions are actually made. So you will have seen that we have 10 participants out of 19 who wrote down 2 or more cuts for the remainder of the year, and 9 who wrote down fewer than, in fact, in a good number of cases, no more cuts. So rather than looking at this as certainty, I would encourage people, as always, to look at the SEP as through the lens of probability. And so there are different possible outcomes and likelihoods rather than this one is certain and this one isn't happening. So that's what I would say.
Thank you for getting to my follow-up question, which was, is the dispersion in the outlook a sign of uncertainty of policy in the meetings to come? Thank you.
You know, it is such an unusual situation. Ordinarily, when the labor market is weak, inflation is low. And when the labor market is really strong, that's when you got to be careful about inflation. So we have a situation where we have two-sided risk. And that means there's no risk-free path. And so it's quite a difficult situation for policymakers. And it's not at all surprising to me that you have a range of views. It's not so much about having different views for the path of the economy, but it's partly that. But it's also partly about what's the right thing to do in light of the tension between the two goals. How do you weight them? How worried are you about one versus the other? And so it's natural. I think it would actually be surprising if you didn't have a pretty wide range of views based, in this kind of highly unusual situation, and we do. So, but we get together, we discuss, we have a great discussion, and then we decide what to do and we act. But you're right that it's a wide dispersion of views, and I think that's understandable and natural in the current situation.
Hi, Victoria Guida with Politico. You've talked a lot about Fed independence and the importance of it over the years. Whoa. But as markets have questions about what exactly President Trump's intentions are with the Fed, what would you point to as the things they should be watching to determine that the Fed is still making decisions based on the economic outlook rather than political considerations?
Is the 10-year yield, Andre?
Look, it's deeply in our culture to do our work based on the incoming data and
all the tenure
and never consider anything else. That's just everybody who's at the Fed really feels strongly about that way. So, you'll know it by the way we talk about what we're doing, by the speeches that people give, by the decisions that we make. You'll know that we're just still going to do that. That's all we do. And we don't frame these questions at all or see them in terms of political outcomes. I think when you get to another part of Washington, everything is seen through the lens of, does it help or hurt this political party, this politician? That's the framework. And I think people find it hard to believe that that is not at all the way we think about things at the Fed. We're taking a longer perspective. We're trying to, serve the American people as best we can. So I think you would be able to tell. I don't believe we'll ever get to that place. I would say we're doing our work exactly as we always have now. And people they're making their arguments, and we're having a great discussion around these challenging issues. So,
do you see the court case around Lisa Cook as being related to questions of Fed independence?
I see it as a court case that it would be inappropriate for me to comment on.
Smooth.
Yep. Thanks, Mr. Chairman. Edward Lawrence from Fox Business. So we saw the preliminary benchmark revisions down 911,000. The revisions for June were the first negative revisions we've seen since December of 2020. How can the Fed base important decisions on rate and what to do with the interest rates on data that seems to be, as you've called it in the past, noisy?
So on the QCEW, the revision that we saw was almost exactly what we expected. It was amazing how close the expectation was. So, and the reason for that is, for the last bunch of quarters, there's been almost a predictable overcount. And I think the Bureau of Labor Statistics really does understand this, and they're working hard to fix it. It's got to do, of course, it has something to do with low response rates, but it's also got to do with what's called the birth-death model, because a good amount of job creation happens around new companies and how many go out of business, how many are founded. And it's just really hard. You can't survey for that. You've got to have a model that predicts that. And it's quite difficult to do, especially when the economy is undergoing big changes. So, and they've been working on that and are making progress on it. But the data we get is still well good enough for us to do our work. To the extent we have issues around data right now, it's about low response rates. That's happened all over really. Response rates are just lower to surveys now, both in and out of the government. And it's no great secret. We want higher response rates, and we need those to have, less volatile data. And the way to get that is to make sure that the agencies that collect the data have sufficient resources to drive higher response rates. It's not a complicated problem, but that's what it takes. It's not a mystery. That's what it takes. The other thing I'll say, Edward, is in the case of the job creation, the response rate is quite low for the first month, or lower for the first month. By the time you get to the second or third month, you're still collecting responses for that last month, for that prior month, and you get to the place where the data are much more reliable by the second and certainly the third month. So it's not that we don't get the data, it's just that we get it a little later.
If
we're at the 6550
if that holds,
SPX.
it's 51% of the jobs that we thought
Everything's
weren't really there. Shows a weaker job market coming into this year. If you had had that information, would it have changed your mind related to where the interest rates should be? Should there have been a cut earlier?
We have to live life looking through the windshield rather than the rearview mirror, as you know. And all I can tell you is we see where we are now, and we take appropriate action, and we took that appropriate action today.
Thanks. Howard Schneider with Reuters. So as you mentioned a minute ago, some margins of the job market would suggest that the slide's already happening. A black unemployment rate in August was above 7%, declining work week, difficulty among college graduates finding work, rising youth unemployment. Why do you think a quarter percentage point now is going to arrest that?
Well, I didn't say that I thought a quarter point would make a huge difference to the economy, but you've got to look at the whole path of rates, right? And the market's has already been baking in expectations. I mean, our market works through expectations, right? So I think our policy path really does matter. And I think it's important that we use our tools to support the labor market when we do see signs like that. I did mention that, you see minorities, unemployment going up, you see younger people who are more vulnerable economically, more susceptible to economic cycles. That's one of the reasons, in addition to just overall lower payroll job creation, that shows you that at the margin, the labor market is weakening. I would also point to labor force participation. Some part of the significant decline in labor force participation over the last year has probably been cyclical in nature rather than just the usual aging process. So we put all those together, and we see that the labor market is softening, and we don't need it to soften anymore, don't want it to. So we use our tools, and it starts with a 25 basis point rate cut, but the market's also pricing in a rate path. I'm not blessing what the market's doing at all. I'm just saying it's not just one action.
As a follow-up to that, the growth mix right now seems very concentrated in investment and on the consumer spending side in the higher income groups. Do you feel that that's an unsustainable mix for the economy moving forward?
I wouldn't say that. I mean, you're right. Those are two. We're getting unusually large amounts of economic activity through the AI build out and corporate investment. I don't know how long that will go on. No one does. In terms of spending, you saw that the consumer spending numbers were well above expectations, and that may well be skewed toward higher earning consumers. There's a lot of anecdotal evidence to suggest that. Nonetheless, it's spending. So, I mean, I think the economy is it's moving along. Economic growth is going to be 1.5% or better this year, maybe a little better. Forecasts have been
back to where we were.
What a turnaround in the ES.
Labor market
And
is
NASDAQ.
unemployment is low.
Or juice so far.
But downside risks, but it's still a low unemployment rate. So that's how we see it.
Hi, Stephanie Rule, MSNBC. Treasury Secretary Scott Bessent has said that the Federal Reserve suffers from mission creep and institutional bloat. He's now calling for an independent review. Would you support an independent review, or are you open to any sort of reform in any areas of the Fed?
I, of course, am not going to comment on anything the Secretary says or really any other officer says. So in terms of reform at the Fed, we just went through a lengthy and I think very successful process of updating our monetary policy framework. I would say there's a lot of work going on behind the scenes around the assets we have in the Federal Reserve System and at the board. Are they the right size? We're actually going through a 10% headcount reduction through the whole Fed, including the board and all the reserve banks. The employment at the Fed at the end of that
Another push
will be
higher than NASDAQ.
basically at the same level
100
it
points
was
from
more than
highs.
10 years ago. So we will have had zero
Yes, cooking the upside
job
as well.
growth for more than a decade when we're finished with that. And I think we'll probably do more than that. So I think we're certainly open to constructive criticism and ways to do our jobs better.
But not an independent review?
We're certainly open to always trying to do better.
VWAP.
Wow, what a pump.
Mr. Chairman, Neil Irwin with Axios. There's been some debate lately on whether AI is already starting to affect the labor market in terms of lower labor demand, higher productivity by contrast. Do you buy that? And if that is true, does that have implications for the monetary policy setting?
So there's great uncertainty around that. I think my view, which is also a bit of a guess, but widely shared, I think, is that you are seeing some effects, but it's not the main thing driving it. And so particular focus on young people coming out of college. And yeah, there may be something there. It may be that companies or other institutions that have been hiring younger people right out of college are able to use AI more than they had in the past. That may be part of the story. It's also part of the story, though, that job creation more broadly has slowed down. The economy has slowed down. And so it's probably a number of things. But yeah, it's probably a factor. Hard to say how big it is.
NASDAQ ladder, very, very thin.
Thanks, Mr. Chairman. What evidence do you see of tariffs showing up in inflation?
Well, if you can take goods, just sort of the broad goods category, and last year, goods inflation was negative. If you go back 25 years, that was the typical thing, was that goods inflation was, goods prices generally went down, even adjusting for quality. So that was not the case during the pandemic, of course. Goods inflation went very high, but we had essentially returned to zero or slightly negative inflation. Now, I think goods inflation over the course of the past year is 1.2%, which doesn't sound like a lot, but it's a big change. So we think, analysts have different views, but we think it's contributing, 0.3 or 0.4, something like that, to the current core PCE
right
inflation reading, which is 2.9%.
6,600
So
SPX.
it's contributing. What
almost
seems to be
exactly
happening is
points.
that the tariffs are mostly not being paid by exporters, mostly being paid by really the companies that sit between the exporter and the consumer. So if you buy something and you sell it through retail or you use it to make a product, you're probably taking a lot of those costs on and not able to pass it fully along to the consumer yet. That appears to be what we're seeing. All of those companies and entities in the middle, they'll tell you that they have every intention of passing that through in time, but they're not doing that now. To the consumer, the pass-through has been pretty small. It's been slower and smaller than we thought. But the evidence is it's very clear that there's some pass-through.
I also wanted to ask
$15.
if you could share with us the conditions under which you might consider leaving the Fed in May?
I have nothing new on that for you today.
Tell him, Paul.
Hi, Katerina Saraiva with Bloomberg News. I just wanted to follow up on one of your answers just a couple minutes ago. We've often heard you talk about how you and your colleagues, do not think about politics. This does not enter the room. But one of your new colleagues does come from this world, right, where everything is seen through this framework of politics and of what party is being helped, and that person is still employed by the White House. How can markets and the public interpret, some of his speeches, for example, and then some of the forecasts that we see today? I mean, the median for this year was moved because of the introduction of his forecast. I'm talking about the number of rate cuts seen this year. What do you say to markets and the public that are trying to interpret, what you guys are saying?
So there's 12 vote, 19 participants of whom 12 vote, as you know, on a rotating basis. So no one voter, can really. The only way for any voter to really move things around is to be incredibly persuasive, and the only way to do that in the context in which we work is to make really strong arguments based on the data and one's understanding of the economy. That's really all.
We're going to get to the highs in the NASDAQ.
That's how it's going to work.
70 points to go. 70 points to go.
I think that is the way the institution. That's in the DNA of the institution. That's not going to change.
And then I wanted to ask about a Gallup poll that showed that Americans now have more confidence in the president than the Federal Reserve when it comes to doing what's right for the economy. Why do you think that is, and what's your response? What's your message to the public?
Our response is we're going to do everything we can to use our tools to achieve the goals that Congress has given us, and we're not going to get distracted by anything. So I think that's what we're going to do. We're just going to keep doing our jobs.
And we're watching Chairman Powell press conference live here on TopstepTV.
Claire Jones, Financial Times. Given the range of views expressed prior to the meeting, I think there was a lot less dissent today than a lot of people expected. It'd be good to know just what you think the drivers were of coming to that very strong consensus in the meeting, and also on the flip side to just explain why the dot plots are really so scattered between, someone even expecting rates to end up higher by the end of the year to 5 cuts. I mean, what were the kind of range of views you heard about, on one side, why there was so much support for a cut today, and on the flip side, why there's so much divergence about what comes next?
So I think there's quite a wide assessment that the situation has changed with respect to the labor market. Whereas we could still say, and did say in July, at the time of the July meeting, that the labor market was in solid condition, and we could point to 150,000 jobs per month and many other things. I think that the new data that we've had, and it's not just payrolls, it's other things as well, suggests that there really is meaningful downside risk. I said there was downside risk then, but I think that downside risk is now a reality, and there's clearly more downside risk. So I think that's broadly accepted. And so that meant different things for different people. Some wrote down, almost everyone wrote down, supported this cut, and some supported more cuts and some didn't, as you will see from the dot plot. So that's just the way it is. I mean, people have, you have people who take this work very seriously, think about it all the time, do their work, discuss it with our colleagues. We endlessly discuss this between ourselves, and then we have a meeting where we put it all out on the table, and this is what you get. And you're right, there's a range of views in the dots, and I think that's, like I said, very unsurprising given the quite unusual, historically unusual nature of the challenges that we face. But let's remember, though, the unemployment rate's 4.3%. The economy's growing at 1.5%. So it's not a bad economy or anything like that. We've seen much more challenging economic times. But from a policy standpoint, the standpoint of what we're trying to accomplish. It's challenging to know what to do. There are, as I mentioned earlier, there are no risk-free paths now. It's not incredibly obvious what to do. So we have to keep our eye on inflation. At the same time, we cannot ignore and must keep our eye on maximum employment, which is those are our two equal goals. And you will see that there are just a range of views on what to do. Nonetheless, we came together today at the meeting and acted with a high degree of unity.
Thank you. Archie Hall from The Economist. You mentioned earlier that job creation was running below your guess at its break-even rate. I'd be curious to hear a bit more about that and where you think the break-even rate is.
So there are many different ways to calculate it, and none of them is perfect. But it's clearly come way down. You could say it's somewhere between 0 and 50,000, and you'd be right or wrong. I mean, there's just many different ways to do it. So wherever it was, 150,000, 200,000 a few months ago, it's come down quite significantly. And that's because a very lower amount of people are joining the labor force. The labor force really not growing much at this point. And that's a lot of where the supply of labor was coming from over the last 2 or 3 years. So we're not getting that now. We've got much lower demand. It's interesting that supply and demand have really come down together so far, except now we do have unemployment ticking up just one tick outside of the range where it's been for a year. 4.3% is still a low level, but I think this speedy decline in both supply and demand has certainly gotten everyone's attention.
I'll follow up if I may. You mentioned the downside risk to employment a fair amount, but it's striking that measures of kind of activity and output for the third quarter, those that we have, seem pretty strong. The Atlanta Fed's GDP now is very strong. You mentioned strong PCE numbers as well. How do you square those things? Is there a chance actually could be upside risk to the labor market if those activity measures are right?
Well, that would be great. We'd love that to happen. So I don't know that you see a big tension there, but it's gratifying to see that economic activity is holding in, and it's a good bit from consumption. It looks like consumption was stronger than expected, what we got earlier this week, I guess. And also we're getting, a fairly narrow sector is producing a lot of economic activity, which is the AI build out and, business investment. So, we watch all of it, and I would say we did move up. The median for growth for this year actually moved up in the SEP between the June and September SEPs. So, and really the inflation and labor market didn't change much. It's really the risks that we're seeing to the labor market that were the focus of today's decision.
Nicole. Hi, Nicole
now we
with
go down.
Barron's. Thank you for taking my question.
This is incredible.
Given the cumulative impact of high interest rates on the housing
Gabe, if you're
sector,
ready, we can do a
I'm
quick
wondering how
one.
concerned you are that current rate levels are exacerbating
are-
housing affordability issues and potentially hindering household formation and
Thanks,
wealth
Gabe.
accumulation
We
for a
are
segment
Tuning
of the
live to
population.
Chairman Powell's press conference here on Topstep
housing
TV.
is
Dakota
an
will be joining
interest-sensitive
us here
activity.
when Powell does finish
So
up.
it's at the very
the bottom of the
center
hour. Jack,
of,
are you having fun?
monetary policy.
Having so much fun, Andre.
This is
Economic
incredible.
hit, and we
10-year
cut
yield is the
rates
most
to
interesting thing to me
zero.
so far. Big spike
The
down
housing
above
companies
the
were
highs where it
incredibly
was
grateful,
before then.
and it was really they said that was the only thing that kept them going.
Be tracking that.
We cut
Okay,
so
sounds good.
aggressively.
All right, we'll go back to Powell. We'll get Jack's thoughts.
And they were able to finance.
When
because
Powell does
we did
conclude,
that.
Dakota will be joining us
The other
shortly.
side of
Gold
that is
pushing
when
lower here.
inflation
Watch
gets
out.
high and we raise rates, and you're right, it does burden the housing industry, and so rates have come down a bit, and as that happens, we don't set mortgage rates, but our policy rate changes do tend to affect mortgage rates, and that has been happening, and that'll of course raise demand. Lower borrowing rates for builders will help, builders will help supply. And so some of that should happen. I think most analysts think that it would have to be pretty big changes for it to matter a lot big changes in rates to matter a lot for the housing sector. And the other thing is by achieving maximum employment and price stability, that's a strong economy. That's a good economy for housing. And then the last thing I'll say is there's a deeper problem here. There's not a cyclical problem that the Fed can address, and that just is a pretty much nationwide housing shortage. Or a lot of places in the country just don't have enough housing for people, and all of the areas around metropolitan areas like Washington, for example, are very built up, and so you're having to build farther and farther out, and so that's where it is.
And just a quick follow-up. During the last SEP, or the press conference following the last SEP, you seemed to indicate that policymakers lacked conviction about their projections, and I'm wondering if you still feel that way.
Forecasting is very difficult even in placid times, and as I've mentioned before, forecasters are a humble lot with much to be humble about. So I think right now is a particularly challenging time, even more uncertain than usual. And so I don't know any forecaster anywhere, really. Ask any of the forecasters whether they have great confidence in their forecast right now. I think they'll honestly say no.
Placid times.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. If you're cutting rates, why continue to reduce the size of your balance sheet, then pause the unwinding?
Well, I think we're cutting the size of our balance sheet quite marginally now. As you know, with the balance sheet, we're still in an abundant reserves condition, and we've said that we would stop somewhat above somewhat above an ample reserves level. That's where we are, and we're getting closer to that. We're monitoring it very carefully. We don't think that has at all significant macroeconomic effects. These are pretty small numbers moving around inside a giant economy. The level of runoff is not very large, so I wouldn't attribute macroeconomic consequences to that at this point.
And at his recent confirmation hearing, Stephen Myron brought up that the Fed actually has 3 mandates from Congress, not just jobs and stable prices, but also moderate long-term interest rates. So what does Congress mean by moderate long-term interest rates? How should we understand that when we see the 10-year Treasury moving? And how do you think about this part of the mandate when policy choices like rate cuts or balance sheet reductions affect the long end of the yield curve?
So we always think of it as the dual mandate, maximum employment and price stability, for a long time, because we think moderate long-term interest rates are something that will result from stable inflation, low and stable inflation, and maximum employment. So we haven't thought about that for a very long time as a third mandate that requires independent action. So that's where that is. And there's no thought of, as far as I'm concerned, there's no thought of considering that we somehow incorporate that in as something in a different way.
Thanks, Chair Powell. Matt Egan from CNN. We recently learned that average FICO credit scores are down this year by 2 points, the most since 2009 during the Great Recession, and delinquencies are high for car loans, personal loans, credit cards. How concerned, if at all, are you about the health of consumer finances, and do you expect today's cut will help?
So, we're aware of that. I think default rates have been kind of ticking up, and we do watch that. They're not at a level, I don't believe they're at a level where overall they're terribly concerning, but it is something that we watch. Lower rates should support economic activity. I don't know that one rate cut will have, a visible effect on that, but over time, a strong economy with a strong labor market is what we're aiming for, and stable prices, so that should help.
Just to follow up, this rate cut is coming at a time when the stock market is at or near all-time highs, and some valuation metrics are elevated historically. Is there a risk that cutting rates could overheat financial markets, potentially fueling a bubble?
We're tightly focused on our goals, right? And our goals are maximum employment and price stability. And so we take the actions that we take with an eye on those goals. Separately, and that's why we did what we did today. Separately, we monitor financial stability very, very carefully. And, I would say it's a mixed picture, but households are in good shape, banks are in good shape. Overall, households are still in good shape in the aggregate. And I know that people at the lower end of the income spectrum are under pressure, obviously. But from a financial stability perspective, we monitor that picture. We don't have a view that there's a right or wrong level of asset prices for any particular financial asset, but we monitor the whole picture, really looking for structural vulnerabilities. And I would say those are not elevated right now.
Jean, we'll go to you for the last question.
Hi, Chair Powell.
Last
Jean
question,
Young
last
with
question.
MNI Market News. I wanted to ask about inflation expectations. You've said the Fed can't take the stability of inflation expectations for granted. You mentioned at the short run they've gone up a little bit. I wonder if you can talk a bit about that. And then also at the long run, I'm wondering, do you see evidence that the debate over Fed independence and the growing deficit is putting pressure on inflation expectations?
So as you said, shorter-term inflation expectations have tended to respond to near-term inflation. So if inflation goes up, inflation expectations will predict that it takes just a little while to get back down. Fortunately, throughout this period, longer-term inflation expectations both break even in the markets, and almost all of the longer-term surveys, Michigan being a bit of an outlier lately, have been just rock solid in terms of running at levels that are consistent with 2% inflation over time. So we don't take that for granted. We actually assume that our actions have a real effect on that, and that we need to continually show and also discuss our commitment to 2% inflation. And so you'll hear us doing that. But we're, as I mentioned, it's a difficult situation because we have risks that are both affecting the labor market and inflation. Those are our two goals, and so we have to balance those two. When they're both at risk, we have to balance them, and that's really what we're trying to do. Your latter part of your question was about independence. I don't see market participants. I don't see that that's something they're factoring in right now in terms of setting interest rates. Thanks very much.
Oh boy! Wow!
Oh.
Wow!
And as is fitting, we are 66.60 in the ES, so we are basically just where we were at 1 o'clock when they released the prepared remarks. Actually, it was 66.65, which we're going to hit right now. Wow. That's why I don't trade FOMC, man.
Where do we start? Where do we start, Jack? Let's go over some of the ranges, go over the prices. I don't get your thoughts on the wording and the language and just everything. That was absolutely incredible here on TopstepTV. Click subscribe, click like, click notify. You're not getting this anywhere else besides here. So let's take a look at this. NASDAQ, massive ranges in the last hour and 20 minutes. High of 24,540. Low of 24,242. We're talking 300 points there in the last hour. ES, massive range of about 80 points or so in the last hour. Low of 66.11. High of 66.86. Gold, $70 range. Yes, you heard that right. $70 range. Making new all-time highs right at the policy announcement, 37.44, and we bottomed out at 36.79 last trade, 36.93, about $17 off there, $14 off the lows there. Crude even saw some selling. The 10-year sold off rates went higher. Jack, wow, what a power hour we're going to have in store here. Thoughts? What's your take on what we just saw, what we just witnessed?
We mentioned the 10-year too, and that's kind of back. Right, here's 1 o'clock. We're back exactly where we were in the 10-year as well. Man. Both myself and the markets, it seemed, I could feel myself like throughout that.
Yeah.
Having moments of like, wow, this release is really bullish. And then
I know.
This is really bearish. And then, well, maybe it's nothing. And I think that's where we ended up, and that's why we haven't moved that much.
What heads up? NASDAQ closing in on session highs here. I am not kidding. NASDAQ's closing on session highs, about 15 points to go here. ES has about 13 points to go, but what a turnaround. What did the market jump on for the bullish side? What were the bulls? What do they jump on? The
bulls be jumping on
50 more basis points?
Yeah, 50 more basis points of cuts this year, some favorable dot plots for rates. The bears would be, he was saying some things that were not particularly flattering about the economy. Uh, I don't know. It was all a blur to me.
Jobs.
Jobs mainly. When he's talking
Yeah.
jobs.
Yes. Inflation sticky as well.
There were
But
no like 5-alarm fires that came out of it.
the market should look at this. The market, and then a lot happened there. It's going to take some time to digest. I'm sure the reopen is just going to be amazing as well. But right now, the Nasdaq is closing in on session highs. I'm not kidding. 24,533 session highs. 24,540 session highs. Yes, it was Bulls. Bulls on parade. Then the Bears stepped in, and these moves were one directional. Get on board. Don't trade. Yeah, the ladder is so thin. Here come the sellers now. This is absolutely amazing volatility, Jack. Wow.
Surprising to me, there's a number of, a lot of the AI-centric stocks dumped real hard in there and then have rebounded quite a bit. Maybe a lot of squeezing going on the move up there. Once again, back to 66, 65.
Incredible.
A lot going on. I think it's, there's low liquidity in these things, a lot of momentum bots, tape readers going to war right here. You could see as the moves were progressing, they were kind of accelerating, people trying to ride the momentum and get off before the crash. So I don't know. I guess where we stand now is the Fed and traders will have to look tomorrow to see if anything's changed with the Fed watch. We can look now, but things are just goofy.
Yeah.
The Fed seems to be in line with what traders were expecting. The 0-date options, I'm glad I didn't buy a straddle because unless he sold one leg on the way up, it was really seeking, as I mentioned, we bounced. If I were trading an event like this with like small size, is when things are in like free fall, I look for various options levels, and we did bounce right off. This right here is the 65.50, almost to the tick. Yeah.
Did that sound dovish?
Anyone out there know where it's going to move next?
Was it as dovish as the Fed funds is pricing in? Okay, so there's two more FOMC meetings, October 29th and December 10th. And Fed Watch is a little goofy right now with all the movement, but yeah, we are pricing. We just cut 25 basis points today, pricing in essentially 25 basis point cut end of October, and then December as well. Jack, you thought it was going to be a little too concentrated. It sounds like the markets are pricing that in right now. Nasdaq about to make highs. Jack, I'm trying to wrap my head around this one. New highs.
Someone asked
Nasdaq.
it too. It's just true. When they did the dot plots and stuff, they take they report the median. There was a pretty big dispersion on them. A lot of differing opinions, and I think maybe when people were getting bearish, and driving it down was the whole idea that wow, they don't have any idea what they're doing. These are super wide projections, and they're right that adding Myron. Because it is the median or whatever, and he was clearly the dot plot that was below for 2025, is that shifted down the median rates. So I don't know if he had a super compelling answer to talking about that. Yes, there are 17 members or whatever and 12 voters, but you can move the dot plot.
They did. Look at this move. Nasdaq just printed new highs on the session, 24,550. Here you go. You know what, Jack, we were talking about the 10-year, right? Follow the 10-year. 10-year prices go down, rates go up. 10-year prices go down. Equities, in theory, would go down, but that's not happening. We're seeing a little bit of recovery in the 10-year prices. We're seeing this push higher here. Look at this, Nasdaq. Can the ES follow suit? Trading 66.75, 9 points off the highs there. About 25 points off all-time highs. This is we got a good one. We got a absolute good one on our hands right now.
Trying to, he kept on saying the situation's unusual, which it is, and the Fed's tools really only allow them theoretically take on either the employment or the inflation.
Right.
That's been consistent because we really haven't dealt with inflation since the early 80s until the pandemic.
Right.
So freeform jazz.
What a job. Absolute. And then, I was thinking, after Powell concludes, Jack, typically it's like, well, let's reverse the move. But what move do you reverse or what do you unwind? Market's
Yeah,
confused
that's
as
a
well. I'm glad we're not the only ones, Jack. The market's a bit confused as well. Again, we dipped into 3% handle on the 10-year. For a brief moment, we were in the threes. What are we looking at now in the 10-year? Again, we were at 3.99% or so when we were talking about more rate cuts. Jack, do you have that yield up in front of
Yeah,
you
I
there?
could show. Yeah, here's the 10-year
Look at that.
yield. Big head fake there, and now we're kind of back. The yields are a little lower. I think people were getting a little nervous when it was at these highs here. They're still down quite a bit. If we go out to the the day time frame, we've come in quite a bit recently. Yeah, I'm trying to wrap my head around this. This is
a good one.
Unless I was trading something with like spreads that was kind of mean reverting right now. I don't know what could possibly happen right now that would make me confident enough to jump in on something.
Yeah, I'm trying to think. Well, look at it later. Now,
Although if we do over under, Dre, I'll say 66.62 for the ES.
now we can put that poll up above below. ES 66.60. We're up on the poll there. Oh, the closing price, Jack says, will be
66.62.
Oh, come on. I love it. 66.62 above below. ES last trade 66.65. One thing I think we could gather from it is there's going to be a lot. I mean, we're looking at that data very, very closely. Your inflation data, your jobs data, and I mean, if there's conflicting, that's what a job the Fed has right now. Where you're pricing in the rate cut at the end of October.
Peace Drum. I think you're right on that. Something happened, but nothing really happened. It's like, well, yeah. I mean, what happened was a lot of people made a lot of money and a lot of people lost a lot of money in that hour. That's for sure.
Oh, yeah.
But we are exactly back where we were to the tick. 66.65 right now. Yes.
Yep. Above below 66.62 on the close. All right, we got that has just blown my lower right-hand corner. We got the countdown clock, 27 minutes till the closing bell, 17 minutes till MOC. I know Dakota is waiting in the wings. Will be joining us here shortly. Poll is up. I'm going to say above. What a move. What absolute at one point, everything was red. I was looking at my charts here. Gold, crude, 10-year, equities, everything was red at one point. I want to take a look at crypto really quick. What Bitcoin do through all that? There he is. What is up, man? What's up?
Buy the dip. Buy that dip.
I mean, which time you got?
Which dip?
Yeah, which dip? Better than the last one. What's up, Dakota?
What'd I miss? It doesn't look like I missed a whole lot. We're trading at the same price I left you guys with.
We had a doozy, man. This was an all-timer. This was a good one. Dakota, thoughts? Slow market is going to be absolutely rocking and rolling tonight, 7:30 p.m. Central. Wait till Asia has to still react to this. Then Europe has to react to this. There's a lot more to come. This is not the end of it. Dakota, thoughts? How about this
one? As expected, right? And that's probably why we're unchanged.
Yeah.
Well, I mean, that's...
I don't want to oversimplify it, but isn't that
Gold
what it is?
Gold has a $70 range, Dakota. Gold has a $70.
I know. A little overreaction in both directions. Ultimately, as close to unchanged as we could get. I mean, we expected a quarter point. We got a quarter point. We're expecting another half throughout the rest of the year. Dot plot was as expected. Powell's speech wasn't too crazy. And just a whole lot of nothing. Violently unchanged.
I'm going to push back on that. Quite the opposite, as a whole lot of nothing. Dakota, if everything is expected, then where do we go from here in terms of trading? I mean, you see those charts. Do we just throw out the last hour and a half, essentially, and just get back to
in my view,
yeah.
I mean, it's as expected. We move on. We start looking forward towards inflation, more data. Move on to the next. It's
all right.
let's see how we react. We made the high and the low of the FOMC. So we have what? These 550s is the high. We have, these 242s as a low here in the NASDAQ. And maybe we just keep on marching higher. I'm not really surprised. I was hoping for a little bit more than this. Maybe something in the dot plot that came in unexpected. Maybe something in Powell's speech, but nothing too crazy, to be honest.
I mean, there was a little bit of divergence, I think, between where we thought the dot plot would be, and I feel like usually the traders, if you look at the Fed watch tool and stuff, like they're a little more aggressive. Like they try and lead the Fed a little bit. Like I don't know if I was expecting the 3 cuts to be actually the median projection for their dot
Correct.
plot.
That was not
But
expected.
these are smaller things in the scheme of everything. It does seem like a lot of the
We are now
We're
4.25, so we're going to be in the threes by the end of the year.
I think they keep it in a range because they can't keep it
Right.
exactly at something. So like right now, I think we're 4.25 to 4.5.
Yep.
Yeah. So the lower the range, the 4 to 4.25.
I mean, a lot of eyes going to be on all that data. I was with Jack. You were going to tell me we're going to do 3 consecutive rate cuts to close out the year. They're not going to wait and see what the effects are of the first one or the second one or the third one. We're just going to power this thing through.
Oh, they're only
We'll see how that
quarter
unfolds.
points.
Oh,
We
wow.
cut 75 basis points over 2 meetings. In September, we did September of last year, we did a half point cut and then a quarter point in December of last year. And looks like they're aiming to do the same thing at the end of this year.
Yeah. Has Donald Trump reacted on this?
That's a
Is
good question.
Because I don't think he would be too thrilled about this quarter point. That's going to be
No.
something interesting to seeing how he reacts. Will it affect this market? Maybe, maybe not.
He is in England, but by all means, he'll be awake. We can take down that poll. 62% are saying above. 66, 62. 66, 62. Do you remember
You're locked
July?
out for the day, Dakota, right?
Correct. Yeah, I'm done for the day. Okay. Done for the day in the Topstep account. I put some cash to work earlier, but I'm going to wait. It's Wednesday. We still have tonight's price action. Slow markets. Jay's going to be joining me, and then all day tomorrow and all day the next day. So it's only week's only halfway through.
No, 3/5, man. Don't lay that on me.
3/5. What do we have for data? What else do we have for data for the rest of the week? Nothing. We have some. All right. Do we need to take a close look at initial jobs on Thursdays, Jack, or continuing jobless claim? Do we need to start taking a closer look at this? There's going to be more emphasis and more, focus on these weekly numbers, right? They come out every week. So, okay.
Jobless claims is going to be big going forward.
7:30 a.m. Central Time. Tune in opening call. That's going to be a big one. Be a big one indeed. What do we have on Friday? All right, Fridays. For now, coast is clear on that. But yeah, we had a doozy. Expected 25 basis point cut with a one dissenter, Myron, coming in and spiking the punch bowl, maybe trying to get 50 points in there.
Yeah, you think so?
Well, there was only
maybe.
Actually the dissents were like less a story. Like I thought maybe there would be 3 dissents. That was a little bit interesting.
Yeah.
Bowman and Waller were on board.
A lot changed.
Yeah.
A lot has changed there. For right now, we are 3 rate cuts, 3 25 basis point rate cuts in 3 consecutive meetings, FOMC meetings. I remember after the July FOMC meeting, Powell took the podium. He walked back to a rate cut for today. He walked it back significantly. Came out very, very hawkish.
Yeah.
Very, very hawkish. And obviously that changed. There was, 2-3 months in between July and now. A lot had changed. So a lot can change between now and October 29th. So about 6 weeks from now, we'll have the next FOMC. Come check it out here at Topstep TV. Again, wall-to-wall covers. We got Dakota in the house, star of Slow Markets. Make sure you tune in this evening, 7:30 p.m. Central Time. Who's joining you today on Slow Markets, Dakota?
Myself and Coach Jay. Yeah, we'll see how the Asian market, the slow market, reacts to this. It's going to be interesting, especially gold, right? Gold is a big mover during slow markets. We've seen that big range here today, and that was probably the more impressive move out of the rest, was the fact that we popped up to these 740s and sold off all the way down to these 680s. It's going to be interesting to see if we get a further pullback in gold. That we've been kind of waiting for it. I know Coach Jay and I and Hoop as well was talking about how we could keep seeing this bullish market keep going, but needing a pullback, which is healthy. Pullbacks are very healthy for this market. And yeah, it's going to be interesting. Not a very clear direction. Tomorrow is a little more, I guess, muddy than what I was hoping it was going to be.
I think we need an evening to digest this.
100%. 100%. I have to go back and read that, go through the language, go how he answered those questions. Again, right off that announcement, gold popped, new all-time highs, 37.44. There was a huge tape on that hit, wiped out all the bids to the downside. Then we came right back up to the 37.20s or so. Then it's just started a little bit more, bearish on the economy, if you will, labor market. We saw gold start pumping lower. And this was a good one. Jack, I'm going to lean on you. You don't want to digest this better than anyone. Where do we go from here?
Yeah.
All-time highs again? We got the runway's clear for all-time highs. I would think in equities, it's not financial advice, but, we're going to prime the pump with those rate cuts.
He says it's a
we waxed all the
management.
options, that's for sure.
We cleared out the book. We cleared it all out, man. That was incredible.
I'm going through some of these notes. Was that one of the big words or the big statements? We view this as a risk management cut.
That's what I've seen. I've been looking.
What does he mean? What does that mean? Risks to what? Jobs?
Risk to probably the labor market cooling off too quick, maybe?
Yeah. Again, that meant something, obviously. There's obviously messaging into that direct statement. It's going to take a minute. There are some Fed whispers out there. I wouldn't be surprised if Goolsby hits CNBC tomorrow, right? Till we see, or maybe even after the bell today. I'm not kidding. You'll see Goolsby, other Kashkari will come out there and they'll try to massage the message a little bit, but we'll be a little bit more clear as to what was said, what the answers were. So definitely at the buzzer, after power hour, and definitely slow markets. We'll see what Asia's reaction is. Then we got the London Open with Aaron trades. See what Europe's reaction is as well. There's a lot more to come this week. We are just in the middle. This is going to be an incredible week here on Topstep TV. Well, with that being said, let's see who went 12 rounds with the market today. We love the comeback stories.
Ooh.
Who put their boxing gloves on today? Go to Gabe if he's ready. Gabe, come on, nail that jab.
Yeah, let's do it, Trey. We got a big day today, actually. There's a few submissions, more than I typically see. So shout out to all those traders sharing their experience with us in chat. We got Toboski up 515 for the day. You guys make me more and more consistent. Love you all. Shout out to Toboski. Carlos was down 200 and stayed patient to my setup. Now I am green. Good patience there, Carlos. Glad to hear. We got Rich up 178 and P&L locked out for the day. Love the base hits, Rich. Congrats. Alex up 3K. Locked myself out for the first time ever. Progress and a great feature. Shout out to Alex for using that lockout feature for the first time. We got Let's Get Cookin' was down 1,200, now up 370. What a solid climb back today. Nice jab there. Let's Get Cookin'. We got Shep's new hip. Good day. Trading the ranges up $90 in the XFA today. Thanks, coaches. Shout out to Shep's. Nice little base hit on the day. We got Little Design. Took 315 off a scalp on the open. Locked it out. Now just here to learn and watch. Thanks for sticking around, Little Design, and keeping us posted on your day. And last but not least, we got Cato. Was down 1,000, back up to about 568. Great jabs there, Cato. And for those that we missed, we see you, we appreciate you, and we'll see you back for Jab, Jab, Jab tomorrow. Back to you, Dre.
Man, thanks.
work.
Good stuff, Gabe. Well
Great
done,
work.
everybody. Yep, absolutely.
Yeah.
Right.
Oh, we got MOC in 5 minutes.
I know. What's this one going to look like? Who would put an MOC order in after? Who would put an MOC order in on FOMC day? We'll find out. Who would put, again, market on close, right? These orders are specifically to be executed on the close of this trading session. So they could have been put in 5 minutes after the opening bell. Said, like, do you execute this trade? Either buy $1 million or sell it. It's gonna be in dollars. And I cannot wait to see what if this one's just a big ass number. We'll find out. What a day. Yeah, can you see what are the yields? Can you take a look at your chart? Do you see what the yields were? The range on yields? I don't want to put you on the spot. What the range in yields and the 10-year stars if possible.
Yeah.
Okay, I'll give you a second there. Last trade in Crude. Crude saw some selling as well. Again, one point on the board, it was red everywhere. NASDAQ, ES, 10-year prices were down.
At the bottom,
prices were
there's
down.
about an 8 bip range in the 10-year. Let's see what the 2-year did. Back to where it was. Man, got like a 10, 11 bip range in the 2-year. The bonds really had that initial move, then kind of came back to where they were.
Okay.
Kind of mute is what it's sounding like. I like this quote. It says, the labor market is softening, and we don't need it to soften anymore, and we don't want it to.
It's got to be risk management.
Risk management. I think this is going to put a magnifying glass on the labor market numbers coming out, and then again
tomorrow
CPI. Yeah.
Well, first one tomorrow. Initial jobless claims. 7:30 a.m. Central Time. Yep.
We might see more volatility on those numbers.
Think so. I absolutely think so. We got a big one. What do we have? We got MOC in 2.5 minutes.
Yeah, we do.
This is gonna be amazing.
What do you guys have as the over under or the
66,
line in the sand?
66, 62.
Hey,
we are trading
right now.
there.
Okay.
What do you think, Dakota? Above or
I
below?
like it. I'm gonna take the below.
Okay.
But I that's a good line. That's a good number. NASDAQ's trading right here at these 24,500.
Say you needed a third option on the above below. You need at.
Bullseye. You nailed it.
Bullseye. Within a tick or two. What's the VIX at? Anybody have eyes on the VIX?
Nothing.
What is the VIX trade?
VIX
What is the
is
VIX do?
at 1590.
Really? What did it get up to?
I bet it didn't even. Well, you can't. I'd have to look at the. It got up into the high 16s. That's still not much.
Wow.
It was just like
you were saying
massive
it,
option
Jack.
hedging.
Yeah, you were saying it, Jack, yesterday morning. You're like, man, it's only pricing in like a 0.6 or 0.8% move. And yeah, we got about that.
Yeah, well, but also those will expire worthless if you held on to them. I mean,
yeah,
what if you forget it? Now you did have the ability. This might be the dynamic that happened if people had a lot of long straddles or whatever else riding that. Is that on the initial move you sell the one end of it. I think we got down into here. Let me show this chart instead. Is like we got kind of probably into a negative gamma zone here and illiquid market, probably tons of 0-date options on this, lots of hedging as we go down. The further it goes down, the more they have to sell.
And with options expiring Friday too, it's big expiration.
Orderly, yeah, big expiration.
Oh yeah, we got that too. My goodness, 15 seconds.
Yeah.
Oh my gosh, it just never stops.
We're not done.
Who's having fun today? Who's having fun today? This is why trading is the shit, because we do that. We get to do this
MOC.
day out. 5 seconds MOC. Starting with ES. Let's get ready to rock.
Huh? Initial spike higher.
Nah, light. S&P buy side 800 mil, Nasdaq buy side 460. Dow essentially
Play.
scratch.
They slapped that down pretty quick.
I mean,
What
it's
we
still
do
pretty
the-
volatile. That was 20 points.
Yeah.
25
Is it really?
points. Yeah, on the NASDAQ. Yeah, that's a little jaded
Again, those
after
numbers-
FOMC.
Yeah, I mean, who's putting an MLC order in on this day like today? Though again, those numbers can and will change, right? There is still time. 55 after, we will see another injection of liquidity. And those numbers came in light buy side. ES 800 mil buy side, Nasdaq 500 mil buy side, Dow essentially 0. We'll see how that plays out. Okay, let's everyone take a collective breath. That has been an incredible last hour and 50 minutes. Again, in fast markets and power hour, we asked you to hit us at TopstepTV on the X using the hashtag Power Hour. Andrea goes over those, rates them, and says, this is what we're going to bring to air. So, Andrea, what do we decide to bring to air today?
Oh, we got some fun ones today. Starting with, we got Ish Trader saying, got a few profits on my XFA and payout today.
Oh.
Very nice.
Sick.
Next, we got Cyrus saying, took my first trade on the Dow and it was a good one.
Nice.
Cool.
There's the Dow trader.
Then we got this one saying it's been a crazy ride so far. Hashtag FOMC.
You ain't kidding.
Nice. Next, got Jacob saying, payout requested yesterday, funds sent today. Don't get much better than this. Lightning speed.
Nice.
And then finally, got this one. NVIDIA took the market down with it after China news.
What did I miss? What did I miss?
On the screen.
No, the NVIDIA news.
That's it.
Oh, it was overnight. China said they don't want to allow their companies to use NVIDIA chips.
Yeah.
Obviously, there's more to that story because, as I mentioned, China accounts for like 13% of NVIDIA's revenue. And one would think if that, 13% of your revenue is just cut off, especially with like the future growth of that geography, that you would be down a little bit more than, say, 2.6%.
Gotcha.
Tesla now turned green. Wow.
Did it. Okay.
Apes are strong today.
Apes are strong. Still, MOC numbers have not changed too much. We are seeing a little bit of selling here in the NASDAQ. Yes, down ticking just a bit. 66.59 trades. Again, above below. Jack has it.
Yeah.
66.62.
We can still see it.
Step in and buy it on principle. I think so.
62. Even?
Yeah.
62 even, but within a point, you guys should give me a credit. Within a point.
Okay. Give you credit. I'll give you the
Give you a
credit.
credit.
Yeah.
Oh, yeah.
Pay attention for speakers to come out after on the Asian session. Just keep an eye out for that. If not tomorrow, maybe before the jobs numbers come out. Yeah, they're going to be strategic about how they come on. Typically, they'll dial up Leisman. We need to get on CNBC. We need to get the message out there. Kashkari and Goolsby. Well, Jack, we never got the cameras behind the scenes, did we? That was a
no. I don't know what the hell Goolsby was talking about.
Ask him
write
that,
him a
Leisman.
letter.
Leisman, ask him that. What happened to the cameras? All right, 45 seconds.
This 62 is
he's gonna nail it.
Looking pretty good.
He's gonna nail it. Same MOC numbers have not changed. 800 mil buy side ES Nasdaq, 700 mil buy side Dow, 23 million buy side. Pretty light.
I think, especially today when things are flying around like this, is it might be pretty easy for the markets to drift towards that 66, 62, which I picked that number because that's the equivalent of 6,600 even in the SPX.
Buy side going a little bit ES. Buy side up to a bill.
Oh, is that so?
There you go. Little pop. Little pop ES, little pop NASDAQ.
There,
Gold.
there it goes.
Gold's going to rest at 36.94. 36.94 last trade in gold. Yeah, we made all-time highs at 1 p.m. Central. Just to see a $70 sell-off from there. We're about,
Vicious.
Yeah, it was amazing. Well, I want to go back to time of sales. I'll go to home. I'll go time of sales on that huge sell-off. See, look at that wick on the 5-minute. You don't see wicks like that on the 5-minute.
In gold?
Yeah, pull up the 5-minute. Look at 1 p.m. Or was it noon by you? Look at the 5-minute gold.
Yeah, yeah.
Look at that wick down to 36.85.
Dang.
Yeah.
The volume, yeah. I'm curious the volume traded on that one. Wow.
Yeah, we kissed all-time highs, and then they just smoked that thing.
Yeah, look at the 100 tick chart too. That was just Gap City.
Yeah, there was all the ladders were absolutely vaporized. Oh, and SEP expires on Friday as well. Yeah, just a lot of expiration.
All right, let's see this 62s come into play.
All eyes on Jack's call here.
Yeah, I got to see this 62 come in.
So we got left.
Yep.
We're so close.
30.
All eyes on buy side growing. ES up to 1.8 bill. Nasdaq's almost a bill buy side.
That ain't nothing.
Here we go.
Yeah, volatility's still up there.
Again, we're selling off on that. Again, initial jobless claims tomorrow, 7:30 a.m. Central. Make sure you stay tuned into opening call. There is going to be a heightened emphasis on pretty much all the jobs reports, inflation data from now until October 29th. Another 6 weeks of this madness. I freaking love this stuff. This is incredible. More uncertainty, man. More uncertainty.
Summer season is officially over?
Later
Can we
summer.
say that?
Yep. Yeah.
Into the fall, into the holidays, and increased volatility, maybe.
We're gonna ramp this sucker up, man. This is just gonna be absolute bananas. This is why we do it. There we go. Kelvin said, "Who ordered the volatility today?" Mr. Powell. Mr. Powell. I don't know. I mean,
Whoever created the central bank and its 6-week meeting schedule.
There you go. There you go. Another 6 weeks of this is gonna be fantastic. 2.5 minutes. Let's take a look at the. All right, Jack. All eyes on if Jack's gonna get the bullseye.
We can still get there.
Buy side still growing here. We're up to 2 bill. 2 bill buy side ES. 1.3 bill buy side NASDAQ. Late buy side coming in here. Still growing. Still growing.
Pocket of folks selling. We'll see. Still growing.
Paring back a little bit.
We get there fast.
Yeah, no, it could honestly, because it just needs to be there at 3 p.m. It could do it all in the last 3 seconds and just teleport up there.
100%. What an absolute day. What an absolute amazing day. Let's see here. What do we trade here? 66.56 last trade ES. 24,462 last trade in the NASDAQ.
Trying to get up there.
36.94. $50 off the all-time highs printed an hour and a half ago. And crude oil, $63.93. We'll tune in at the buzzer with Paul and Jay. This is a good one, man. This was a fun.
Yeah.
Yeah. Jack,
1 minute.
Yep, here we go.
Yep.
We get to buy side. Yeah.
50 seconds.
Yeah, let me see how thin it is on the NASDAQ. You guys watch that.
Selling pressure here.
Oh, what's down here? 250 lot down below.
There's going to be a war going on.
Okay.
Come on, get up there.
All right.
30 seconds. 35 seconds. Got to use the whole time.
Trader Dog says, one of the better days of trading. As always, it was fun with you guys. Top Step. See y'all in the AM Top Step gang. Damn right. All the bellers. We know you'll be there tomorrow. But right now, 25 seconds. Can we get to Jack's number of 66.62?
Okay, come on. Do it. Do the teleport. Here we go.
Oh, we're going for it.
Look at this.
10 seconds.
Can we nail it? Can we nail it?
Can we nail it?
Ooh, pop it.
A little more.
Ooh, 5 seconds. Hit it. That's a win, man.
No way. No way.
Nail.
That's a win. Wow.
Full time in sales. Pull up time.
He's
Jack.
gone. He's out of here.
He's out here. Look at that. Oh my God. He's going to climb the mountain, folks. He is going to summit that
62
mountain.
on the
We'll
nose.
check back in with him tomorrow, see if indeed he is the top of that mountain. With that being said, shout out to all the Bellers.
Wow.
Thanks for coming on. This was an incredible day. Jack nailed the bullseye. Stay tuned for At the Buzzer. With that being said, let's go to my main man, James Harden. James, take us out of here and into At the Buzzer. Let's go.
Well, Jack may be gone, but that doesn't mean you should go anywhere. At the Buzzer's coming up right after this with Coach Jay and Coach Paul. So don't let the disappearance of one of your favorite TV personalities scare you. Coach Jay will be coming up really soon, so don't go anywhere. Then later tonight, you heard it here, but Coach Dakota is going to be back at 7:30 with Slow Markets. Tonight, Coach Jay will join Coach Dakota on Slow Markets. Catch two of your favorite TopstepTV coaches right here on our YouTube channel at 7:30 p.m. tonight. Then later tomorrow at 1:30 a.m. Central Time, Aaron Trades is going to be hosting London Open. 3:30 a.m., Deanna will be here with Euro Trade. And then you know it, we're going to be right back here in the morning at 7:15 for another day of bell-to-bell TopstepTV action. We got a bunch of numbers coming out at 7:30 tomorrow morning. U.S. initial jobless claims, continued jobless claims, the Philly Fed Business Index. So there's only one place you should be, and that's right here at Opening Call. But for now, stay tuned. At the Buzzer's up next. I'm James Harden. You've been the chat. This has been an FOMC day at TopstepTV. Let's go.
Why Topstep? Because traders shouldn't have to risk everything to participate in the markets. And since 2012, we've provided capital to over 10,000 futures traders just like you. From the pits in Chicago to screens in over 143 countries, we've been motivated by one simple idea. We don't care who you are or where you learn to trade. If you pass Topstep's trading evaluation, you'll be invited to trade with our capital in a fully funded account. As a Topstep funded trader, you keep 90% of profits and we take the losses. We also offer educational resources for all levels, live classes, and free group coaching from a team with over a century of professional trading experience. We're invested in your success. So what are you waiting for? Ditch the brokerage account, start learning by doing, and become a Topstep funded trader today.